Okay, so welcome to, I guess, the Forex family. I'm glad everybody was able to make it out this morning, this afternoon, or this evening, depending on where you are. My name is Ted, so you guys know me online, various, I guess I would say, pseudonyms under social media. So now you get to talk to me today, and we're going to go through a lot of things regarding Forex. I think there's going to be a lot of questions answered. A couple of things before we begin. If you do have questions, definitely pop them in the question box. I'll answer them as we go. If there are questions that are going to be answered throughout the webinar, I will just let you know that we're going to hold off on those questions because I'll probably get through them. I will normally repeat or read out the question and then answer it, so you'll have an opportunity to hear the question from whoever typed it. And at the same time, once again, this is recorded. You'll have access to this as soon as it renders. It usually takes about a day to get this thing going just because of the size of it. But other than that, we should be good. So let me just check. We have a whole bunch of questions. Uh, yeah. So there's a couple of questions for the length. It's about 9 hours. I would say 7 to 9 hours. It just depends on sort of how we flow. Each topic that I do is about an hour long. Then we take like a 10 or 15-minute break. After topic 2, I think we break for about 20 minutes because that's like dinner or lunchtime for most people. So we'll do that. But yeah, it runs about 7 to 9 hours. It's sort of what we do. A lot of the stuff, because I've done this a lot now, and I sort of know what I'm doing. I'll go through multiple things, but at the same time too, a lot of it's off the cuff, and it's not necessarily, I wouldn't say prepared, but it's not something I have written down. So there might be questions that lead on to other questions and other topics, so it's good to address those as well. Okay, so who am I? Uh, I'm 37 years old. Uh, been trading Forex now since I would say November, December 2015. Really had a breakout towards the middle of last year. Started working with Forex. Had a couple of good runs with it. I was able to run my account up. I basically took 2,500, ran it up to about 250,000, withdrew 125,000. Then I lost about 100,000, and then I had to build my account back up from 10,000. And then basically from that point on, I was good to go. I mean, as things have progressed now, you'll find that we have over 300 people in the Forex family, and we have multiple mentors now. Most of the mentors that are mentoring in the Forex family are multi-million-dollar traders, so they've done really well for themselves as well. They're also a lot younger than I am. My background, I have a finance and law degree, so I found that it helped in that respect, just to have a basis of what's happening. But at the same time, too, I also played a lot of poker, and that also helped with sort of risk management and understanding gambling. So I've been, gambling since I was 18, 19 years old, played a lot of poker, been successful at it as well. So I found that that also helped in terms of understanding risk management. More importantly, understanding the fact that Forex, like poker, is a long-term thing. It's not something that's going to be get rich. You're not going to get rich quick with it. It's going to be a struggle. It's going to be painful. It's going to test you emotionally and mentally, and it also tests your patience. It tests a lot of qualities that I think people underestimate about themselves. And I think we'll go through that in the webinar here today. But the really big thing is, and what I stress, and this is a topic that we talk about here today, is really the mental aspect. And I think that comes with maturity, it comes with life experiences. So I find the people that excel the most here are the people that are the most realistic with themselves. I read a lot of books about trading Forex. We have them available. You'll have access to them as well. So, I mean, they were guides. But I also tell people, too, don't read 100 books. You'll find that a lot of books have the same information. But what you're looking to do is take little pieces of that information and putting it together for your puzzle. I find some books help others, and then they don't help someone else. So one person may say this is the greatest book, the other person may say they hated the book. So there's a lot of information there as well. Um, Yeah, so okay, so just a few things here. If you want to ask questions, just type them in there. I see all the questions, so they come to me and I'll read them out. So people that are asking, if you just type in the question area, you'll be able to see all that. So I do see everything here, and I'm able to answer questions in that little box there. So when you type it at the bottom, you're able to do that. So if you have questions, just type it in that box. You don't talk to everybody else, you talk to me directly. So I'll facilitate that. Okay, so I guess the next thing is, why are you here? That's the question I ask by everybody. Oh yeah, my microphone might just move the way it is just because it's close to where I'm talking. I'm talking on a headset. Um, why do I go by Uncle Ted? My brother has two nieces, so I am an uncle actually, so that's why I do that. And my voice isn't the greatest today either, so there might be that issue too. Okay, so why are you here? I think that's a question that everybody sort of answers themselves when they show up to this. I think the main reason is everybody wants to make money. I think that's important that you do have that idea that there is a possibility for you to make money. Forex is very very lucrative, and there is an opportunity for you to make money. I've seen people make lots of money. I've seen people lose money. We have people that have come into the groups that have made money within months, and they've made 6 figures, 7 figures. I have people that have been here since my first webinar that are still struggling. It's one of those things, and it's not anybody's fault. And this is the thing too. When I see people, say, I blew accounts, or I'm not getting it. It's one of those things. Everyone learns differently. So you're here. You're taking the first step. I don't like to be a motivational speaker, but you've set yourself up and you've shown up here today. I mean, whether you're going to be here for the whole webinar, whether you're going to be here for, part of it, you're watching the recording afterwards, but it is important that you did make this, essentially first step. But the idea is, you've seen my results, you've seen other people in the group's results, so, you've decided, hey, I want to give these guys a shot, and I think that there's an opportunity for me to somewhat make money, I guess, and somewhat be successful, but also maybe change your outlook on things. I know this has changed my outlook on a lot of things. It's been able to help me, help other people. People always ask me, why I do what I do. There's selfish reasons. I do own a private equity firm now that, the Forex family knows about, and now you guys are part of that family, so you guys know about it as well. We bring traders up. So, as you get more comfortable as a trader, we open an opportunity to you to come trade for the firm. Take part in that when you're good enough. And, there's obviously some requirements and some things that you have to complete. But if you are good enough and that's what something interests you, we open the door for you, and we welcome you with open arms. So, I mean, that's really the reason behind why I do what I do is maybe a little bit of a control freak, but it allows me then to bring other people that I know that are comfortable into a bigger arena, the next level. And it's funny because people always ask me, why do I have to do this webinar before I join the groups? And I do this because it's a process. It allows you to get like a full download of what we're doing here, and a lot of aspects of what's happening. But more importantly, it makes me know, it allows me to keep people in check. So there's checkpoints. So after this, we're going to place everybody in groups. I'm going to bring in, all our experienced traders into those groups so that, there's all fresh people there, but then you have people that are able to help you when you have questions along with myself. So, there's 24-hour, I guess I would say, surveillance in the groups. If you have questions, comments, concerns, you can reach out to me, you can reach out to anybody else. We're here to make sure that you're comfortable And when I say we, I mean I treat everybody equal. I like to, if there are traders here, that will help you that aren't receiving monetary gain. They realize, and this is something you guys will realize too, as you start getting better as a trader, when you start talking about trading, when you're in trading all the time and you're constantly talking strategy or you're talking charts or whatever you're doing, you're going to find that that will propel your knowledge and it'll just reinforce things. So you'll find that you'll end up helping people just because it's helping you in the end. And you're not going to need monetary compensation for it, or maybe you will. I tell people all the time, if you're interested in mentoring after this and you're comfortable and you have a track record and you're able to do things, I mean, there's more than enough people that want mentoring. I mean, I get hundreds of messages a day of people wanting mentoring, and it's more than you have more than an opportunity to go do that as well. So I mean, there's lots of opportunities, other than just trading. So you'll have an opportunity to do all that. And like I said, I support everybody that do take on their own students that do mentorship that want to do other things. Um, okay, so there are some questions. Um, I have no apps. I have no experience in gambling. Will this be to my detriment? No. I'm here. I leave Monday 9 to 5. Yeah. Okay. The recorded webinar will be in our vault. Okay. So there you go. All right. So we're going to go through the objectives. We're going to talk a little bit about what's going to happen here and why we're all here together. Essentially, the objectives of this course, I mean, it's very simple. What I'm trying to do is I'm going to give you education. I don't promise anything, and this is the biggest thing that I stress to everybody is, a lot of people say that the value of what I give is worth more than $400 or $500. And, from my standpoint and me being cocky, and you'll get to know me, my personality, I agree. People say, why don't you train people one-on-one? You can't afford me. My time is too valuable. And I don't mean that as an ego thing. I mean that as essentially you're going to start asking me questions that if we work together in a collective group, you're going to get them a lot faster than sitting with me one-on-one. Because what the groups allow you to do is to bounce ideas off multiple people. So, I might have one interpretation of a chart or what's happening, but you may find that there's three other people with three different opinions that I didn't even see. And that happens a lot. And I think when you look at one-on-one, and people always want that private one-on-one because they think they're going to get more information, you'll find that working as a group, you also get that. It's really dependent on what group you're working in. And I think that's where people get scared is, they look at a group and they're like, well, people aren't going to participate. Well, it's to your advantage to participate because what you're doing is you're allowing yourself to share knowledge, but everyone else is sharing knowledge. Whether it's a stupid question, a smart question, whether it's a question that's been answered before, we promote that. We promote just ask questions. That's the best thing you can do as a trader is ask why. But, there's also resources. I mean, we have, you'll see towards the end, I'll show you, we have a Google Drive with over 15 gigs of information. There's articles I've written, there's strategies other members have contributed. There is so much information there. I always joke and say, if you can't become successful after looking through that vault and taking it upon yourself to read and learn things, you're not cut out to do Forex because there is so many things in there. We have top traders that have done simulations that, we have a simulator there that you can actually do real-time trades on charts from like previous years or, previous times. So you can test your strategies. We have people that have actually gone through and actually done live trading. So there's a lot of information there. And I think, as one of your objectives is to grasp that information, but really dissect it and figure out really what you want to do at the end of the day. It's very, very important that way. Um, my mic keeps chipping in and out. It just might be where I'm sitting. You'll have access to the vault as soon as we finish today. I'll be sending out the link to everybody. Is Forex trading like gambling? I would say it's controlled gambling. the Facebook groups, like I said, I'll send everybody a link and we'll be able to do that, and you'll get access to all that as soon as we're done today. So like I said, it's a process. I do everything all systematically, so don't worry, no one will get left behind. Okay, so here's our agenda for today. So topic one, pretty straightforward. We're going to do an introduction into Forex. Then we'll take a break. Then what we're going to do is we're going to talk about the mindset for trading. Then we'll take our meal break. We'll go through technical analysis and charting. We'll go through real life examples that I've done. That's actually pretty interesting. It gives you a chance to figure out where you're at really at that point. We have some guest speakers, so I usually bring on previous traders that have done previous webinars and they'll talk about their experiences. We have special guests, Dave and Wes, who are from Mastermind FX, good friends of mine. They actually talk about institutional trading and how we battle the markets and the banks, essentially. Topic 7, are you ready to trade? We go through, building a trading plan, setting up your strategy, what you want to do, and how you're going to about doing it. Then we have another question and answer, which will be sort of a wrap up, and then I give the next steps. So there's a question here, why did I choose Forex as your career? Well, it's a freedom. It allows you to do what you want to do, and I mean, it's very lucrative too. Okay, so topic 1, intro to Forex. Oh, sorry. And why do you want to trade Forex? So I think trading Forex is different than trading, like I would say, a stock or a commodity, in the sense that you have, an opportunity to, I guess, what's the word? Dial in exactly what you want to do. So a lot of people say to me, why are you successful? I think the one of the big keys to success here is dialing in your trading plan and doing the same thing over and over again. And with the Forex markets, they're very predictable. And I don't mean it, that you're going to be able to pick the lottery numbers every week. But what I mean is a lot of times you'll see the same patterns over and over again. They might not be exact, but they might be close enough to what you've seen to see that you can make the same trade over and over again, whether it's a buy position or a sell position. But working with the same currency pairs, things seem to happen at the same times. There's movements at specific periods during the day, so you can capitalize on those things. And as you get better with trading and as you have more experience in front of the charts, you'll find that you'll start to see this and you'll have those aha moments where people say to me, like, when did you realize that this was great? Or, how did you become so consistent? It's really putting the time in front of the charts and understanding what's happening with the charts. I will be going over all these patterns and all these trends and all these little things. We'll talk about all that. It'll be all in here. And also, once again, if I don't touch on this specifically in the webinar, in the chat groups, you'll get, daily analysis, daily, I would say daily charts. People post charts all the time. We talk about, certain time zones, certain time periods. So there's a lot of things that get covered every day. So like, this is just the base. I give you a nice base, but then after that, we're going full steam ahead with a lot more information in the chat rooms. And as you get more comfortable, it gets even deeper and even more detailed. People mentioned and have recommended Baby Pip's online school. If I have not read that in full yet, will I still be able to understand the seminar? Yes, you will. You will be able to understand it. I go through the basics all the way to the more advanced. Okay, so do some quick talk about what is Forex. So essentially, what is Forex? The foreign exchange market, once again, often referred to Forex, FX, or currency markets. Basically where money is exchanged. It's the largest market in the world. If you look at the New York Stock Exchange, it turns over about $80 billion US a day. The FX market turns over about 5 trillion. Now, it's funny, and people know me as somebody who's, against multi-level marketing or network marketing for Forex. They talk about $5 trillion as in that's what you're available to trade. That's a bit of a stretch, and the reason why I say that is if you go to like your local 7-Eleven or if you're going to the mall to buy something, you're taking part in Forex. But as a trader, trader, you don't have access to that money. It's really, it's a $5 trillion industry in the fact that people are constantly moving money, but you don't have access to $5 trillion. So when you hear people talk about, this $5 trillion a day market, you're not trading in $5 trillion. There's probably a good 3 or 4 trillion, but I mean, I wouldn't say there's 5 trillion or $6 trillion you have access to. Really, at the end of the day, it is a market that is a lot bigger than the stock market. It has more liquidity, more volatility, and I mean, it's open essentially 24 hours a day from Sunday at 5 p.m. Eastern all the way till Friday at 5 p.m. Eastern. So you have that opportunity to trade. So there is a lot more opportunity than, say, the regular stock market that's open during business hours, so to speak. Okay, give me a second, guys. I am just going to add somebody into the group. Sorry about that. I just added somebody. Once again, we always have late people showing up into the webinar, so I try and keep going in. The mic keeps cutting off words in the middle of sentences, just a heads up. That is really weird. I hope it doesn't continue. It just might be just the way that the mic is set up and also the way I talk too. Do I trade Fridays? Not necessarily. Okay. Okay, well, I think I'm getting full audio on mine, so it may be just sometimes the connection for the webinar as well, but this records really well too, so it'll be okay. You won't be able to see other people's questions. I'll read them out like I said earlier. And like I said, the mic is running fine because I can see it on my end over here. I got full volume. So it just might be sometimes the connection over the webinar, just the amount of people, things like that. So bear in mind, I'll try and keep going. With practice and chart time, is it reasonable to say one can double an account of any size within 1 month of trading? That is subjective. So here are some questions I guess I'll go through really quickly because people ask these questions is, how much money can I make in Forex? You can make as much as you want. You can also lose as much as you want. It's really going to be subjective to your own learning, to what you're doing and to how you're doing it, and really setting up your plan. So, I mean, as we go through a little bit further, we'll talk about that, but it's, I have a lot of plans in the Google Drive. We have a lot of documentation, how to build a plan, how to stay on track, things like that. So we're good that way. Okay. Okay, so let's talk about quickly through some terminology. Like I said, these are things that are straightforward in terms of what we're doing, things you're going to be working with. So I guess the first one is a lot. So when you look at people's trades, as we start to go through things, your lot is the contract size that you're trading. So your lot could be essentially, it's 1,000 units of currency. So when you look at somebody has like what people look at as like a dollar lot, it's technically not a dollar. It's basically one lot, but it's grouped as 1.00. You have like 0.05 lots, 0.1 lots. It's not actually, the specific dollar value, even though it's multiplied that way. It's that the actual correct terminology around it is essentially a dollar is one lot or 10 lots or 100 lots. It's not like $100 lot. People tend to say that they skew a little bit of the terminology, but I'm not going to go through technicalities. If you call it a dollar lot and you're comfortable with that, we all understand what you're talking about. It's not that big of a deal. Um, yes, I will be covering how certain currencies correlate. We will be doing that. So once again, going back, your spread, once again, that's the difference between your bid and your ask price. What you're looking at on your spreads, they tend to change with each broker, and the spreads change based on liquidity, based on who the broker is, based on the time you're trading. So you'll notice, and this is what I tell a lot of people, is you want to trade pairs that are with the most volatility or the most liquidity at that specific time. So you're not looking to trade a Australian currency during the mid afternoon. So you're not going to trade like an Australian pound currency during the North American session, right? Because people in those countries aren't awake, so there's not a lot of activity going on there. What you'll find is you may want to trade your US pairs within the US time frame, your pound pairs within the Euro or London exchange, and then your Asian pairs during the Asian time frame. Obviously, US pairs are probably your strongest, so you have your 6 major pairs, but that's where your spread will come in. If you're trading an exotic pair like New Zealand currency or a Russian currency, your spread's going to be a lot larger. So that means you're going to have a lot more of a price movement for you to be profitable. So you're always looking to trade pairs that have low spreads, that are during those specific time frames, and that you're able to be profitable with. You don't want to jump around currencies just because you see a setup. There's a lot of factors that depend on that. Uh, Okay, so essentially that's what we're going to do. There's a few questions about talking about institutions. We're going to be talking about all that. We're going to talk about all the different pairs, and all the other information as well. I have all that information on when to trade a certain pair at what time and how to do it. It's all going to be presented to you, so don't worry. We're going to have all that. Let's go through just determination. And once again, you're not able to see other people's questions. I read them out, and then I let you know what they are, and I answer them at the same time. Okay, so we're good. Next item would be a pip. And basically what a pip is a pip you count for profit and loss. So it's a basically a point of like a percentage almost. So when currency moves a hundredth of a pip, that means it's moving, in your terms, if you're trading trading one lot, it moved one point. So each pip you move is a point, or in that case a dollar for you, in terms of what you're doing. So if I was to trade USD CAD and it moved 10 pips, and I was trading on I guess a one lot trade, I've made $10. So 10 pips equals $10 at that point. If I was trading 0.1 lots, it would be $1. If I was trading 0.01 lots, it would be 10 cents. So that's sort of how you'll correlate that. Once again, as you start trading, as you start demo practicing, all this stuff will become very, very clear, because everyone will be working with you daily, and you'll have all those questions answered. And a lot of people already are doing demo accounts, already clicking buttons. You're looking at what you're doing already. This is more of just, could be a refresher for you, or it could be brand new. Is leverage mentioned later on? Yes, we talk about leverage. Who coined PIP? Good question. I don't know that one. Okay, a micro PIP or standard. So it depends on your account size, right? So if you're looking at a standard PIP, it's 10 points. And also if you're looking at a micro PIP, it would be only 1 point. So you're trading $100 or you're trading $10. That's basically what the difference is at that point. Will you explain the MetaTrader app? Yes, I will. Okay. Would it be based on a pair? All the pairs trade the same way. The value of the pip would change. So sometimes it's worth a little bit more, sometimes it's worth a little bit less. And that's based on the currency exchange rate based on the US dollar. So 10 standard $1 lots would be 100. Yes, that's correct. So if you were trading a standard lot and you had 10 standard lots, that would be 100. That would be 100 pips or 10 or one standard pip, I guess, at that point. Okay. So the next thing we can focus on is a little bit with our broker. So brokers right now, there are lots of different brokers that you can work on. That is where you place your money into the foreign exchange area. So what you're looking at is you're going to sign up with a broker. You're going to have to go through their compliance. They make you fill out a bunch of forms. You do all that information. And what you're doing afterwards is you are going to then deposit money, and now you're in the foreign exchange market. But you're going to have to use a trading platform. And there are multiple trading platforms. The majority of people here use MetaTrader 4 or MetaTrader 5. We'll go through that, but that is how you access the foreign exchange market. So essentially what you're doing is you're entering through a broker, and then you're going onto your platform, and the money will be there on your platform, and you'll be able to trade at that point. A lot of people may have come from binary options, which I consider fraudulent, where you're able to trade right on a screen on a website. I don't recommend any broker that allows you to trade on a website. You should really have your own terminal, protect your privacy. You're able to make your own scripts. You're able to make your own edits. And what you're able to do there is you're able to then control everything, and you have a little bit more access to that. There's also apps available on your phone. Once again, I don't recommend trading off your phone. I recommend you doing your analysis on your computer, whether it's a laptop or a desktop, and then monitor your trade on the phone. If you have to close them or you have to adjust something, adjust on your phone. Don't just trade off your phone. It's very, very difficult. It's tough between how you actually can execute, the way that the charts look on your phone. It gets skewed. You might not see all the information. You just don't want to, you want to give yourself an edge, and you want to put yourself in the best position to win. Okay, so there's a few questions here. What's your best advice from transitioning from 9 to 5 to becoming a full-time trader? Essentially, slow and steady, let the money compound, and take your time with it, and eventually you'll be able to get there. Would I recommend CTrader? Yes, CTrader is an option. It is a more advanced option in terms of the way that it moves. It's a lot newer, the software. There are people that use CTrader, so there are advantages and disadvantages to both, but I don't not recommend one over the other. I'm just more comfortable with MT4, which is MetaTrader 4. Do you recommend safe brokers for large capital? I've heard stories about brokers being funny with large money. I'll talk about some brokers as we go through the slides. I have a relationship with someone who owns a brokerage, and I'll talk about that as well. MT4 has a web app. Yes, it does, but like I said, you always want to trade off your computer. What's the correlation between your broker and your bank account? How do you withdraw money? It all goes through your bank. So when you deposit money, you wire it to your broker, the broker wires it back. Yes, so you need a broker to trade real money. The broker acts as the intermediary to the market. So you basically go through the broker. It'd be like if you're selling your house. You have a real estate agent that sells your house. You can't just go and sell your own house. I mean, I know you can technically because there's private sales, but here you can't just jump into the market. You could if you had enough money, like I mean hundreds of millions of dollars, but at this point you're a retail trader, you have to go through a broker. Do I recommend any brokers? Yes, I do. I'll put them up there. I use that. I say yes with caution. I'll give you advice on how to also vet your brokers. And also in the chat rooms, you'll be able to talk to other people from your areas that have similar brokers and similar experiences. Do you deposit money with your broker with a debit card, credit card, or directly from your bank account? It just depends on what the broker allows you to do. There's multiple options. When you log onto your broker, you'll be able to see those options, and you can just choose the one that's best for you. Advantage, disadvantage to USA broker versus Canada and Europe. USA, I'm sorry to say you guys are going to not like me, but the leverage is very low, so it's not, you're going to need a lot more equity to build your account, or your account's going to take slower to build. That's sort of what the issue is with that. There aren't many Canadian brokers, there are more European and Australian brokers. Can I access MetaTrader with CMC markets, or is that different? I don't really know CMC markets that well. You'd have to look at their site. Can you use TD Waterhouse? I don't know offhand. I've never used them personally, but I think there's like you could use Questrade, things like that. They have that option. It just depends on your leverage. How long do you recommend to go demo before we go live? Okay, I'll answer this question now, even though I answer it later. It's essentially when you're consistent over the few months, start with a small account and go from there. What's the most appropriate standard spread for gold during active hours? It varies. You can get a spread at 6 pips, you can get a spread at 13 pips, and those are micro pips. So it really just depends on the time. Can you change your broker after already picking one? Yes, just sign up to another broker. How much do you recommend then for equity? I wouldn't say 10,000. I would say trade smaller first until you're comfortable, then put in larger amounts of money. Can you fund an account via PayPal? Yes, you can. I am based in the US. No, you can't use a European broker. Not too well versed with FX choice. Like I said, there'll be other traders you'll meet. They'll be able to help you with that as well. Yes, we're doing a Q&A afterwards as well. So guys, keep those questions coming later. These are a lot of questions. Like I have a lot of information to pass through, and you guys are asking me just random questions because that's what you think is important. We cover all this. Trust me, I am going to say that there are thousands of questions that you have right now, and I can guarantee you I'm going to cover about 90% of them. So I just, I want you to say that. So like if I ignore some of your questions, it's not because I don't want to, it's just we're going to cover a lot of it. So if there's a question that you think that's not answered, when we get towards the end, then ask it. So write all your questions down. Chances are you'll find them as we go through here. I just want to keep it moving. That's all. So sorry about that. Okay, so what is leverage and margin? So this is the biggest thing that people get confused with. People always talk about, what's the best leverage? You can have leverage from 50 to 1. You can have leverage up to 1,000 to 1. Leverage is good and leverage is bad. And what I mean by this is you're borrowing money. So what happens is the more money you borrow, the less equity, which is your own money, you're using. So a lot of traders, including myself, we use like a 500 to 1 leverage. I've used 100 to 1 before. For me, I had the equity, but I found that, I was more comfortable with 500 to 1. Or there's some people that use 1,000 to 1. There are people that use 50 to 1. Really, what it comes down to is your comfort level. Now, with the lower leverage, your account is not at risk. So in this case, what you're doing is with the higher leverage, it allows you to open more positions because you're now borrowing more money. But what happens is when those positions go the wrong way, a lot more of your equity is taken away. So you can win big and you can lose big. So your risk management really has to be in place. So when we look over here at this example here, what you'll find is, I'll go through it rather quickly with you guys here, is, for example, you have 50 to 1 leverage. It's a 2% margin requirement. So $2,000 of equity is required to purchase $100,000 of currency. So when you look at buying a lot size, so you would have to make sure that you have, that amount available. So if you have a 50 to 1 account and you only have $500, you're not able to purchase the dollar lot. Where if you have a 500 to 1 account and you have $500 in your account, you probably could purchase a single lot. So these are things to keep in mind as you work through leverage and as you decide what you're comfortable with. Now, what I recommend is when you open a demo account, you can adjust the leverage on the demo accounts to see what fits your style. I've always done 500 to 1. I started with that when I moved into IC markets. That was my first broker that I used, and I just got used to the fact that I had to be aware of my risk management. Now on your MetaTrader or your CTrader app, it shows you the leverage that you're, or sorry, the margin that you're using. So you have a little section there with your equity available, your margin available, and then also the total margin used at that point. So once you go to 0%, you have no more margin left, the broker will automatically start to close positions. Now, you'll never lose more money than what's in your account. So when people talk about blowing accounts, if they had $500 or $5,000, the broker will never come to you and ask for more money. Once your account is blown, it means the account inside what you had there. The broker doesn't lend you more money than what you can afford to pay back. So when people talk about a negative trade, you can have a $5,000 account, and when you go into negatives, you'll lose nothing more than $5,000. So you can empty your account, but there's not going to be a chance where you're going to lose more than $5,000. The broker won't allow you to do that. Now, you can make more than $5,000 on the other end, but you're not able to, lose more than what you have in your account. So, leverage increases both upside and downside risks, as the account is now much more sensitive to price movements. So in a standard account, you're looking at, I would say a 0.01 lot equals 10 cents per pip, equivalent to your currency. This is, no matter what leverage you use, leverage affects the amount of margin you need to be able to put up at that trade. So all that means is you're opening a different lot size at that point. So at 100 to 1 leverage, you need $10 to open a 0.01 lot at that point. So as you start to trade, you do more demo, you're going to understand leverage and margin as it comes through. Yeah, so there's a quick question here. Is people were with Pepperstone when they were IROC regulated? So that's Canadian regulations. They're not regulated by IROC anymore, but they're not taking on new Canadian clients. That's probably fine. They probably just grandfather people in, so that's okay. Okay, so let's take a look at an example of leverage, okay? So here we go. So this is, once again, an example. If you don't get it right away, it's okay. We will go through this in the chat groups. You can watch this webinar again. You can write this out. You'll be able to figure that out as you start to trade. As you understand leverage and margin, you'll start to realize, okay, your trading plan, you're going to open 1 or 2 positions only, or maybe 3 or 4 maximum. You'll be able to calculate what percentage of your account you want to use, excuse me, for that trade. So these are things that you're going to learn as you go. But this is, like I said, just a base to give you an information and an example of how leverage works and how margin works in your account. Really, once you start practicing and once you start working at this, you're going to have a greater grasp on it. I always compare Forex to math. You can look at a math problem like 10 or 12 times, but if you don't actually practice it and you're not actually doing it, it doesn't help you to read it, because you're just going to sit there for the most part and say, I don't understand. You actually have to get in there and actually physically practice it. So, here we go. So let's take a trader with $2,000 in his account. So what that is that's your total equity or your total balance. So equity is basically the money that you own. You buy one lot at 97.50. So you're able to buy, $1 buys 97 yen essentially. And the leverage is 100 to 1. So right away we've used basically $1,000, and you have $1,000 left over. So what happens is if the trade wins, you get that equity back, but if the trade loses, the percentage of what you've lost then is taken into account from the 2,000. Now, once again, we've also talked about here some transaction costs. If you're using a commission-based broker or a spread, it just really depends on what the pips are. So you'll always find that your trades start off in negative because you're paying the spread right off the top. So you're never starting in a positive trade. You're always negative, and you have to wait for that trade to become positive. So that's when I say you always want to select pairs with low spreads so that the pair doesn't have to move that much. You're not as much risk because the spread is lower for you to move in that way. So, carrying on, it says, now let's say the trader keeps his same one lot buy at a position of USD JPY. If it moves into your favor, the gains are added to the floating equity. So that allows you then to add more positions if you want, close it in profit, things like that. But if it goes into the negatives or it goes against you, the losses are subtracted to the equity as well. So that's where you start to see your account start to move up or down. Um, you know, if you go too far down into the negatives, you get a margin call. And what that margin call is basically saying that you don't have enough equity in your account to cover this position anymore. The broker automatically closes that position. And once again, as your account starts to move either positive or negative, you can open up bigger positions or smaller positions depending on what's happening at that point. Um, so the question here is, I opened an account with a Wanda, got 50 to 1 leverage. Will I have the choice to increase the leverage, or should I look for another broker? The broker dictates the leverage, so if that's 50 to 1, that's the only thing they offer, that's what you're stuck with. So if you wanted more leverage, you look at another broker at that point. So the final point here is, if we move 100 pips in the trader's favor, so we move from $97 to $98, essentially then you'd make $1,000 gain. So basically what you've done is, these are standard pips, so what we're looking at is $10 a pip, so we're moving basically 10 times 100. So if you have a mini account, it would be 1 times 100, so you would make only $100. This is a standard account, so you've basically moved 1,000 mini pips at that point. And that's what most of you'll see. When we use standard pips, that would be 100 standard pips at that point. So you've got basically you've made $1,000, you've made 100% ROI. If it goes the other way, you then lose $1,000. But you can't once again lose more than what's in your account. So this is really a baseline example of what would be happening as you start trading, and you'll see that as you demo or as you move into a live account, you'll see that movement constantly move. Okay, so types of brokers. So this is a question that people ask a lot. We have dealing desk brokers known as market makers, and then non-dealing desk brokers. So what you'll find is there's a lot of internet discussion. You guys have probably read some of this stuff. You'll probably see some things that people have spoken about. People talk about A books and B books. The biggest thing, and this is something that I think a lot of you guys know, is 90% of retail traders lose trading Forex. So you look at this and you're like, wow, so how does the Forex family succeed so well? It's not that we succeed well, and this is the funny part. People always look at the results and they're like, oh, you guys are doing so great. We're managing risk. So if I told you at this point, and I said, if you do the same thing every day and you just make 1% a day, you would be successful. But if you only had $100, 1% of $100 is only $1. That's where the problem comes in. And in section 2, when I start talking about mindset, this is the reason why retail traders fail. The brokers know that, because brokers know human emotion. Brokers know human psychology. So what they do is they bet against you. And they don't necessarily do anything wrong. I mean, there are examples where brokers have tried to steal money from people, in the sense that they'll hammer a position the other way with more money to push it and make you hit your stop loss, like we call stop loss hunting, things like that. But for the most part, they're making money off you. So your $500 account or your $100 account, they don't really care about. They're going to constantly make money. Brokers are always making money. So when they're market makers, they just understand the odds are in their favor that you're not going to be a good trader. And that's where people always say, well, Forex is rigged, the broker's screwing me. No, the broker's not screwing you. They have no reason to screw you. I mean, there was one article about a couple of months ago about a broker doing that, but for the most part, if you look at a reputable broker and you talk to people in our chat groups and you use the resources available, you'll find that you won't have problems with your broker. The problems are more of how you're trading, why you're trading, and what you're doing. So when we talk about market makers, those are great for small accounts because what it allows you to do is they'll give you a better spread most times during the liquidity, but at the same time you're not paying commissions, which are sometimes disadvantage. There's a disadvantage to commissions at a smaller account because you're constantly just paying that amount up front, where here if you just use the spread, you cover your spread and then you're done. Non-dealing desk brokers, these are the ones that you would want to look for. So if you're looking for a broker, you're looking for a broker that offers a non-dealing desk. And what that means is essentially the broker is sending your quotes into the market. They are not acting as a market maker. They are just sending your quote into the bigger Forex or foreign exchange, and what they're doing is they're allowing that quote to be taken by another liquidity provider. So they're actually not worried about your money. They're not trading against you, or they're not providing the money for you to win or lose. It's going into the market itself. So people tend to think that the non-dealing desk is a lot safer because the broker really has no, what's the word? They really have no incentive for them to try and screw you over. Where if they're a market maker and they've got 1,000 people under in their brokerage and they're all hammering the same position, it might be costly for them because now they're going to have to pay that liquidity out, where a non-dealing desk broker wouldn't have to pay that liquidity. But once again, brokers understand the math and the probability behind retail traders, so they're essentially taking that gamble if they're acting as a market maker for you. It doesn't mean that you can't beat them up, because I've beaten them up. A lot of people have beaten them up. It just means that they know the majority of people won't beat them up. I think as time goes on, if you find that I think as education increases on the internet and as people get smarter, I think you're going to find a lot of brokers closing shop or consolidating, because I can see it now, just what we do. We have a lot of successful traders, and as the accounts grow, so do the lot sizes, so do the profits, because once again, you're a small fish in a big pond. Even if you're making $1 million a day trading retail Forex, you're nothing. And it sounds funny, but you have to start adjusting your mindsets. You don't move the market until you're moving hundreds of millions of dollars. So if you're making $1 million a day, or 50,000 a day, or $100,000 a day, they are basically, they don't care about you. You're not big enough. So, you know, maybe in your microcosm, and when you see things that are happening, you might think it's great because we as human beings don't see that large sum of money, but in this space, $1 million a day is nothing. So I always laughed when people said, oh, you know, Ted, you're trading such big lots, you're making big money. And I said to myself, I'm like, well, it's $1 trillion market. I have like 1%, less than 1% of this space, not even a percentage point. So really, how much do they really care about me? It's just more of social media's perception at that point. Okay, so there's a few questions. If we are giving 50-to-1 leverage, can we close trades with profit and change to 100-to-1 at some time? No, your leverage always stays the same, so you have to select that before you open your account. NDD brokers are the same as ECN brokers, essentially, yes. So their ECN is straight to market as well. So brokers are just middlemen to consolidate your transaction. Yes, essentially brokers are basically bringing a buy and a sell position together. So in Forex, you need a seller and a buyer. So you need a winner and a loser. And people always say, well, who's losing if we're constantly winning? It's understanding the risk management behind that. So if you understand essentially, you know, if you look at Chase Bank or TD Bank or a large institution, they're holding big positions. And those big positions can afford hundreds of millions, if not billions of dollars of drawdown. So you can have a position that's open the wrong way, and we are collectively winning as a group. So say, for example, everyone starts working on Tuesday morning. So I have all the groups up. By Tuesday morning, we all start working, and everyone understood everything that we talked about today, and we all started trading. We could all win together. There is no doubt in my mind we would win together, because there's an institution somewhere, or there's a large dark pool, there's a large amount of money moving in the opposite direction. So think of us as small minnows, and think of the banks as big whales. As the big whales cut through the market, we're just taking small scraps here and there. And that's what you're doing here. So when you look at why we're winning and who's losing, it's the institutions that are losing. Now, institutions get you back when there's high volatility news. When they make the markets move in such a dramatic fashion, they push you out. They'll make sure that you're not able to enter trades because the prices are too bad. There's certain things that way where, you have to be more selective, and that's where risk management comes in. Okay, so just answer these questions. I don't know if Capital Index is NDD, sorry. Can't hear me, I think it's your connection. Is IC Markets NDD? Yes, it is. Will you provide some info on these NDD brokers for opening an account? Yes, I will in the next couple of slides. Does leverage matter based on your strategy? No, leverage does not matter based on your strategy. It's basically how much you're going to have available for your trades. So, you could trade the same pairs as me every day, but you just may not be able to open a larger lot size. You might not be able to have as many positions, but your strategy can still be intact. Okay, so here are some brokers. This is from dailyfx.com. So you'll see here that there is, this is a relatively older slide, so you might find that some of these brokers are no longer available. They may have changed. So my recommendation always is to look at DailyFX. There's another website called Forex Peace Army. Open up those websites, and they will provide you some information with regards to brokers and how they work. You'll notice with the U.S. brokers, once again, there is a requirement that they can't go to a certain leverage. So they have to be regulated by NFA or CFTC, and they're basically subject to strict leverage restrictions. So you'll find that they're only going to offer you 50 to 1 if you're in the US. So a lot of people who trade Forex in the US are very upset about that, but I believe Trump is signing documentations to adjust the way the banking industry works, and that might open up your leverage. But US people only can trade with US brokers, and you're stuck to that leverage. So I apologize, you're all going to hate us because people are like, this sucks, I can't trade more. It's also a blessing. You won't blow your account as fast. It'll take a little bit more time to build up, but we hope Trump does what he does and changes all that. So once again, you're looking at dailyfx.com to give you that information in terms of the way, the various brokers. Once again, you'll talk to people in the chat rooms to talk about the various brokers and get their opinions on that as well. Okay, so if the dealing desk offers a better spread, why would people choose NDD? NDD allows you to access the market right away, where a spread, you might just get the market price. FXCM is no good. Yeah, like I said, this is an older slide, so it's not necessarily the best one. They had fraud last month. There's a question here, would you be risking too much with that sort of mentality on leverage? Really, it's up to your own personal risk profile and how you want to define where you want to be with that risk. There are US brokers with more than 50 to 1. Yes. Once again, people in the chat rooms will be able to help you, but for the most part, there are things that are happening that will allow you to be there. Okay. Can you trade a broker overseas if you live in the US but have an overseas bank account? Once again, you have to go through their compliance department and figure out if they accept your documentation. So I think that is a question for the broker. I think the best feed for trading is True ECN or DMA. Yes, that is correct. I believe that as well. International international brokers. So once again, here are some other brokers for international. So you can see the leverage goes up. You have 1 to 500, 1 to 400. Once again, FXCM had a lot of issues, so they're not using them anymore. But these are, like I said, this is an older slide. I didn't update it. I have some new slides coming up right now that will give us that information too. So give me a second. Get to the next slide. All right, so brokers that we currently use in the Forex family. ICmarkets.com. It's an Australian broker. It's been open since 2006. It's very well recognized. We've had no problems there. Owanda.com. Only issue is has low leverage. This brokerage here at the end, Vibs. I know the owner of this brokerage out of the UK. I actually speak to him on WhatsApp. So if there's anybody in Europe or anybody that wants to use them, you know, talk to him and say that you know me, and he'll help you set it up. They do 400 to 1 leverage, but in terms of the I guess I would say the commission rates, things like that, he'll work with you. Originally, like what happens is, and this is the reason why I don't recommend brokers, is because if I recommend brokers, technically I could get a rebate. Like if I go to icmarkets.com and I say use this link, and that's what a lot of Forex marketers do, they'll say use this link, and then that connects them to an affiliate program, and I get a percentage of your spreads or your commissions that you've paid to the broker. Not your wins or losses, but just what you've paid into the broker. The broker gives me a bit of that for referring somebody into the program. I don't do that. I don't think it's right. So what I told with James here, I let him know, you know, because he asked me about that. I said, I will bring customers to you, but I want you to treat them and give them the discounts. So here's an opportunity for you to get a rebate instead of me getting the rebate. I'd rather have you guys get the rebate. I don't need the money for that. And I don't want to take it from you. So it's an opportunity for you to get some money back based on your trade volumes, things like that. But you can also talk to the brokers individually and talk to them about rebate programs as well for yourself. And if you're mentoring people and you recommend brokers and you want to take rebates, you're more than welcome to do that as well. The thing that I talk to a lot of people about that bothers me is I just want people to be upfront with that. Like if I told you right now to everyone join IC Markets and I was taking a rebate, I would disclose that to you. And that's the reason why here I disclose this relationship with you, is because if you want to reach out to that brokerage, it's because I know them personally. I'm not getting anything from it. It's I want you guys to take the benefit. So that's sort of the difference. So like if you want to refer people and you want to make money on the side doing that, there's nothing wrong with that, but you should be disclosing that. I think that's a prudent thing to do. U.S. people can't use VIBs. Wanda, I believe, has U.S. customers. Um, let's see, what would you recommend for a Canadian customer? We use IC Markets. I think that's fine. A lot of Canadian people use that. Wanda is okay as well. In Canada, we have a lot more options. So you'll find a lot of people use IC Markets just because the spreads are really good. UK broker won't accept US clients. Wanda, I think, allows US customers because of their leverage. Okay, so there's a couple of things here. FX Choice is good for US clients, so that's people are saying. Also, Trader's Way is good as well. So FX Choice and Trader's Way, I have a couple of people from my previous webinars jumping in, helping me out. Thank you guys. They're saying that, you know, those are good providers as well. Is XM a good broker? I've heard good and bad things about them, but really, I think we have a lot of people in here that will help you with choosing your broker. Yeah, Trader's Way is 21 and older as well, if you're interested in them. Singapore, I think you're open to a lot of brokerages similar to European clients as well. Stay clear of Iron FX. Okay, there you go. There's another one. So there's, like I said, as you get into the groups and as I bring the more seasoned traders into them, those are questions that you can ask them and they'll give you those things. Like I said, I use IC Markets and Owanda. Those are the two that I use. A lot of people use IC Markets. My corporation uses IC Markets, so we've had no issues with them. So, I mean, if you want to look at that. Vantage is a decent broker. We had a problem with one of the students. They had liquidity issues, so they took some money from that student, so we weren't happy with them. But you know, it's really up to what you want to do. LMFX is also good, so that's LMFX, and it has 0 to 1 pip spreads, so you're okay there. Is there a benefit to using multiple brokers? If you want to diversify, you can, but not really. I mean, it's really up to you. It's personal preference. So like I said, when in doubt, use forexpeacearmy.com. So here's, I mean, once again, you can go on there, type in the broker, go read, go review. This is an opportunity for you to look and see exactly what's happening with what's going on in the markets. And you know, there's people there that will give reviews, so write this website down, copy it, whatever you need to do. They are a good resource. Like I say to people, Google will help you as much as I will. So you know, sometimes you go journey on your own and find some information, and this is a good place to give you. Does VIBS give U.S. clients 1 to 200 to 1 leverage? They don't allow U.S. clients, but they can give you up to 400 to 1 leverage. Does IC Markets allow you to scalp? Yes, they do. IC Markets allows you to do everything. They are huge. They move a lot of the money. There's also another site here. It says www.100forexbrokers, 100 being the number, Forex brokers, all one word, so that's all together. .com is the same as let me just copy this to give everybody. Basically, it is the same as Forex Peace Army. So give me a second. Let me just copy this. I'll send that to everybody. There you go. There's a question here. I trade with European brokers and I don't really have spreads because I pay $7 commission for 1 lot. Yep, that's fine. We pay that as well. You might want to talk to that UK broker, VIBS, and see if they give you less than that. Definitely look. They have unlimited lot sizes as well, so they'll take as much action as they want from you. So it's really personal preference once again. Like I said, choosing a broker is like choosing a car. There's many cars that people like. Some people like one broker over another. It's really personal preference. If you have a broker that's working for you, keep with them. If you want to change brokers, ask questions, get people's opinions, see what people think. Like I said, I'm going with what I know. There might be better options that I don't know of. These are what works for me. Okay, so, going into the trading platforms now. So we're talking about trading platforms. So we have MetaTrader 4, MetaTrader 5, FX Trade, and CTrader. So CTrader is probably the top trading platform, or the newest trading platform out of all of them. But most of us today use MetaTrader 4 in this instance. So with that being said, once again, when you sign up for your broker, in the sense that you log in and you get a brokerage and you do all that, basically you can download the platform right from the brokerage, so you're able to access it. So whatever broker you're using will have all these platforms available for you. It's really up to you to choose which one you want to use and how you want to use it. But like I said, you need a brokerage to get into the FX market. So choose your broker, then download all the software, and you'll be set up relatively easy at that point. The reason why we use MT4 a lot is because it's open source, and what I mean by that is open source coding. So there's a lot of information, and we have this in the Google Drive. There's a lot of scripts, and what I mean by scripts is there's a lot of automatic programs like opening positions, closing positions, setting stop losses. Those can be integrated into MT4, and sorry, MT4 is MetaTrader 4, so I'm using that as the acronym. You're able to do that, and you're able to use that to, speed up your trading, do certain things, manipulate stuff. There's a lot of also, I would say, indicators that, if you want to use. There's special cheats that you can have on your screen, like the pip count, the time to candle close. So there's a lot of opportunity to use MetaTrader 4. A lot of coders like that because they code scripts and they're able to manipulate the software to allow them to trade a little bit better. Have you used TradingView to plan your charts? I haven't, but lots of people do. That is an option to plan your charts if you want to use TradingView and just execute on the brokerage. So you can use TradingView, sorry. MT4 versus MT5. So MT5 is now is a newer version of MT4. So there are some changes. There just isn't as many people coding on MT5. Maybe it's changed in the last year, but last year with MT4, it was still very popular at that point. Can we find any info on the Google Drive about understanding what servers to choose and what work with? Yeah, so on the Google Drive, there is a section that has new trader information, and all this is there as well. Okay, so in a few examples that you provided, the trading platform was proprietary. No trading platform is proprietary. It means that they've just put it's a client, and all they've done is put their shell on it. So MT4 is an open source client, so if you go to a brokerage, you can download their MT4 or MT5 or CTrader program, and then they just brand it their program, but it's still MT4 or MT5 or C-Trader. C-Trader is interesting because it gives you a little bit more variables in the way that you can open and close positions, you can catch reversals faster. It's really a personal preference when it comes to what you want to do, but there aren't, I think Owanda and maybe one other or two other brokers have proprietary software, which is different than MT4 or MT5 or C-Trader, but for the most part, all brokerages allow you to link up with these softwares, and it's just a standard issue. Like everybody just follows the same sort of thing. Okay, so MT4, so like I said, once again, it's the most popular out of all platforms, and like I said, the best feature of MT4 is open source development. So you can write technical indicators if you choose. You can create expert advisors that automatically open and close trades. And like I said, once again, it is a separate client to the broker where you open and close trades. Unlike binary options where you go on a website, here you're able to go through and actually do it on the MT4 program itself. With MT4, I mean, I find it, I like it just because it has an easy layout. Once you get used to everything, you'll find that you're able to see what's going on. Things become easy. You have a lot of shortcuts. You're able to click through different things. If we turn around and we look over here as an example, you can see here, this is where you would open multiple charts. So this is like your whole toolbar across MT4. So you open multiple charts. You can have your data information. You have your crosshairs over here. Here's where you have more data. Your navigation pane where you can open up your scripts or open up other accounts. Here's your terminal view where you're able to see your buy and sell trades. You're able to place new orders. You can enable an auto trading. So if you're running a script or you're running an expert advisor where it's going to actually auto trade for you, you click on this and MetaTrader 4 runs on its own. These actions over here on MetaTrader, you have your line charts, your candle charts, or sorry, these are your line, your candle, and then your sort of your graph charting. So you can choose what you want to use. You can zoom in and zoom out. I'll go through some examples as I start to use MetaTrader. I'll show you guys how it does. You can tile your screen so you can have multiple charts open and tile them. Here's you can scroll here where you can scroll to open up more of the right side of the chart, so you're able to see sort of what's going on in the future, not the actual market, but you have more space to do a little bit more analysis. Once again, your timing, you're able to stack your charts. Here's just a standard mouse pointer. You have crosshairs to help you with your you want to measure price, or you want to measure the amount of pips. I'll show you this as well. Here are your lines. You want to draw all your various lines on your charts. Here's some I guess some indicators that you could use as well. Here are all your time frames. So you have a minute time frame, a 5-minute time frame, 15-minute, 30-minute, hour, 4-hour, daily, weekly, monthly. These are all your time frames, so you can keep adjusting through your charts, and you're able to see all that information in front of you. And like I said, as we start to go through the technical analysis portion of this, I will go through all those items for you and show you how all that information works. So don't worry if you didn't get that all right away. You will as you start to use MetaTrader 4 if you choose to use it at that point. So basically, people say, how do we use MetaTrader 4? Like, what are we doing with it? Essentially, you want to make your color scheme as easy as possible. So as an example here, I've shown essentially just what I would say a version of MetaTrader where you're able to then say, okay, this is what you're doing. So what I would do here, I'm pull up my MetaTrader, and you can see here as an example, I would turn around and click properties, and I've changed my colors. So once again, I've changed the background, I've changed the colors of my buy and sell candles. I've been able to go through that, and you'll see that I've adjusted it for my eyes. Now you can turn around and you can change that, and you can say, okay, I want it to be purple. That'll change purple. So, I don't want purple, I want red. So I would go in here and I change it back to red. So you can make all these adjustments in here, and you can do all that for what you want to do. There are also, all what you want to do here. You want to show certain things. You want to show your ask line, show period separators, show the grid. So you can click on all these and really customize what you're doing at that point, and you're able to see all the information automatically. So this is something that you're able to do on MT4. So once again, when we look at MT4, I'm in my own account right now, and I'm able to see here. So if I was to turn around and use a crosshair, I would click on it, and what I could say is if I took a buy position over here and I went up to this point here, you're basically looking at like 20 2100 pips at that point, or 20 $22 movement, right? So we're going from 1197 to essentially 1118 at that point. So you're almost like at a $2200 22 movement on gold. Once again, if you want to turn around and draw some lines, you have that opportunity too. You can then turn around and double click on your line, and you can turn around and then say horizontal properties. You can change all that information. You can change where it appears. So you can see right away with MetaTrader, using it as a guide for your trading, there is a lot of information available for you to do that. So you're able to go through that and say, okay, that makes a lot of sense in that point. So like I said, this is something that you can do on your own. You can choose how you want to have your property set up. You want to go through all that. Once again, in the chat rooms, we'll be able to talk about that a little bit further, and we'll be able to customize what you need to. And like I said, we have a wide range of information on the Google Drive that will help you with this, as well as like a user guide for MetaTrader 4 in the new trader section. So you can download that and read it and understand really how MetaTrader works if that's what you want to use as a trading platform. So once again, like I said, here's your chart, just a simple chart. You're able to see the movement on it, and you're able to review essentially what you have here. Like I said, on my charts, these are black and white bars, same setup, but once again, you have all this information at the top. You can remove all of that. You can change all this around. It's very customizable, and once you get used to it, or if you get used to using CTrader, you can make all those changes as well. So really, like I said, it's personal preference, and it's just going through this as you start to progress as a trader, getting comfortable what you like. I originally liked black and white. Now I like red and blue. So I mean, maybe I'll change it to green and gray. Who knows? It's really up to you at that point and what you feel that you want to use. Okay, so with that being said, that wraps up topic one for right now. So that's pretty much introduction of what's Forex and what to expect. At this point, I give you guys a 10-minute break. Right now I have 11:50 a.m. Eastern time, so whatever it is your time zone, let's come back in 10 minutes. If you have questions about topic one, I prefer that. Can you throw them in the chat? And I will answer them as we go. But for the most part, take a break now. Definitely, grab something to drink. I know I will, just because I've been talking for an hour and a bit. We can go through that, and like I said, I'll answer the questions just before I start topic two. And topic two, I would say, is probably your most important topic, and I really want you guys to pay attention to this. It's one of those topics that people underestimate, but then 3 months into trading, they come back and say, Ted, you know what? I needed to pay more attention to this topic. So I'm speaking from experience, so we will talk about that, and we'll go from there. Yeah, we're all still here. We're just on break. Like I said, we're on break for another 9 minutes or so, and then we'll come back. I'm just on mute. So when you don't hear me, I'm on mute because I'm eating my breakfast. Muffin, smoothie, and some fruit. Okay, so there's some questions here. Can you recommend the best broker for trading stocks? I can't because I don't trade stocks that well. Um, can you save this chart template? Yes, you can. I'll go through that actually. Let me show you that right now. Let me do this. Do this. Okay, so just a second. What you would do here as an example, you go to charts and you would say template and you would click save template and you can see here there's already some save templates already. You can save that. What I do is I save this template that I have as default, and what that allows it to do is when you save it as default, it will automatically open to that template every single time. If you don't want that template, then you wouldn't save it as default, but if you do want that template, save it as default and it'll open up every time. So every time you open a new chart, you'll have that. Nope, we're not ending anytime soon. If I open an account and I am not a US citizen and I move to the USA, am I in trouble? Not necessarily, because I think the issue you will have will be moving money because they're going to want to know your banking information. So if you can still move money to your previous bank and keep that open, you should be okay. Hey Ted, is the webinar going to be available later? Yes, it will be. It will be recorded and you'll get a link to it. What's my nationality background? My mom's from England and my dad's Hungarian. Will the groups be based on trading experience as well? I mean, not only geographic. So what I do is I set up everybody that's in this webinar. You guys are now all great friends. So there's going to be probably 2 or 3 groups that are going to come out of this. I'm going to put about 50 people in each of the groups. And you guys will all become great friends. You'll joke around. You'll have a great time. It's funny because people don't know each other, but then after like 3 weeks, you guys are like planning to go out for dinners and do stuff. It's a really great atmosphere. And then I drop in all my top traders into these groups because they love handling new people and they have a good laugh working with new people and helping you guys succeed. You'll get to know a lot of the experienced traders. They are all very, very good traders, very, very smart. We are a cynical bunch. We will beat you over the head when we see you're doing something wrong because we want you to be the best you can be. So really work well with them. They will work well with you. We never fight with you. There's never fights in my groups. Everyone's very encouraging. I really promote that. I promote no stupid questions. Ask as many as you need to. You'll have access to me privately. If you need to message me, you can message me. Usually the only time I don't get back to you is if I'm sleeping, but it's a really good atmosphere in terms of learning and actually having that ability. And as we start to gain momentum, I then combine other groups together. So you guys then combine with another group so that now you have a different experience, but at the same time too, now you sort of level up, so to speak. So it's a progression, right? Because like I'm not going to put you in a group with my June webinar group because they're just going to laugh at you guys and they're like, I don't want to go through all this again. We're at another level. We're advanced. So I bring people in instead of bringing you into another group. Ted joined about 30 minutes ago to a traffic jam or due to traffic in England. You missed the basics, but definitely it's recorded, so you'll be able to see it again. I see some people complain the execution for certain brokers are slow, but I don't understand what that means. It means that the liquidity wasn't available or the server didn't get the price that they wanted, so that would be a complaint there. Some people asking about brokers, U.S. using others. Here's what I found. There are a lot of reputable brokers out of the U.S., but you can open accounts, but not local bank accounts. They won't let you send money to them. Yeah. Okay, so someone recommended TD Waterhouse for stocks. How would I save my support and resistance lines on MT4? They automatically save on that chart as long as you don't close the chart. Yes, you'll meet Rooney. Rooney is he is a very good trader, so I believe he wants to be a part of these other groups, so we'll be there. And Anthony is well, like yeah, like I said, we have a lot of people from the UK and also from the States that will be around, and there's lots of people that are volunteering to help you guys, so we're in good hands. So far, nobody's jumped off ship. I don't use any indicators. I will talk about that. How many people participate right now? We have over 300, close to 400. Now we're going to have we're going to have close to 600. I think we had like 150 people, 160 people register for today. So we're going to have like close to 600 people. When I do the groups, I share information all the way across them. So what I do in terms of what analysis I provide or insight, I give to everybody. So you're never left out. Sorry, just came back. What are the groups you're talking about? The trading groups you'll be put in. Yeah, so Anthony's another great trader. He has a group that he's built for the UK, and he will be happy to bring you guys in there as well. There are people from Belgium. Who is my mentor? I found my mentor online. They provided me with the basics, and then I learned the rest on my own. Okay. Is the group split based on different trading zones? Not necessarily. I like to just keep it going 24 hours a day. So, you know, as things overlap, you'll be able to do that. So we'll be able to go there. Let's see. There's more questions before we get started. Why does MT4 sometimes delete what I draw on the chart? You probably haven't saved it on it, like you didn't double click it. Where will the trading groups be done? They'll be done on Facebook Messenger. I will give you all that. Yeah, Arn is from Belgium, so he says he will connect with you, so we'll get that done. Do I trade the Asian session? We have people that trade the Asian session. I don't, but I'm always around. Do we have traders in the Netherlands? Yes, we do. Yeah, we have people pretty much from South America, Africa, North America, Europe, and now we have a couple people from Russia, and we have a lot of people from Malaysia. So yeah, so Indonesia, yeah, so we have a lot of varying. So you'll find people will start to get there. South Africa, we have Scandinavians, we have here. We also have our friends in Syria and Lebanon and Turkey. All those guys, they're the most fun. They give me the hardest time, but it's really good there. Are active trades in 500 plus broker good? I don't know offhand. You'd have to double check with that. Traders in Costa Rica. I think we have traders in Ecuador. We have traders in Venezuela as well, so I think you'll find there's there. Like Javier is from Venezuela, so I sort of let him do all that stuff over there. Michigan, I think we're close. We have some people out of New York, obviously GTA as well, so Detroit area and stuff like, or Toronto area, so we were there. Um, Kenya, I believe we have Kenya as well. South Africa, I believe we do. Um, yes, indices, we will talk about that. Can you make good money from trading one currency? Yes, you can. Oh yeah, we have Uruguay. All right, there you go. Uh, yeah, there's Arabs and Turks. That's correct. How many people we have in the Forex family? Close to 600. Yeah, we have South America, Portugal. There you go. Vancouver, Miami, Slovenia, NYC, Dubai, Pakistan, Toronto. There you go. So like Hamilton, Montreal. Yeah, like we got everybody. So there you go. Belgium, blah blah blah. Brampton. Yeah, 601. There you go. So, like we have so many people from around the area, but you'll find that Cuba, Kansas, San Diego, yeah. So like we're all over here. Like we have Costa Rica, USA. So 817. I don't even know where that is. I apologize for my ignorance for down in the States. Um, Montreal, we have people. Yes, you can focus on two pairs that correlate. That'll help you. San Francisco, Austria, Sweden. Yeah, see, like we're a big family, so everyone's around here. We'll be able to help you. What's the spread in gold in your broker? It depends. Usually it's about 13 pips, 1.3 standard pips. Australia, see, Cuba. Holy cow, we got like a lot of people here. Yeah, so we got lots of people. Cuba, Austria. Would you rather trade only one pair or any pair with opportunity shows? You trade according to your trading plan. Um, Yes, people want to take the advanced training. I don't offer that advanced training. You guys are horrible. Like, see, this is what happens. We have the new traders here that you guys are learning, and then I invite all the previous traders in, and you guys will be previous for the next webinar. And um, you'll come in, and that's all they do is they send me questions and they troll me as I'm doing this to knock me off. See, like this is what's happening there. People are doing, no, I don't trade binary. I think there's a lot of issues with that. I did try it. I was successful, but I moved to currency trading right away. Okay, so we're past time. Let's go into the mindset for trading and let's move on to topic 2. No, I'm fine. I'm not messed up from the party on Friday. Okay, so why do traders fail? Um, I think this is the biggest issue. And like I said, this is the biggest topic that I like to talk about, and a lot of people don't like this topic. And the reason why they don't like this topic, it's the reason why they don't like this topic is because it's boring. There's really no trading involved in this, right? So, know, your willingness to create rules, your failure to take responsibility, addiction to random rewards, and external and internal control. This has nothing to do with trading. This sucks. And people look at this topic and they ignore it. And you're going to find as you become a better trader and as you understand trading a lot better, this is the aspect that you are going to work on the most. It's 100% going to be the one that you're going to come back and say, Ted, I wish I had paid attention to this when you talked to me about it, and now I understand why. And really, it's, I would say, 80% mental, 20% analysis. I can teach you how to analyze charts in probably a day. So after about a week, you'll probably understand how to analyze charts. You'll be like, oh, this is easy. All I do is click buy here, click sell there, I make money. Yeah. And then what happens is you keep doing that for a week, and then your mind takes over. Your mind starts saying, hey, if I up my lot size, I can do this. If I take more positions, I can do this. If I trade more during the day, I can make this. So suddenly now, what was like a scary element or something of the unknown, now you become overconfident. And I look at this, the perfect example is, you get a speeding ticket when you speed in your car, right? So the cop pulls you over and says why you were speeding, and you give them some excuse. They give you a ticket. So what do you do for the next week? You drive according to the speed limit. But slowly, you start speeding up again, right? So you start driving, if it's, 55 miles an hour or 100 kilometers an hour on the highway, you start doing 65, because you're like, well, chances are they're not going to pull me over for 10 miles over, right? So that's sort of the adaptation that happens with trading, right? Because you start opening one position and you're profitable there. You're like, I can open 3 or 4. Now the trade's going the wrong way. Now what do? Suddenly you've changed your rules. You're now saying, well, this is too hard for me. This doesn't make any sense. I don't like trading anymore. You forget that when you were trading your one position with your one pair and you're following your plan, trading was easy. Then you start, like I said, you're failing to take responsibility, and now you're blaming the markets for your movements, and you're not able to control yourself at that point, and you're getting overconfident. So, like I said, trading is extremely hard. Don't get it wrong. You are here. I'm going to give you tools. People in the groups are going to give you tools. We're going to give you cheat codes that are going to give you accelerated learning. So if you look back on my Instagram as an example, you'll see like last March, February, I had horrible trades. I was entering too early. I was missing trades. I was doing this. I was doing that. I was still doing my smaller lot sizes. I was still learning. I was still adapting. I went through the same thing that you're going to go through. So I'm telling you right now, this is the toughest part. Trading is very hard, but it's also very rewarding, because if you're able to focus on this and say, okay, you know what? If I just do this over and over again, if I'm able to mentally do the same thing over and over again, day in and day out, the only thing that I have to worry about at that point is analyzing and executing, and then letting time take over. And the biggest problem is, maybe you're not trading every day. Maybe you don't have the ability to trade every day. So a lot of people here with 9-to-5 jobs will say, Ted, well, when do I get to trade? I don't have time to do this because I'm working all day. Oh, okay, so maybe you're not trading the North American session. Maybe you're trading the Asian session. So you have to adapt, and you have to say, okay, what's the best time for me to trade? Trading is 24 hours. Granted, there are some times that the market doesn't move as much as the other, but it doesn't mean that you can't prep. It doesn't mean you can't execute or put in a pending order or set up a trade for later on. Or like I said, maybe you trade a longer time frame, a higher time frame, so you can trade more longer term. So you're able to figure out what works best for you. And like I said, when we build out your trading plan, everyone will have that opportunity. This is where you're going to have to dissect yourself, and you're going to say, okay, what makes the most sense to me? It's really tough because, especially coming from a 9-to-5 job, and a lot of traders will attest to this, is people that work 9-to-5 and then come to trading think that they have to trade 9-to-5, or they have to trade for 8 hours, right? Because the idea is, okay, I enter a few positions, and I always laugh about this because people message me in the morning. Like, my trading day is, I wake up at 6:30. I've looked at the charts the night before. I'm up at 6:30 a.m. I enter some trades in the morning based on my trading plan, and I'm done for the rest of the day. So my trades could take maybe 5 minutes. They could take maybe an hour. They could take maybe 20 minutes. But after that, I'm not looking at charts anymore. It's very rare that I want to look for more positions, because A, I had a focus, I had a game plan. B, I executed, and C, I was successful. So why am I now taken away from that success? Is it because I have nothing better to do for the rest of the day? No, I can do a lot of other things throughout the day. But what I'm trying to say is you have to get out of that mindset that you have to be in front of the charts 24 hours a day, 7 days a week. And I don't mean that you can't be. What I mean is you shouldn't be executing. You should be reviewing the charts. So when I first started trading, I was looking at charts 7, 8 hours a day. I wasn't necessarily executing on them. I was understanding what they were doing. It was more of visualization, more making sure that you're able to experience what is happening in the market, and training your eyes to see certain things. So when you look at that, you'll find that the experience comes from just being in front of the charts. If you look at a basketball player, right? So if you ever had, when you went to high school, or, football as an example, football players carry around a football with them all the time. Why? It's the focus. It's the preparation. It's the idea that, you know what, like at any given time, I just want to have the ball in my hands. You'll see basketball players, they just carry around the ball. You know, you'll dribble for a couple minutes here and there. It's the same thing with trading. You know, trading becomes a passion. You have to be passionate about this. It sounds cliche, but once again, your passion comes with your passion comes money, right? So if you're passionate about something, the money comes afterwards, right? Because you'll realize at this point, when you start trading, you're going to be working more hours than you do in a current job. Like I remember when I started trading, even today, all I think about is trading. You know, obviously I turn it off because I have a life, but it becomes a passion. It becomes a game for you, like a strategy. Like how can I get better? You know, we went out on Friday night. I saw a few people, and it was sort of like, you know, you talk to people and it's all we're doing is talking about trading because we're consumed by it. And when you let it consume you, you know, it can be a good or a bad thing, but at the same time, what it does is it allows you to maintain that passion for it. Where, you know, when you go to a job from 9 to 5, you say to yourself, well, 5 o'clock, I'm done, I'm leaving. I don't want to worry about my job anymore. With trading, now it becomes, okay, I'm doing something I love. I want to do more of that and I want to get better. So how do I do that at that point? What's my favorite time frame to trade? I trade during a North American session. I used to trade the Asian and the Euro. I used to basically wake up. I would go to work, come home, trade the Asian session, sleep for 3 hours, wake up, or not three, maybe 5 hours, wake up for the London session, trade that session, go back to bed, wake up, trade a little bit of North American, go back to work, and rinse and repeat every day. So that's dedication. That is basically, you know, understanding the markets because I wanted to get an edge, and I realized I had to make that sacrifice. You know, sleeping on your way to work, not going out on weekends, not talking to your friends for a couple of days because all you're doing is focusing on something. It becomes a lifestyle, and it's like going to the gym, and it's, you know, one of those things. Um, Charting times, yeah, I'll go through all that in the next sections. So when you look at that, and you know, you have to understand these things, you know, and like I say to people, it's like you're not going to maybe trade every day. As you get better and as you get more experience, maybe trades will you will see setups every day, and you'll be able to take those setups every day. But as you're starting off, maybe every day is not a good time for you to trade. You don't want to do that every day because there's a possibility that you're not actually seeing a correct setup and you're just looking to click a button. You have to understand that there's going to be losing trades. You're going to lose trades. Um, you're going to have to realize that every loss is a lesson to be learned. And, you know, a lot of us, you know, you'll see on Instagram, and people always ask me, they're like, well, you only post wins, people winning. Well, it's because we've gotten to the point where, you know, I've posted losses, but a lot of people have dialed in their trading plans. They know exactly what they're looking for. They get in and they get out, and they're successful. They've done their 1% for the day or their 2% for the day, and they're happy. And that's what they want to do because they see, you know, based on sort of the information that I provide or the various tools that we have, they see, okay, in 2 weeks, if I can just make 1% a day, I've now made 14% compounded, or, you know, 10% compounded. Suddenly now making an extra $100 a day or $200 a day is replacing your job. Next week, now you're making $250. The week after that, you're making $300 a day. It keeps multiplying, providing that you execute and you do the same analysis every day. You focus on your plan and you're good to go. Is there such thing as overtrading? Of course there is. People just want to trade because they think that they can make more money, right? So the perfect example is if I trade at 7 a.m., I can then trade at 8 o'clock and make more money. But I already made my profit for the day at 7 a.m. Why am I trading at 8 a.m.? It's greed. It's human emotion. You have to realize that it's a very mental game. And like I say to a lot of people, the only competition you should be in is with yourself. You'll see there's going to be people here that make millions a day. There's people that make $10 a day. It's really up to you, up to your financial situation, up to, you know, how well you understand the markets, how well you understand trading to create that path for yourself. You can learn off of other people. There's no doubt there. There's no doubt you're going to learn something from me. But trying to copy me or trying to use the same strategy I use, it's not going to work because maybe I have a different stop loss. Maybe I have a different risk appetite. You know, there's different things. I see different things, you know, than other people do. So you have to make trading your own. And that is the biggest thing that I can tell people is trading is subjective. And it's basically, you have to think of it as an art form. Everyone interprets art different, just like we can look at a chart and 10 people will see 10 different things. And there's nothing wrong with that. But it's the idea of, just the mental aspect of what you're doing day in and day out, which will propel you to go through. So, sorry, I just had the cough there. You know, um, so what can you do to get a Forex return? I think that's an important question a lot of people ask me. And the simplest thing is to consider, what would you do with your own company? If you had your own company and you were in charge of something, what would you want your company to do? You would want to set yourself up, prepare yourself. Would you invest in the first idea you saw? So if you were opening up your company, would you invest in the first idea you saw? Chances are you probably wouldn't. You'll probably, just won't just do anything with your own firm. You have to set targets. You have to set everything up. It's the same thing with trading. You want to prepare yourself to execute. The execution is the last thing on your list. It's all working in terms of getting to that point of execution. It's all the preamble steps before that, which is going to make you successful as a trader. People look at me and I always use myself as an example, as they say, well, Ted, you're consistent, you're successful. Yes, but I got that way because I have a specific plan that I follow, and every time I've broken that plan, and I'll show you the examples where I've lost lots of money trading. Every time I've failed in a trade, it's because I've broken a rule. It's, I've overtraded. I've traded in the wrong time zone. I've traded the wrong pair. I've traded the news. I've done things that are against my plan. When I've executed according to my plan, I've been fine. You'll find with other traders too that you meet in the trading groups, they'll say the same thing. They'll say, you know what? I did really well this week. And you'll say, oh, really? People did there was a couple people in my groups last week did like 40% return, 50% return in a week. Ask them what they did the week before. They made 40%, and then on Friday they decided to trade NFP, which is like a big news event, and they lost it all. So they worked 4 days straight to benefit and to get a 40% return. And when you look at the current bank returns, you get like 3% or 4% out of a GIC, or if that, or your savings account. They made 40% on their money in 1 week, and then they threw it all away on Friday. Why? Because, once again, greed, addiction to random rewards. They couldn't control themselves because it's that thing of, I can just get a little bit more if I work, not understanding where you're looking at what's going on. Yeah, so do you think lost trades could be considered company spending? Yeah, so you consider it a lesson, you can understand and learn from it, and it's just the idea is not making that same mistake again. Yeah, so Anthony said it, he did 77% in 1 day, yes. So like I said, people are racking up these returns, but it's, stay consistent and make sure that you know what's happening and you're able to follow your plan accordingly. And that's like another topic is when you start to look at it is, no plan will make you millions of dollars right away. So there's no holy grail. And this is the biggest thing that I tell people is, with what we do here, and you guys are all here on the webinar and you're learning things. A lot of this stuff you can learn on your own too. There's no doubt. I'm not reinventing the wheel here. I'm not providing you something that you couldn't do yourself. What I'm doing is I've packaged it. I have the experience and I also have the understanding of what you're going to be going through to guide you through. And I think that's where mentorship comes in, is it sort of gives you a cheat sheet and it sort of accelerates your learning. But it doesn't mean that you're still not going to want to try and touch the stove even though I tell you the stove is hot. Like I have a good laugh with my traders, and everyone in the groups at like 3 o'clock Eastern time or 3:30 Eastern time in the middle of the North American session. People are looking to take a trade in the afternoon, middle of the afternoon. So think of it logically. The markets are starting to close at around 4 and 5, so the banks are closing. The majority of the trades were done in the mornings for setup in terms of trade execution. And now people are looking to take a trade in the afternoon. So what are you going to do now? What's your plan? You're going to hold it into the Asian session? Where is this trade going to go? How do we know what the Asian session is going to do? What's your long-term goals? Why are you entering a trade at 3 o'clock in the afternoon? Why weren't you entering this trade in the morning when it was fresh, when the market just starting to set itself up? There's all these questions you ask, but it's because it's like, I want to trade. I feel like I'm not doing anything by not trading. And the biggest mental hurdle there is you already did something. You beat 90% of the people that are out there trading. You were successful today. You were part of the 10%. So why do you not take that as a solid, congratulations to yourself that, you beat the 90% of people that lost today? People say, like, fail to plan to fail. And it's so important. People always say that, though, like, why are you, not successful? And it's more than likely you didn't follow your plan. So the three key reasons here why you're also going to fail as a trader, and I like showing you the negative first because you can see right away why people are going to fail. Poor money management techniques, and this is something that I talk to people about as well. And a lot of people message me about the webinar as an example, and they'll say, Ted, I have $1,000. I want to give you $450, and then I need my rent money for next month, and I've got $500 left over. Do you think we can make rent money with the $500? And I take a step back, and there's two trains of thought there, and you guys pretty much will get to know me really well, and my other traders know me, and I've done some Instagram lives and things like that, so people have heard me talk before. Is Are you going to mentally be able to trade with no pressure if the only way that you're going to try and make money today is trading? Is the only way that you can do it is trading? And that's scary because essentially what happens is now you're putting all the pressure on yourself, and what you're doing is you're basically saying, um, what can I do in terms of making money, and it's something I'm not good at in terms of trading, and how can I actually go through and do what we're doing? And it's sort of like, why would you put that pressure on yourself? Why not work full time and make trading your hobby? So if you lose money trading, if you lose $300 trading, it's not the end of the world. Why would you put undue pressure on yourself just because you want freedom? Freedom comes with a price. It always does. And a lot of people don't understand that. And then when it comes here, poor money management techniques, well, now you're pressured to make all this money that may not be, you may not be able to make. So now you're pushing the envelope. You're taking bigger lot sizes. You're taking more trades. You're risking more than you should. As a rule, most people risk 1 to 3% on trades. I risk 5% max, 5, or some, maybe even sometimes 10%. But I'm aware of my situation. I'm aware that if I lose 10% today, if it's not going to crush me. It's not going to mentally break me. And I think that's the other thing too with poor money management techniques is you run your account up. Like, people run their account up. They're so excited. They double their money and they want to keep doubling it, not realizing that, mentally taking a bigger lot size might be tougher on you than it was taking a zero point 0.1 lot where you're like, oh, this is easy. I just made $10 off of a $100 account. I can buy a Happy Meal. But try doing that with a $100,000 account and being in a drawdown for $10,000 or $15,000. Suddenly now that money means a little bit more, right? And I think that is the issue that you're going to run into, because everyone's going to start with a smaller amount, but everybody wants to trade the big lots. You can't trade the big lots if you can't do the small lots. And that's really a key thing that you're going to want to take away is, and that's why I tell people when you first start trading is, you turn around and you say, I have $10,000 to trade, Ted, and people are saying, okay, this is, I want to trade this $10,000 in the market, but I have like a month's experience. Is it prudent to do that? Why would you want to risk that money when you're not that comfortable? Risk a smaller amount first, understand the markets, get used to the movement in the live account, and then add the money and slowly grow it. Don't throw in $50,000 into a trading account because you have the money. You're just going to throw it away. Throw $500 in. It's easier to lose $500 and say, okay, I still have 45 or 49,500 behind me, rather than it is to throw 50,000 in, take bigger lot sizes, lose all the money, and say, well, now I'm stuck 50,000. Is the 90-90-90 rule evident in the trading market? Yeah, I think so. 90% of the people do 90% of the things and 90% fail, yeah. How do people manage to make 50% return while risking 1%? They're not necessarily risking 1%. And the risk means that you're entering a trade where your stop is going to be 1% of your account, but then that's letting the trade run. So you get a little bit more profit. So that would be a reason there. Okay. So once again, the next one would be poor use of leverage combined with subpar money management. Once again, same thing. Trying to make $10,000 in a month with $100. Be realistic. Understand that you're not going to get there right away. Maybe you do, maybe you don't, but don't put those expectations that are unrealistic on you. In this session, can you help us understand place stop loss and stop loss? Yes, we will do all those things later on. This is mental focus right now. We will see live examples of trades as well, so everything's going to be here, no problem. And the final one right now is poor market conditions for a trader's technique and strategy. So many trading strategies do better in certain market conditions than others. So what I mean by that is, taking a small loss when the trade goes against you. Don't marry your trades. It's better to take a small loss early than a bigger loss later. And if a trade is in your favor, let it run. It's often tempting to close out a small gain in order to protect profits. But I mean, at the end of the day, if you're patient, you're going to see better returns. But also trading according to your plan. Use stops, use limits, place pending orders. Really focus on just the execution of your plan and making sure that you're comfortable with that plan day in and day out, no matter how boring it is. Okay, some questions. Okay, so let's see. People are saying, can I make 500 in 2 weeks with $100? Just depends on market conditions. I can't answer those questions. What is my habit every day that makes you in the best condition before entering the market? Confidence. So confidence comes from education and also understanding and analysis. The more confident you are in your analysis, the better execution you will have, and the more successful you will be. When you're unsure of your analysis, you shouldn't be entering a trade. You shouldn't be saying, I think it will go this way. You should say, based on what I see, this is where it will probably be going. There's a difference between willing and thinking. You really want to make sure that you identify those things. And like I said, we will go through all these different time zones, the different timing, and as you work in the groups, you're going to start to recognize people are trading during certain specific periods. They're looking for specific setups. They're focusing on their plan. These are questions that are very subjective, and to answer them all here, it just would waste everybody's time as well. How much capital do you think is best for when you begin with trading with? It's really up to your own financial situation, but like I say, you start off small, get comfortable, and then if you need to put more in, you can do that. If you hit your mark, be it pips or percentage or whatever, do you always stop? Of course I do. How can you take what the market gives you and also let it run? Well, the idea is you want to take the best part of that position, right? So if I'm looking at a specific position and you're saying, I believe it will go to this level, if it comes to 70 or 80% of that level, maybe it's time to execute and exit. But the idea is when you're executing a trade, you should already have a predetermined profit target. So that means letting your trades run, but also at the same time, maybe put in a trailing stop, see if it'll go further. So it's a little bit of both at that point. Is gold volatility? I'm not going to answer that. That's for later. We'll do that. Any readings will help with the mental side of trading? Yes, trading in the zone. Um, I see Javier make 2,300 to 1 million in just 1 month. How can you do that with money management? He didn't. He just ran it up like a madman. He's special that way. So to begin, after this webinar, students should read the book, read about Forex, and there should be mental fortitude. Yeah, read Trading in the Zone. It'll help you. Um, yeah, we have all the books. Everything will be outlined for you. Um, Before you place a trade, do you do the fundamental, then the technical? We will go through all that, and I will talk to you that. Can you use a trailing stop on MT4? Yes, you can. Okay, so another topic that I like to talk about in these groups is understanding human behavior. So this is the psychology of people. This can be applied to anything. I like to use this because as a poker player, understanding human behavior allows you to be your optimal at a poker table. So understanding human behavior at the Forex table or the Forex, trading desk will allow you to be your most optimal. So there are a lot of vices people have, right? So if you think about it, some people drink too much, some people smoke too much, some people gamble too much. And what's the thing that everybody says? Everybody says that anything, overindulgence is bad. And that's right. But anything in moderation is okay. So when you look at Forex and you say, well, Forex can be considered gambling. And if you only do it certain times, it could be okay, right? Because you're profiting. It's the same thing sort of with going to a casino. You're able to go through and say, okay, if I take my $100 and I make $25 off the 100, I made a 25% return, right? But what do people do when they go to the casino? It's like, well, they have a dream of making $1,000 from $10,000. So, you have to be realistic. So it's part of human behavior, and we're going to go through some of that right now. How exactly is someone able to use 2,300 to make $1 million in a month? Javier just over leveraged his account and ran it up trading like small time frames. Smaller your account, the more leverage, and the greater your account, the smaller the leverage. Not necessarily. It depends on what your broker gives you. How about, is it okay for us to set a trading period of maybe 3 hours a day, and if we had our daily target with 1 hour, can I carry on with another 2? Well, once again, if you hit your target after 1 hour, why are you trading for two more hours? You've done your job. If you went to work and you worked 9 to 5 and you completed your task and your boss said, stay and do more tasks and not get paid, would you stay? It's the same thing here with trading. If I make 5% in say 20 minutes or 30 minutes, if I make 5%, why am I now spending the rest of my time trying to make more money? I've hit my target. I have now the entire day to go do something else. Why am I not coming in and adjusting my plan to say this is what I'm doing? And this is, like I said, your project plan or your trading plan at this point, when we outline it, you will understand this. And if you can't understand the fact that once you make a certain percentage, you should stop, you will blow your account. It's simple as that. The reason why I haven't blown my account, and the reason why a lot of people haven't blown accounts, is because they stop and they're able to control themselves. If you have to, disconnect your computer for the day. Close your internet down so you don't even have it tempting to go on there. Make it easy on yourself. Who's my star student? I have a lot of star students, actually. So it isn't about the money, it's about the satisfaction and education, correct. In terms of what? In terms of me doing what I'm doing? Of course, it's a challenge. When I started off trading, I wanted to see if I could make other people as good as I am, and now people are better than me. It's great, and I learn from them. Is your goal a percentage of your account or daily amount of trades? It's a percentage of my account. Okay, so let's talk about money. Since we're talking about trading and we're talking about, the idea that we want to make money, this is your 4 keys to human emotions. You have envy, greed, lust, and gluttony. So if you were in hell, if you believe in heaven and hell, if you were in hell, that's where they send all these people, right? You're envious of your neighbor because they have a brand new car. You're greedy because you want more money. You lust over things, whether it's people or other items, and then you basically overindulge, right? So you go to your local donut store, whether it's Tim Hortons or wherever you are, and instead of ordering half a dozen of donuts, you want a full dozen because you love donuts, instead of realizing, hey, I can come back tomorrow and still have a couple more donuts and I'll be all right. So when you look at this scenario and you look at the first one of envy, this is probably, if you can understand and grasp these concepts, you will be very successful very fast as a trader. And it's something that comes with age, and it's something that comes with maturity. And I find that, like I said, I'm 37. I started trading a couple of years ago. I saw social media as an example, and this is important here. What do you see on social media? All these Instagram posts, all these Facebook posts of what people are doing, how much money they have, where they're spending their money, the car they drive, right? So now what you do, you start to see the same thing, and you start to say, okay, well, I see, you know, John Smith with his fancy car, and I want that car. So, you expect this emotion of envy when you want something that we don't have. So you want that flashy car. So, what's the first thing? I have this all the time. People are saying the first thing that I'm going to do when I, make $100,000 is I'm going to buy a card, or sorry, I'm going to buy a fancy car. And you turn around and you laugh about that, and I laugh too, because that was my mentality when I first started off. It's like, once I make this money, I'm going to buy all these things because that's what I've always wanted. But when you start trading, you start to realize, wait a second, this stuff doesn't really matter to me anymore. And I always laugh because people have always asked me, they said, Ted, how come you don't post all the stuff that you buy? And I look at people, I'm saying, because I enjoy it myself. Why do you want to see my life? Well, what is so important about my life that you want to see that? And it's because you want to see what you're missing out on. And instead of focusing on yourself and focusing on how to get to that point, you just want to look at people. And it's funny because you see social media, people post motivational pictures. This is motivation. If you look at my car, it's motivation that you can do it too. No, it's not. You're showing off because you're able to do it, and now you think that everyone can do this, and not everybody can. So why are you not showing them how they can do it? Why are you not giving them the tools to do that? Why are you showing them the end result? How come you're not showing them the struggle it took for you to get there? Nobody ever shows on social media the bad stuff. You never turn around and say on social media, hey, it was a great day today because I got divorced. Nobody posts that stuff, right? So what do people post things? They post things about, oh, I'm going on a trip. I can't wait to go. Oh, I just won this money. I just did really great here. I was successful here. I finished first place, right? Because it was, one of those things where people turn around and they say things like that, and you sort of laugh because nobody ever wants to post about the bad things. They just want to post about the good stuff. And it's the same thing in social media. So what are you bombarded with in social media? You're bombarded with social media of all these posts of all the stuff that you don't have. So how does that affect you mentally? Well, you now are just trying to chase everything. So you're saying to yourself, okay, well, I can turn around and I can say, um, I guess the word would be, sorry, I would say, hey, if I do what this person is doing, I'm going to have what they have. And that's the biggest mistake that you can do as a person, is look at what someone else has and say, I can do the same thing and I can get what they get. There's no doubt in my mind you can get what they get, but your path to how you get that is very different. And it's the same thing with trading. Maybe, one person is able to make $1 million in a month. Maybe you lose $500 in that month. Everyone's path is different. And the best situation for you to do is, you eliminate this negative emotion, and what ends up happening is envy basically loops that rationally we know that this isn't what we should be doing, but we do it anyways. And when people say money doesn't buy happiness, and how often do you feel that if you had extra money you would feel a lot happier? um, you know and you look at it and you say, okay, well, when I have more money I'm going to be happy. And then when you have that money, you start to realize that you haven't changed emotionally. You're not happier. You think you are, but inside you're not. Money does not make you happy. Money gives you the freedom to do what you want to do. It'll be your experiences, it'll be your family, it'll be your friends that will give you your happiness at that point. All right. Yes, yes. Oh, here comes all the Lambo comments. All right. Okay. All right, so yeah, people made a bunch of comments that. But here's the thing. So, you look at envy, and Ted just spent like 15 minutes talking about how not to be envious, and you shouldn't be envious. And it's these are human emotions. So these are emotions that you're always going to feel. Anyone who says they're 100% emotionless is, incorrect. I mean, I say I have no emotion to trading. Um, I like to believe that, and for the most part I do, but there are some times where I'm just sort of like, yeah, I just kicked the market's ass. That's an emotion. That's me beating the market up. I'm happy. Or, the other week I lost $250,000 and I was sort of like, market kicked my ass. That sucked. But the next day I get up and it's a new day, right? So that's where, my emotion sort of stops. But, with these emotions and with envious, or, with envy, you can turn around and say to yourself, it's okay to be envious at this point. Like, you have to say yourself at some times that you will feel envy at you know one of those things. But you look at the envious feeling, and what you have to do is you have to acknowledge that you feel envy when you think about what your friend has or what you don't have, and the resources to do yourself, right? So, or when you see a family member show up with a brand new car every year, or you see people wearing like that, like design a pair of shoes or that Louis Vuitton bag that you want. um, you have to admit that you're feeling that emotion from time to time and recognize it. And but at the same time, you shouldn't let yourself let envy rule your life. You or take actions to cause you harm because you're envious of that. So basically, simple thing is quit the comparison game. That's the simplest thing to do, and I tell people this a lot. Quit comparing yourself to other people. It's hard, and that, like I said, this is a mental thing. It's hard, but you only know what you see about a person, right? So if I post a picture of my cars, I post a picture of my house, I post a picture of my safe in my basement with all my money, you only see what I let you see. You don't see, my dad had a heart attack in September. You don't see that I've had to help other people. You don't see all the other things I've had to do, and this is, a personal thing. But what I'm saying is most people only allow you to see what they want you to see. If you had a full engagement of their entire life, maybe you would take a step back and say, whoa, okay, that's not something that I'm interested in. When you look at these things, and you said, you look, and I always say this and people laugh, is you see someone post pictures of cars, bottles, women, clothing that they wear, money, stacks of money. What are they not showing you? What are they missing in their lives? Because now suddenly, how come I'm not seeing pictures of their family? How come I'm not seeing pictures of their friends? These are things that, if you can dissect, and this is something that I tell people, and it's another topic, is, critical thinking is when you're in the charts, you look at the chart at face value and you're going to say to me, Ted, how come the market moved this way today? Because the chart did what it did. You have to look at the fact that um, there are other things going on beyond what you see. And this is the same thing with what you see in when you compare people. You look at me and say, well, Ted, you're successful. But you didn't see Ted up at 3 a.m. to 7 a.m. not sleeping to see the struggle that I had to get where I'm at. And that's fine. I didn't need you to see that. What I showed you was a possibility, and what I give you is I give you the tools and show you what you need, but showing you a picture of my car is not going to help you learn how to trade. It's just me showing you how, look, I spent money. You don't know where I got that money from. Maybe I have a rich dad. Maybe I have a rich mother who gave me 200 grand to buy me that car, and now I can market it as my own. Maybe I leased that car for 1,500 bucks a month. You know, there are so many outside factors, and that's why social media, especially in Forex, really skews things. Because when people started seeing me trade and me being successful, they said, well, Ted is trading demo money, right? So that's the first thing everybody says with the Forex family is, you know, you guys are all demo traders. And we sit and laugh, and you guys will sit and laugh too, because now over the next couple of months, you guys will all be part of this movement. You guys will all be part of our groups. You guys will all be making money, and you're going to sit back and say, you know what, I remember when Ted told me this, that we were going to make money and we were going to be, you know, obviously if you follow your plan and you do what you need to do, you're going to have some success. But you're going to start to realize what the best traders in these groups do day in and day out, and you're going to start to identify things that you can do that are similar to what they do. And now you're going to start to realize, I don't care what car you drive. I don't care how much money you have, because now I'm being successful on my own, and suddenly now it's happening. It's funny because my perception was I don't really care like what car I drive. I don't really care about that stuff. But the problem is when you look at things like this, you say to yourself, you know, what is real and what is not real? You know, what are you looking for? You know, are you looking for someone who can show you their fancy car, or are you looking for someone that can give you insight into the markets? You know, and they say, well, Ted, you're a demo trader and you made demo money. And then I said, okay, well, are all 300 of the people in my group all demo traders? So you're telling me everyone out of the Forex family, or before it was the Forex boot camp, they all joined. They have not said one bad thing about me in terms of what I've taught them and what I lead them. And they're all trading demo accounts. And now we're all doing this together. So you guys have all paid me $450 US. Thank you. I give each one of those traders $1 out of the $450. So today they all made basically $160 a piece. So that was their payment for the last 3 months of posting on Instagram, $160. So when you think about it logically and you just dissect things, and this is what I always tell people, when you look at you know, exactly what's happening in the world. Sorry, just answering an email. You look at that stuff and you say, what makes sense logically? And this is why I always tell people when they message me, and every one of you have messaged me on Instagram or Facebook or wherever you found me, and you said, Ted, I want to do your course, blah, 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 tell me all about it, and I give you this spiel about this, that, and the other thing. Half of you didn't read the website, half of you didn't read what I wrote on Instagram, and you all piss me off every day because you ask me the same stupid questions. How much is your webinar? Is your webinar recorded? Are you going to be there? What color pants are you wearing? What are you doing? Like all these questions that are easily answerable in Instagram or, you know, wherever you're looking, but you ask me. I answer the questions graciously. I tell you where they are. So you're telling me now all these other people that I tell you to go speak to, they're all lying for me too. There's no benefit. And you know, and that's why I knew eventually when you look at what I grew from, you know, just a small movement last June, you start to see that people respect me what I do, because you can't have this many liars. Eventually I would fall apart. Eventually someone would say Ted is an idiot. Ted knows nothing about trading. and don't take his webinar, don't do anything. But instead, I have people begging me like I'm the Apple store and I'm selling the next iPhone. Like, oh, if can I get in tomorrow? Like people are messaging me now asking me, can I get in tomorrow? And I'm saying, I put this up in January specifically for this to give you 3 months of going on vacation, taking a shit, figuring out where you need to be in life to show up for the 19th, or at least gather $450 to put in PayPal to get to me somehow so that you would have access to this. And at the end of the day, I laugh because it doesn't matter what we give people, it just doesn't make a difference. And this is where social media has really tarnished everything because, if I showed you pictures of my car, you would look at me and say, Ted, holy shit, what are all those things? And, oh, Ted's the best trader in the world. Why? Because I have a car? No. It's I show you results. I show you other students' results. These students now are mentoring other people. We have mentors mentoring new people. We have grown things because we are executing on our plans. We're not worried about what everybody else is doing. I'm not worried that, Rag, as an example, or Javier, they're making millions of dollars a day. I'm in their groups. They're in my groups. I see the results every day. These guys absolutely destroy the market more than I ever thought I could. It's just not my cup of tea. I'm happy with my rates of return. They're happy with their rates of return. So at the end of the day, last year when I started posting my results and people were like, oh, you're a demo trader, I sort of laughed because I said, you know what? And I said this to myself and I laughed in my head. I said, I know that there's going to be people that are going to come up through these trades. They're going to get better because they're more focused than I am. I mean, I'm a simple person. I'm not that smart. There's smarter traders. There's smarter people than me. They will eclipse me and they will praise what I gave them. And I didn't give you anything. I gave you the tools. I was there for you. I will be there for you now. But they took it upon themselves to reinvent and to build something that was better than what I did. And this continues every day in what we have with the Forex family. So I don't compare myself to any of the mentors that mentor out there. I think there's a lot of great mentors, but I do my own thing. You come along with me. I show you everything that I do. I don't hide anything. I don't take trades. If you want to know what trade I'm taking at 7 a.m., I post charts. I show you what I'm doing. If it works for your trading plan, it does. If it doesn't, it doesn't. I help you with your charts. I give you honest feedback. I tell you what you've done wrong. I tell you what you've done right. We don't compare. I don't care that you make $1 a day. I don't care that you make $1 million a day. What I care about is your attitude towards what you're doing. Are you passionate about it? And are you going to just focus on yourself and make yourself better? And the best way to make yourself better is passing information along so that you can now bounce ideas off of others. And the best traders out of these groups have become mentors, have passed information back and forth, have written documents, have done webinars, have taught people, because it only makes your knowledge reinforced and very, very strong. So when you look at things on social media, you just have to laugh. Like, honestly, you're going to be in our groups and we're just going to laugh at people because, show me stacks of money. Great. Like, what does it do for us? We're here every day destroying the market. And there's a testament to that. You'll meet all the traders that are in the groups and they'll tell you that. Well, I don't care what so-and-so is doing on Instagram. Who cares? Who cares if they call us demo traders? We're not. You know what? Because we don't flash money, we don't do anything. But at the end of the day, you see the results. You'll see the results yourself, and then what do you say? Well, I guess now you're part. We're now part of you're now part of the scam too. So now all you people are coming in. Feel free to start talking about all the demo money you're making, because I know that you don't want to go out to nice restaurants to eat. I know you don't want to be able to pay off bills. I know you don't want to live a life. So you're welcome to the scam. You'll get your dollar next month. Like. It's really funny when you look at stuff like that. At the end of the day, unless you're checking out, the financial statements of others, unless you have their full bio in front of you, there's not going to be any way that 100% what they're doing or what they're not doing. And they're just showing you what they want you to see. And at the end of the day, you have to interpret that as what you're looking for. The other thing when it comes down to is, stop stop valuing stuff. Stop trying to put a value on what someone else has and what you don't have. Think about all the things that you do have. Um, Focus on that. You'll realize that as you start to focus on the things that really matter to you, you have a lot more things than the next person. I go through this a lot with people because, people say to me, well, I want to buy a house in Toronto, and, we live in Toronto, and housing prices are expensive, and I can't afford a house. I said, okay, but do you have a place to live? Yeah, we're renting, a place. Okay. What about the homeless person on the street that can't even afford rent? You're doing better than that person. So put a value on what you have. Not everybody's going to want to buy a house. Not everybody's going to be able to afford a house. But are you healthy? Do you have a good family? Do you have a good girlfriend or a good boyfriend? Do you have a good husband, a good wife? Like, start working on things that matter more. Because if tomorrow everything gets leveled and you only have the person beside you or your family, we're all equal at that point. And I value the relationships that I have with people over a dollar value that I don't know how that dollar value came to. So more than likely, you probably have everything you need anyways. You just don't realize it because you're worried about what everybody else has. Appreciate the good you have in your life and you're good. And when you look at these things and, when you see all these things, the problem is, people say to me, well, Ted, I can't, like, how do you focus past this? When you look at things and you look at stuff that's happening, you have to realize mentally the brain remembers. Okay, so when you think about this, and you think closely, and you say to yourself, okay, uh, you look at your public speaking when you're in grade school, right? Everybody that did something in grade school that they were embarrassed about can probably tell you right now what they did, um, and what they did wrong. And it's funny because you always remember the bad things. So when you're trading, what do you remember? The first thing you remember when you're going to be trading is all the losses. Oh, I took this loss, I took this loss, and this went wrong, and that went wrong. But what you don't remember is the good times. Oh, I made money today. It was easy. I made money yesterday. It was easy. So you have to change your mindset, and you have to understand that your mind is going to remember a lot of the bad times, and your mind is going to remind you of, you know, things that didn't go your way. So what does that create? That creates fear. So when you're trading, this is where, people say, how can you be consistent? It's because I don't have fear. I understand what's happening. I'm confident in what's happening. And this is something you bring to the table as part of your trading, is you're saying to yourself, I have no fear of the market anymore because I know what the two outcomes can be. The first outcome is I can be profitable. The second outcome, I can take a loss. Now, if I don't know why I've taken a loss, that is a gap, or that is a leak in my learning or my education. I have to solve that. There should be never a time where you take a trade just because you took a trade. And I don't know who's on here, and I'll get to know all of you as we go through. But there are people that message me from time to time and show me a chart. And they'll say, Ted, what do you think of this trade? Should I buy or should I sell? And I say, it depends. And you'll hear that a lot from me. And people get mad at me and they'll say, Ted, you're a horrible mentor. You always say it depends. It's subjective. It's one of those things. But here's the thing. Why are you asking me what something should do? Why are you not telling me what it should do and why? And that comes from education. That comes from building your plan. That education then builds your confidence and it reduces your fear. Your fear then gets pushed away and now you become a trader. And now you don't have that fear. And your memory then starts to remember how you gained instead of how you lost, because you're doing the gains more consistent than your losses. And this removes your fear. Now, once again, that comes with time. So you're not going to jump off this webinar tomorrow and you're not going to be an all-star trader. You're not going to be like, wow, this is great. I'm able to do this and I'm going to be successful in a month. It's not. Maybe it happens, maybe it doesn't. But the most successful traders, and I'll tell you this from myself and from other traders in this group, is they know about a loss and they forget it the next minute later. They don't dwell on it. I lost last week. It didn't bother me. Why? Because I've won before. And this is the toughest part about being a trader is when you take your losses and you're a new trader, you believe trading is the toughest thing in the world and you're never going to get good at this. As you start to win, you start to realize you're doing something right. You have to build on that. And you have to say to yourself, okay, this is what I want to do and this is how I'm going to do it. And as you continue through that, that is where you build your confidence. So yes, in the beginning, trading is very difficult because all you're doing is taking losses and you're not understanding why things are happening. But as soon as it starts to click, you have to write your plan, and this is why I always say, as we'll talk, you have a trading journal because now you have to start to remember the times that you won. It's like going to the gym. When you go to the gym, you write down every exercise you do, every set you do, and every repetition you do. Because next week, your mind does not remember everything that you did. It'll remember the exercises. So like Monday is legs day or Monday's chest day. So you do your chest exercises. But you're not going to remember every week, every exercise, every single set, every single rep. Because you might have done incline bench press and you might have done 3 sets of 8 and your fourth set you did 7. So now you come back to the gym and the next week you're saying, well, I did 4 sets, so I did 3 sets of 8. How many did on my last rep? I don't know. So now suddenly you don't remember how to improve. And this is the same thing with trading. When you build your trading plan and you build your trading journal, you are documenting things to show improvement, to show progress. Because that's what I always tell people that are struggling, that are, they have a mental block. I say, well, look at what you've done in the last, say, last month. How many trades did you win? Oh, I won 20. Why were those trades winning trades? Well, I did this and this and this. Why aren't you doing that? That is the most important thing at that point is why aren't you doing these things over and over again? And this is the reason why I tell people to mark things down, to make things work in terms of your plan, in terms of your execution, in terms of your journal. Execution is the easiest part, preparation is the most difficult. And if you can follow those rules, you have a better chance of success. So, and carrying on, and we talk about. I'm just going through some of my notes here. Fear doesn't form in a vacuum. It's basically a learned response to a particular event or probability. In the case of trading, when you have a trade that goes bad, the regret and frustration, it can carry over to the next trade. And as new traders, you're going to find that, and you're going to then hesitate on the next trade, and then obviously Murphy's law says the trade that you don't enter is the one that you should have entered, and then all that happens is it adds to that anguish or that mental state of, well, I lost this trade, I didn't enter that trade because I was afraid of losing again, and now that trade ran really well, so I really don't know what I'm doing. So that's why, once again, it's important at the end of the day, you have that that journal to keep you, and that trading plan to keep you on track. And then obviously with greed, it does the opposite. You start winning trades, now you're going to start entering more trades. So, you basically, at the end of the day, with the mental game, is really understanding yourself and really doing a diagnosis on yourself. Understanding what your triggers are, understanding where you need to be, how you need to be emotionally, mentally, ready. What are things in your life that are causing you, stress or anxiety, and understanding, that there are certain things you're going to be able to control, and then there are certain things that you're not able to control. So I think that is very important as a trader, to really separate what you're doing on a day-to-day basis and really understand what's going on as a trader. So, next topic when we talk about is, so how do you control your emotions while trading? It's exactly what I've been talking about is, your education, your confidence, and your consistency. It's doing the same thing over and over again. And these are the keys. So, people say, how long did it take you to master Forex? I haven't mastered it yet. I'm comfortable with what I'm doing. But that doesn't necessarily mean that I'm not open to learning new things. I just may not incorporate them into what I'm doing because I am comfortable with what I'm doing right now. And it's the same thing with you as a trader is, figuring out what works for you and just focusing on that. It's not necessarily going to be, reading 20 books or, constantly learning different strategies or different things. The idea here is basically figuring out what works for you, having the confidence to execute, and then being consistent day in and day out with that. The question here is, how difficult is it to win trades consistently? It really depends on what your trading plan is and how are you able to execute with that trading plan. So if you understand what you're looking for, and this is why I tell people, and we're going to work on this in the next sections, is, if you're building a trading plan, you're focusing on 1 to 3 pairs, you need to learn the ins and outs of those pairs so you understand when they move, how they move. You're going to do your analysis on that, and you're going to execute based on that information. What's the strike rate for your trading plan? I guess the win rate is probably 80 to 90%. Okay, so we finished topic 2. I think we did a little bit more than what we were supposed to do, but that's okay. I've got about 10 after 1. So what I would do is we'll do this as a dinner break, a lunch break. So take 20 minutes, grab some lunch. I'm going to grab some lunch as well, or grab something to eat. I got Uber Eats coming for me. We'll be able to resume back at 1:30 p.m. So that's 1:30 Eastern. So in 20 minutes, whatever time you guys have in your time zones, we will resume then. Once again, if there are questions, I will get to them and I will answer them here. I will be on mute sometimes, just so you don't hear me chomping away on food, but I am around, so I have the question box open. If there are questions related to what we were talking about, that's fine, and I'll also answer some questions that are coming up, but more than likely they will be things that that I will tell you if they're going to come up or not at that point. So just be mindful that I might not answer all the questions just because they are probably coming up. What am I having for lunch? I'm just having like butter chicken, I think. Okay. Just answering questions in my inbox. People got the link, now they don't got the link. I just took a break for a second, sorry. What's your plan for when you have some lost positions? Do you keep trading or set off some days? Yes, I will talk about that later. Can't hear me anymore. 20 minutes. Will Dan guest speak? I don't know if he's around. We'll be back at 1:30, so 20 minutes. How do we build a trading plan? We will go through all that. Can I send you my address to send me that at my house too? No, it's only available in my area. You'd have to check what Uber Eats is available in your area. Thanks. Now I want butter chicken. Am I married and do I have kids? No, it's a little personal, but we'll talk about that after. Why do traders have multiple accounts? As a beginner, I should just stick to one account, right? Yes. Ted, what is your most favorable candle pattern? There's many. We will talk about that. I see you hate MLM affiliates. Out of curiosity, why is that? Basically because I believe they're not telling the full truth about what's happening. A lot of them do not know what they're doing, and they just parrot a lot of people, and they're not really honest. I think if people were honest, I would have a little bit more faith with them. But when people are doctoring information, auto traders and stuff like that, I don't appreciate that. I think there's a lot of miscommunication, and there's a lot of people that make excuses for what's happening, and that's ignorance to me. So I really don't like MLM affiliates. Uh, what news or information do you look for based on a trade, and how we will go about all that? What's my trading plan? We will go on that. We will go on that. Since these people are already family and you speaking, might as well tell them about Nino since it's going to come up about it anyways. No, I don't like talking about other people. Just let them do what they need to do. It's exhausting. True ECN or standard. ECN works. What happened with Zeddy? He's an interesting fellow. He's very critical of things, and he didn't like a comment that I made, and then he got really upset, and then I just said, I don't want you to come on today. It's just too much aggravation. It was more of a thing where he didn't post the whole comment, and I asked him afterwards. I'm like, why would you just post some random message? Like it really gives no context. And I said to him, I said, people just were exhausted listening for 2 hours of straight talk, and it was just he's just upset with me. So I mean, it is what it is. I mean, there's nothing wrong with the guy. It's just he just needs to sort of just like calm down, just relax a bit, and just understand criticism. People just made a comment saying it was long-winded, and stuff like that, and he took it to heart, and he just kept going on about it. And I was just like, okay, dude, I just don't want to deal with it. You like the fact that you charge a good amount, you're doing a long webinar. Yeah, that's what I try and do here. Um, do you invest in real estate or any other investment vehicles or businesses? I have a private equity firm, so we do stuff there. Okay, I'm going to be on mute for a bit. There's a question here that says, you mentioned you're looking for good traders to start working with you. Does it matter what country they're in? No, we do everything remotely. Will you talk about how to be reasonable with your Forex profits? Sure, if you need life coaching about how not to blow your money, we can talk about that. But we'll also talk about risk to reward and all the other stuff as well. Okay, how old are you? I'm 37, and how old were you when you began trading? I was 35. I worked in finance for 13 years. I have a law and finance degree. Uh, yeah, we'll talk. Don't worry about that. Um, will we be cover compounding? I don't know what we want to cover with that, but we'll cover more of like how to build out a trading plan. Like I said, there's a lot of things in the Google Drive that will give you insight into that. Does the formal education help in finance? Yeah, I guess it does in some respects, but really it's more of just the background knowledge. As you get stronger with this, you'll be able to, progress as well. But there's a lot of information on that. When do we get the Google Drive stuff? You get the Google Drive stuff probably later today. I'll send out the link to everybody who's on this webinar. So if your email is here, you'll get it and you'll be able to do that. Will you go over keeping a trading journal? Yes, I will. We also have documentation on that. We have all this stuff. So everything that you could possibly think about trading, we have that. Is there certain things that just don't work and do work in technical analysis? We will go over that as well. So there's lots of questions here you guys are asking. We got another like 4 or 5 hours. I will go over those. It's the cool thing about being me. I already know all the questions you're going to probably answer. How big is a retail account limitation until it's too considered for a broker to eventually lose their leverage? You need a lot of money. Yeah, pretty much the Google Drive is like the vault. That's what I call it online. Now you guys know it's a Google Drive. It's the vault. You'll meet a couple of traders that I call the librarians that take care of everything in there. We have a couple of really, really good people that put everything together and they're always adding content. And also you'll have the opportunity to have your own section and add content. Oh yeah, and I also pay $2 a month for that. So, you know, I have to be a good trader so that I can pay $2 a month because now we have a 100 gig limit. I went over the 15 gig limit about a month ago. So now you guys are getting a better thing here with we have more information over 15 gigs. So yeah, so I have to learn how to trade. No demo trading for me because I got to pay that $2 a month service charge that comes on my account all the time. With your great experience and discipline, is there anything specific in Forex you're not familiar with or you do not know that you want to learn? Yeah, there are some things that I'm working on. I'm trying to learn a lot more the institutional side. So it's something that I'm focused on, and I'm just really trying to understand who the big players are in the market, so that I can anticipate what they're doing. Like, there's a lot of changes that go through, but it's just more of meeting those things. Um, do I use fib? We will talk about all that, all these indicators and all this fun stuff. Have you heard of the market maker method of trading? Yes, I have. We have information about that in the Google Drive. 14 and 15 cross for EMAs. Yes, we talk about some of that. Will you go over the use of EMAs as entry points? Is this something you would recommend using or not? Yeah, we will go through some of that. What are the most important stats to keeping track of in your trading journal? We will go over that as well. And we have documentation on that as well. So you have a lot of homework. Don't worry, you guys will be overloaded with information. Okay, we're just going to get ready to get back up. There was a suggestion here. People want questions to hold them till the end. That's fine. We can do that too. I know it does break things up a bit, so if we want to do that, maybe hold them till the end of the session. At the end of the topic, we can talk about it. But yeah, a lot of these questions are going to be answered, and we do have a Q&A at the end. And that Q&A lasts until basically all the questions are answered. So if it takes 2 hours to answer all these questions, we can definitely go through that as well. Okay, so this is the fun part. This is what everybody wants, and everybody says, oh, I want to learn how to do technical analysis and charting. So I think this is where everybody, got bored on topic 2, and now topic 3. This is sort of what you think is going to be the key to your success. And this is what everybody uses. This is what I use. This is what other people use. There's variations of this, but for the most part, chart analysis is essentially, when you break it down, is the study of human psychology and the reaction of traders to changing market conditions. So when we look at charts, charts are moving for a reason, and this is the thing I try and stress with people when they start learning how to trade is charts are holistic. So there's a reason why something's happening, and the more information or the more reasons you can determine why something is happening, the more successful you will be. So people say, well, why did it go up? Or why did this happen? Or why did the next thing happen? And it's important as a trader to start to digest some of that information, but not only that, but also find it out for yourself too. Because if I just throw answers to you, it's like, once again, looking at math problems is, math is easy when you look at the back of the book. If you look at math questions and you say, okay, well, I don't know the answer, and then you look at the back of the book, you're like, oh, that was easy because I saw the answer. But when it comes to the test, and you're there writing the test, the question isn't going to be the same. And it's the same thing with trading. And I always remind people of, I can give you all the answers, and I can say this, and this. But A, does it work for your trading plan? Is it part of what you're doing? B, do you understand why it's happening? And C, can you adapt if something doesn't happen exactly the way it's supposed to happen? So keeping that in mind, when you look for certain things in the charts, and we go through a certain set of analysis or a set of rules, you're going to see that some of these things start to make sense, and people that were trading before, or people that are new to trading, they're going to start to develop these ideas or these senses of what's happening. Okay, so first things first, let's talk about time frames. So what you're doing essentially is you're using the 3 time frame approach. And what I mean by that is essentially you want to have an idea of what's happening in the overall market. You want to dive down a little bit deeper to see what's happening in the immediate market, and then you want to dive down to an entry point. And that is going to be how you build your success rate and how you get consistent. Now, when you look at our direction or our time frames, once again, you look at which direction are we going, up or down. That's basically the first step. So your best time frames for that are the larger ones. Larger time frames are more consistent, so they move slower, and you get a better idea of the overall movement. When you look at now the pattern view, so we're looking for specific candle setups, you're looking for a time frame that's 25% less of that. So as an example, if we're working on the trend of a 4-hour time frame, we would be looking at 1-hour patterns. If you're looking at 1-hour trends, you're looking at 15-minute patterns. And then basically your execution or your entry or your trigger time frame is 25% of the previous pattern. So if you think about it, if you're looking at a 4-hour time frame, your pattern would be 1 hour and your execution would be 15 minutes. So you can move that up and down according to how you're going to trade. So when people say to me, Ted, does your teaching work on all scalping, swing trades, blah, blah, blah? Yes, because you're essentially doing the exact same thing, just based on how you want to trade, right? So if we're looking at a higher time frame, you're going to have a wider range of pips. You're looking at a shorter time frame, you're going to have a shorter time frame of pips. Now, what I can tell you is the larger time frames are safer for newer traders because everything moves a lot slower. So think about driving a Ferrari. If you're first out of the gate and you take your driver's license for the first time, you pass your driver's test, and your parents at the time hand you the keys to a Ferrari, suddenly now you have a supercar and you're running around. So when you look at like the 1 minute chart or the 5 minute or the 15-minute chart and you're trying to do analysis there, if you don't even have an idea of what's happening in the overall picture, or you're not experienced enough, you can't jump to those smaller time frames yet. You can try, but you're not going to be as successful, and it will be frustrating. What I always suggest is, start at a 4 hour or even a daily, and then work your way down, just so that you understand what's happening. And nobody says you have to stick to just 3 time frames. Maybe you want to use 4 time frames. Maybe you want to use 5 time frames. But the idea is you want to present yourself with the most information possible in in an ideal situation where you will understand what is happening at that point. So here's some quick tips about analysis. Indicators, moving averages, lagging categories of derived lines, it's all mathematical data. Most indicators are lagging, and price moves those indicators. So when I talk about what type of teaching I do, we do price action, because price behavior is the best analysis. So when you think about that, the best prediction of price analysis will probably be your candle patterns. Looking at indicators, they're lagging, so they're based on previous price information. So you may not get a full digestion of what's happening. We'll go through some indicators. I'll show you indicators that I've used before, but for the most part now, I don't use any indicators when I trade. When I first started out, I did trade with indicators. I did get some information from them. Once again, when you are using multiple sources of information, you're using that as confluence. And the word confluence is essentially saying how many different pieces of information can match up with what I'm trying to do. So am I getting enough information to make a proper judgment call? Because that is what trading is. Trading is making judgment calls every day. Nobody can tell you that it's going to 100% go up or 100% go down. You have to make a judgment call based on what you've done previously, based on prior charts, based on the current market conditions, things of that nature. The next thing I want to talk about is don't call tops and bottoms. Don't try and say, okay, well, now the trend is reversing, or, oh, we hit the top, now it's going to go down, or we hit the bottom, now it's going to go up. A lot of people try and do that. You're just going to hurt yourself. The best thing I can say is, if you know that the trend is starting to exhaust, if we've been going up for like 3 days, and we're going to get to a point where it's going to have to correct a bit or reverse, set a pending order further down in that price range. So, if we're moving up all the way over into a certain direction, now we're thinking we're going down, set a pending order, because then that allows you to, in terms of, when I say like a psychological standpoint, is you don't have to sit there in front of the charts and watch it hit that price. You want to, when it hits that price, more than likely you're moving in that direction. So it's really important in that respect to don't try and say when things are going to happen or when they're not going to happen. You have to move and be very agile with the markets themselves. Volume precedes price trends. So if we look in terms of Bollinger Bands, things like that, you'll see as market slows down, as volumes slow down, Bollinger Bands tighten up, they get smaller. As the market expands and there's more volume, you'll see them expand. More movement in the price. So once again, patterns capture the footprint of the DNA and of the crowd's analysis. So people have the same reaction to patterns. If something goes up, everybody buys. If something goes down, everyone sells. So the idea here is there are emotional and psychological responses in the same atmosphere. And you have to remember when institutions are moving the markets, they're always going to be a human behind that movement. So the more things you have to take into account, or the more things you understand, the better off you're going to be in terms of the way that you do your analysis. So what I mean by that is if you understand that a 9 to 5 job opens at 9 to 5, and if you've ever done something like that, you'll know that institutions have a very set pattern. Everybody comes in at 8 o'clock to start the day. Everybody takes lunch at 12. Everybody comes back at 1. So when you start to understand just the daily routines and sort of the psychological effect of humans, you'll start to realize that there are little keys that you'll figure out, like, market moves at a certain hour because of this. We get an initial push because of this opening. This market's opening, this stock market's opening, this market's closing. All these markets are open. So when you start to understand those little things, those are patterns, and that's when we say that we see the same things day in and day out. And you'll see a lot of people from the groups talk about Instagram, and they say rinse and repeat. This is what we mean, because every day at certain times the same things happen, because it has to happen. And the reason why I say it has to happen is institutions are exactly what they are. Institutions, they are put there to do certain things. So they're there to collect money, make money, transfer money, move money. So when you look at institutions and you say, okay, how am I going to battle those institutions? You have to realize that they can't be as agile as us. And what I mean by that is they report shareholders, they have directors, they have risk management procedures. There's hundreds of people working in those corporations and those institutions. They're not just a one-man show like you or I. So, they're only going to move the market so much. We're not going to have volatile movements in an hour. We're not, unless there's a big news event. But what I'm saying is, for price to move in such a dramatic fashion up or down and sustain that, you are now changing an economy. So, when you look at that and you say, okay, what are the patterns? You'll start to see what goes up must come down, what goes down must come up. You just have to understand how that is happening, and that is the key with trading is, like I said, don't call tops or bottoms, but you're trying to get involved in where you think the best action is for that specific pair and for your trading plan. All right, so here are some major candle patterns. I know everybody sees these. I mean, really, I took this from Google, so I'm not giving credit for what I did here. I just copied and pasted this. We have a lot of books in the Google Drive, and you'll hear me mention Google Drive till nauseum, but we have a lot of stuff in there that will give you information on this. These are things, and I don't want to sound arrogant, but these are things, part of your homework, part of you as a trader. You got to learn these things to help yourself. Like, if I show you bearish engulfing, and I'll show you all these candles, I'm going to show you them. That doesn't help you as a trader. You have to go in there and practice this. You have to go in there and look for these things, and you have to figure out which candle patterns work the best for you. Maybe it's 3 white soldiers, maybe it's 3 black crows. Understanding that and then matching up with your trading plan, what you're looking for. If you've read Naked Forex, we have that book, in the Google Drive. That'll give you some more indications of what's happening with the patterns. Putting this all together with the rest of the information I'm going to provide you here, this is really going to help you. So you can see right away. We can go through them rather quickly, and what I'll do is I'll sort of highlight some things. So you have your bearish engulfing. You have an uptrend with bearish tweezers. So your second candle here is a bear. Bullish engulfing. We have bullish tweezers for a downtrend. We have doji candles, and when we start to talk about specifics, these are some things I want to highlight. Dojis aren't reversal candles. Dojis are indecision candles. So what I mean by indecision is that the market can't decide which way it wants to go yet. So when you look at certain things, these candles are just giving you information. They're not telling you that this is exactly what's going to happen. It's giving you the probability that something will happen. You know, you'll see here a morning star and then a downtrend, the shooting star or uptrend. You know, we have 3 candles here. So, you know, if you looked at something as an example on a chart and you saw 2 candles in a bull formation, more than likely the third one is going to appear. You know, you start to understand these things, and it's the same thing here in a downtrend. You know, you have your 3 black crows, you start to see that more than likely another one will appear, but this comes with experience, and as you start to get better as a trader, you're going to start to recognize these on, and like I said, you're going to choose ones that work best for you. Can you make a lot of pips on reading candlesticks alone? Yes, you can. I'm going to assume the black candles mean that it doesn't matter what color the candles are. No, you just have to understand which ones you're using for your bull and which one you're using for your bear. Can candles apply to minute charts also? Yes, we will go through that. What does the green and the red represent? So green usually represents a bull and red usually represents a bear. So bull candle means going up, bear candle means going down. So you have a bull trend, the bull trend is up, the bear trend is down. So that's there. What if you have a combination of patterns, one is saying long and the other is saying short? Which one do you go with? Yes, we will talk about that as well. It's all a part of your trading plan and what you're looking to do. All right, so this chart is from last year. I didn't update this slide, so you'll see I was still trading $10 lots. Oh, the fun times back then. So you can start to see here right away, I labeled out some of candle patterns on these charts here. How do you determine which candlestick pattern will occur next? Oh, if you could do that, you'd be in like super genius. You'd be a billionaire. You can't determine that. You can only go on based on what's happening in the market, and we will go through that. All right. So let's take a look rather quickly, and you're going to see here, number one, we have a bearish engulfing. So what does that tell us about bearish engulfing? So we had this up bull trend. So we had a bull trend. Then we had this bearish candle, which engulfed this bull candle, and then now we had a downtrend. Okay. The thing that I want you to recognize when you start to look at specific candles, this is a naked chart, and this is something that we use as a group all the time, and a lot of people in the groups, as they get more confident, they remove a lot of indicators. But right away here, we can see a lot of information from these charts, and you can just necessarily, as you get better, you're going to train your eyes to see patterns, and you can see here we have patterns where we're moving up and down, and as we start to add information to it, the patterns become clearer. So, if you were to turn around and say, briefly in terms of what we have here, and if we turned around and said, hey, let me draw a line, Ted, and let me see what you're talking about. So if we turned around and we started drawing a line across, you could start to see where things start to make sense, right? Because I'm just drawing this freehand, which is pretty shitty, but it'll do. You can start to see we had a bit of a level of resistance, right? So we pushed all the way up, we tapped that level, pushed all the way down, and then we came all the way up, down, but then we came up again. So you can start to see where, when you see major candle patterns in that instance, we start to see where patterns start to show up again in terms of we're hitting resistance area. So this is what I mean by the market tends to do things over and over again, and it's something that as you start to learn and as you start to watch the markets, you'll see that there is interesting things here, and there are things that'll happen. So now looking at our next candle, we have here what we would consider 3 black crows, right? So we have a candle 1, 2, 3. We had that downtrend there, and it continued. Looking at number 9, looks like we have what we would consider a morning star. We had our big bearish candle along with sort of a almost like a little bit of a hammer more than a candle, but maybe right over here you'd sort of look and you'd see things moving in that direction again, but it did pop back up. Number 3, you're looking at bullish engulfing, so we had our single bear candle here followed by a large bull candle, and we moved up. Looking at number 10, you basically have some dojis, so once again there's some indecision, right? So we had dojis, indecision, and then we pushed back up again. Number 5, once again, oops, yeah, sorry, no, number 10, sorry, that was wrong. These were shooting stars, so we have our little two formations, and then we were able to push up. Number 5, we have our dojis, so you can start to see where we start to move. There's even though these were indecision, we still moved down, then suddenly shot back up. Looking at number 8, once again, we have inverted hammers that push back up. Number 4, we've got basically bullish tweezers, so we have these two candles right over here, and then we have now a downtrend. Looking at number 6, you've basically got bearish engulfing once again, so you have the candle here, and then you have your bear candle further downtrend. Looking at number 7, you've got your hammer candles once again, so you're looking at similar things to push all the way through. So, like I said, the key thing here I also want you to remember is you're not going to see the exact patterns that you see in books. Don't look for the specific size of the candle to match up. These are very subjective. So what one person may see, they may not see in other instances. But it's very important just to have a general idea of the pattern. Isn't there isn't there a wrong 2-bar reversal after number 10? Yeah, I guess. I mean, there's, like I said, these candles will be subjective. The idea really is to understand the momentum of what is happening with these candles to give yourself an idea of what could potentially happen next. And when I add some items to this list, you'll see how it starts to make sense. So these are indicators, okay? So this is what you want to do is if you want to set up your charts, this is what your charts are going to look like when you use indicators, right? So you can see as an example, when we start working with stuff here, so you have all your patterns, so you have Bollinger Bands here, you have a whole lot of SAR moving averages, you have a trend line, you have your I would say your Fibonacci here. So if you put all these things together, it's going to tell you where the market's going to go. See, you have your ADX giving you information saying we're compressing. Our volume's great right now. We have stochastics that are almost maxed out. Your RSI is moving up, and then you have your BWFI index. You have a lot of information here. And honestly, if you just put all these things on your charts, you are going to be an excellent trader, and you guys will beat the market every day. Okay, so everyone start drawing this chart out, put everything together, and now you'll see all these indicators. This is how everybody makes money. Oh, I'm waiting. Here's all the questions. Oh, yeah, okay. So all my previous webinar attendees are all laughing at you guys. So yeah, so now everybody's caught on. Don't draw this, don't do anything. This is ridiculous. There is no way to interpret any information from this page. And what I wanted to show you was when we see people trade and you see people putting this stuff up on the internet and you see all these indicators and everything looks like this, you start to realize that this is just too much noise. There's too much going on here. And I always say that people laugh and people say, well, you could use indicators. And I agree. But I mean, once again, look at this chart. Look at how messy it is. How can you get any information about what's happening over here? It just basically, like people are saying, it looks like a coloring book. It is. Because how do you interpret all this data? It makes no sense. So really, what you want to do is you want to keep your charts nice and simple, nice and clean, because the cleaner your display is, a lot easier it is for you to see what's happening in the market. And that is what you want to look for. And this is what I'm going to show you today. This is a simple, clean chart. You can clearly see what's happening in the market. You can look right away and you can say to yourself, okay, from a instant, I can see that we have a low, we have a high over here and the high went across. We basically had a dip, up, down, when we go through and, you take a look, we dipped, now we pulled back up. You can start to draw, you know, another level. There's another level. So when you start to dissect your charts, you can start to see that there are things that have patterns. And as we start to go through, and I obviously, like I said, we're going to work through this a little bit more, you're going to start to see why we do what we do and how we are consistent with that. People actually started drawing. I apologize. Sorry, guys. I'm very sarcastic, and that's sort of what happens. But the first thing we're going to talk about is support and resistance lines. So our support is our bottom. Our resistance is at our top. You have various levels of support and resistance. You have a primary level, a secondary level, and all-time highs and lows. These are subjective. And what I mean by this is I know out of this group there will be probably 10 or 15 people that will send me a picture of their chart and say, is this the right support? Is this the right resistance? I can't answer that question. And here's where you're wasting your $450 US, because you're going to ask me these questions and I'm going to tell you I can't answer them for you. And it's not because I can't. It's because you have to understand what you're looking for. So when we turn around, and I'm going to show some examples as well, and you're going to see what I'm talking about, is when I turn around and I draw out support and resistance, it's to help me, it's to guide me. All these little things that you're going to be doing are things to guide you, to give you the right suggestions, and the right suggestions according to your trading plan. Yes, I will talk about supply and demand zones and how you chart them and how we should chart them. Yes, we will go through all that as well. So what I'm going to do is I'm going to pull up a chart because it's going to be fun to pull up charts. So surprise, here's a chart. Okay, so let us go into something. I pulled up these previously just so that I knew what I was going to talk about. Let's talk about this chart here. Okay, so right away, we're gonna talk a little bit about this chart, and I'm gonna give you some specifics. So this is our 4-hour chart, right? So each one of these candles represents 4 hours of movement. So you know you have 4, 8, 12, 16 hours of movement, almost a day movement. And you can see here, this is probably the end of Friday. We're on the 17th. This is the end, okay? So this is a live account. See, I have a live account, not demo. Don't ask for my balance because that is confidential. Here is some information that we want to look for. So we're saying to ourselves, okay, I want to focus in on this section over here. I want to draw support and resistance, and I want to figure out my levels. So the easiest thing to do right away when we start to draw out support and resistance is figuring out where the top is. So I'm going to take my line. So I clicked over here to grab my line. Let's draw a horizontal line. You could also go in over here. You can also say insert if you wanted to, but I use the shortcut. And now we're going to move this line. Okay. So what I'm looking to do is I'm looking to find areas where there's a lot of traffic. And what I mean by traffic is I mean where there's a lot of touches and we have a lot of movement. So if I'm coming over here as an example and I'm drawing this, you can start to see we had a lot of movement here. It hit this zone a lot, but over here in this instance, so let me get this highlighter back out. In this instance over here, we have a lot of movement where we've tapped that area, but also over here, you see where it sort of hit that and pulled back down again. So what happened in this instance, in this specific, we'll call it resistance for the time being. I know it could be a support, it could have been a previous support level, but what we have here is price in this instance, and all in this section over here, like I said, it's subjective, so we're at 113,433. We had price hit it, reject, pull back down, and then the next candle pulled down and then went back up. So we almost tapped it here the first time. You can see this little wick almost hit it, but then the next one tapped it and pulled back down. So we had a bit of a resistance here, and what that means is price was rejected and pulled back down until we eventually broke it. Now when you look over here, the same thing happens again, right? So we came up, pulled down, pushed back up, rejected, came back down, went all the way back down, pulled up, rejected again, came back down. So you can start to see as you start to draw out a resistance line or any sort of information, you start to see where it starts to make sense. Is it better to draw support and resistance lines on the wicks or bottom of close or candles? I like to draw them on the candles because I believe wicks are more of a price testing. So that is up to you. It's your discretion. So you can say, I want to draw it on the wicks. So you could say, in this instance here, this could be your support area in this aspect, and now we have a bull candle starting, so more than likely maybe we're going to push right back up. But once again, it's really discretionary, where if I looked at a resistance here as an example, this price point touched that resistance line. We broke through it a couple times, but it pulled back. So technically speaking, when we hit this area over here and we started to pull up into a bull trend, more than likely we were probably going to tap this area again, because look at what happened. We had this pull down, and then we had to start again and pulled, tapped it, and now we came back down. So if you were to turn around and you were to look at your lines as an example, a support and resistance in this specific area on a 4-hour, you see we have this push up, we drop right into that line, which is our support, we pull right back up again, which is into our resistance. We don't break it, similar to what we've done over here, and now we pull back down again, and finally we break this support level to drop right back down into this range. So what you can say at that point is essentially, just erase this. We can consider this a potential new support area. Like I said, it's subjective, but if you look all the way through, and if I zoom out a bit, you can start to see where we've tapped a lot of those regions. So when you start to look and you start to highlight things, you can see this region, we had a lot of tapping in this region, we had a lot of tapping over in this region. You can start to see where your lines start to make sense, and this is why I say it's subjective, right? You're determining what you want to look for in a chart, right? So if I turned around and said, okay, I don't think this is right, Ted, you're wrong, I don't know what you're talking about, I think that the support line, the resistance line should be up here, then that's fine, right? Because you've hit a number of areas, you've tapped it. Maybe I don't believe that this is it. I believe that this one is my support area. So I believe we have a further drop to come. It's subjective, and this is what I mean by your trading plan is now you're going to trade according to your plan, where if I, as an example, drew my support level up here, as an example, I use this as my support line, and I saw that this was a bull candle, my instincts would be more than likely we may push up to this previous resistance or our previous support, which is our new resistance, where if you drew your line down over here, you would say, well, I will take this range, in this instance here, I will take this as a bigger area because I'm expecting a further drop. So my trading plan would say I want to buy till this rate here. Your trading plan would be I will wait and maybe take a sell to come down to this area. So this is where we get subjective, and this is the reason why when I say you can't trade like somebody else, because everybody sees different things. Okay. What do we look for confirmation at the support and resistance level? Do we move down to a lower time frame to see candle patterns? Yes, we will go through that, but I'm just showing you basic right now, support and resistance. So this is lesson 101. So we'll keep these up as we move forward. All right, so I will now show you my example over here. So you can see here on a daily chart for the USD CAD, you have many touches, right? So we're looking for, the more touches, the better at this point. And what you're looking for is you're looking to see where price has the most impact at a certain level. And now I have a question, but how do you avoid having million support resistance levels on a chart? Yes, Correct. You look at what you're doing currently and you want to focus in on the range that you're trading for. So in this example here, we have 1, 2, 3, 4 lines. So I'm looking at a range of essentially 135.23 to 129, right? So these are levels that we're looking at. Now, once again, keep in mind, this is a daily chart. So when I mean daily is I mean that each one of these candles represents a full day of movement. So, if we're looking over here as an example and we said, okay, we think the market's going to go up again because we've tapped this support level and we're going to go up, you're not going to have one candle that's going to look like this and it's going to top this area. You will have something similar to this, right? So we went up a bit, we couldn't quite reach this area here, we went back down, and then we finally went back up. So you have to be aware of this information, and this applies to the shorter time frames as well. And this is where a lot of people start to get confused because they start to say, well, how come it didn't continue all the way up over here? My resistance level was 135, and now we're over at 134. Once again, it's subjective. So you have to understand your candle patterns, and you can start to see here with our candle patterns, this is a huge wick, a hammer candle, basically exhausting. And then as you start to see the next candle start, and we're talking a little ahead of ourselves, we're not breaking this previous candle over here at this point with this candle. So now we're continuing down. So more than likely, using a judgment call, if I saw this exhaustion at this point here, I know we're not going up to that point over there. For the simple reason was this gave it away. Price here was rejected very hard, and now we're going to continue down here. That is the key. And when you start to look at things, these are things I'm going to talk about as we move forward, but you can start to recognize the fact that there are hints in the market, and these are the hints that you're looking for. And this is how you become a consistent trader. Understanding that over here, as an example, this is a danger zone. There's not really any movement. We don't have anything happening here. So this is not a very good area to trade. This is what you almost have would be similar to a consolidation. So we know that we still have an uptrend, consolidating, a little bit of a push down, continuing uptrend, right? So these are things as you become a trader you start to recognize, and this is what's going to make you consistent, is understanding these little nuances and not expecting the market to continue moving up because you see bull candles, but also at the same time looking at your overall range, which is from here to here as an example, to guide you in that direction. Okay, so let me continue. All right, trend lines. Trend lines are also very important. You can see here, once again, USD CAD daily. We've done what we consider higher high, our initial trend. We're in an uptrend, okay? And these are things that you want to look for in terms of market movement. So what am I looking for in this instance? I'm looking to be able to draw a trend line that taps various regions. So we tap regions and then we get rejected, right? And once again, this is subjective. This doesn't necessarily mean, as an example here, that we've broken trend, because this anomaly, as I call it, anomaly candle, which I name my own candles, is price coming down to a point where it gets rejected, but we've got potentially premium price here. And what I mean by the word premium is that an institution has decided that they want a better price. So what they do is they hit the bottom of this area. So they drive everything down, because what are you thinking? You're thinking at this point here, it's going to bounce off the trend and going to go back up. So what do? They drive the market all the way down just to pull it back up to go up stronger again. So you have to be aware of that. So when you're drawing your support, when you're doing your stop losses and your take profits, when you start to come into this region over here, when we're close to your trend line, you should be taking profits over here. When you start to look at your overall trend, if you put your stop loss here, you're going to get stopped out, trying to go back up again, but that's okay. So what you do is now, instead of trying to choose the bottom or choose the top, you're going for safety. And this is where you become consistent. I'm going over here. Once I see that I've got confirmation that we have a candle moving up, in this daily candle, we have so much range because you can identify essentially, if we look very closely, 132.22, and then we have basically 130.900. So you have basically almost, I would say, 300 pips to get from this single candle. So if you were to do a one-to-one, you could have a 300 pip, I would say a 300 pip risk. So this would be your stop loss over here for a 300 pip reward. So you have one-to-one. Now, if you wanted to turn around and even get it better, you could take the middle of this and then have this as your stop and this as your take profit. So you still have a one-to-one. Now, if you want to get fancy, you could have 1-2. So there's multiple ways to trade these, but what I'm saying is, as a trader, you're looking for your best selection. You're looking for an edge. Trying to call this is not an edge. That's an edge. That's a gamble. This is your edge, knowing that you have this range up here that is going to be probably the top of your trend. So you probably have all this area over here to try and make some pips. So when you dive down into your deeper charts, you're going to recognize that, the shorter time frames, that there are opportunities for you to make, pips at that point and profit. So now looking back here at our charts, and we're going back to our 4 hour. So if I was to turn around and draw a trend line, if I turned around and drew a trend line right through here, you can start to see where things start to make sense, right? So this is, our bottom trend. If we wanted to say, okay, let's use this as our top trend. So now you start to realize, okay, we have our resistance line, our support line, so you can say this is, if we focus in on, let's just focus in on this section over here, okay? So we're going to focus in on this section. And we're going to say, okay, I want to trade this today, Ted. I don't know what I'm doing. What could possibly be happening? So I look and I say, okay, based on, and this is where we get subjective, so based on the current trend, so this was our low, based on the current trend of moving this direction, there is a potential that we will go up to this area over here, okay? So we were going to hit this section, 113.23 as an example. We're going to hit that area. Now, currently, let me just do this. We're at 112.730. So when you do the quick math, you're at like 290 pips, maybe 280, 270, 200 pips. Let's just make it easy on everybody. 200 pips. So what I know that at that point is, if I'm wrong with this area, and somebody else said that, we're actually at my resistance level is technically at this point here. So 909 instead of, I lost 100 pips. I know that based on that information, if I turn around and I say, okay, we're back up to this is where I believe my support, my resistance line is, I will start to monitor this side of the chart, because what I see here is areas where price has been rejected once, and this is where we get into our zones, our supply and demand zones, and I'll talk about that, and our wicks, because more than likely we may tap that area because we see like a minor area over here. We may hit that area and then pull back down. So I have to be aware when I'm trading this and I'm saying we're going up to here, that there's a potential at this point over here we may have an issue. So this is part of your trading plan. This is part of doing your analysis and saying, what do I think will happen? And then what I can say to you is, okay, fine. I don't know what's going to happen. And what I'm going to do is I'm going to now go into a shorter or longer time frame to give me a better idea of what's happening. Okay, so let's go in here. So we're on a 4 hour. Let's jump into the 15. Okay, so here we are in the 15 minutes. Let's do that. So what do we see here? So compared to the 4 hour, what do we see? We see we had a little bit of a push, but now when we jump back into the 15, now we have a little bit more information, right? So once again, if we're looking, we can say, okay, this is sort of our drop point. If you want to get technical, I would use this as my support level. So we had support at 112.14, so we had support at 112.50, 557. So now we're getting a little bit more technical because we're not in that point. But what do we have here once again? We have what we consider a potential uptrend. But what now you have to dig a little bit deeper is what has the overall trend been? The overall trend has been down. So this is where you get confused and you say, okay, well, how am I going to trade this? Well, more than likely, when you start to examine your charts and you start to see where we have potential, ranges and support levels, you could start to see that there is, if you wanted to use this as your range for a smaller time frame, but if we wanted to go back up to where we were saying we were at 113.23, 113. So we were right there. I won't get it exactly because I don't want to. You can start to see where we had price tap those areas, bounce up, tap those areas, bounce back up, and then come back and touch and then break. So what do we know more than likely is if we start to analyze and go a little bit deeper, we may go up into this region and then continue further down. So now when we go back and we start to look at our 4 hour time frame, we can see that we may have that same thing because as we start to zoom out, you can start to see now we have more information. So now on that time frame, we may have a little bit more of a bounce, but we may push further down after the fact, but we're still in this area. So when you start to analyze and you start to look at what you're doing, the key thing is not necessarily saying this is where it's going to go and this is where I want it to go, but it's understanding why it's going to that region. And as you start to dive into the other time frames, you start to get a better idea. So if I turned around and turned this into a day time frame, and I'll take away these items because it's going to get really messy in a second. So if I go into the daily, now you can really start to see where we have movement, right? So right away you can start to see we had this huge uptrend and now we had a pull down, but we're not really breaking what I would consider this region over here. We haven't touched that yet. So there is room for it to further drop, maybe come into this region and then pull back up. So what I mean by that is we went up to what I would consider a top of our region, dropped back down, came through, came up again. We're still looking across. If you were to draw, actually I'll do this a little bit better. If I was to turn around and I was drawing my resistance out, you can see where we've tapped it on the daily multiple times. So we've tapped in this region, tapped over here, we've tapped over here. So more than likely, we may be coming back down to this region, similar to how we've done that over here and over here, just to pull back up again. So like I said, this is subjective, but it's understanding what the movements are happening and where the candles are going. This is amazing. So much information. Great. One less complaint to deal with later. Okay. So jumping back over. So now we can start to see in our charts here when we're moving through and we start to see, you can see where we had the top of that range. We had the top of the range, we moved to the bottom, so we created what we call a lower high, right? Because this lower low and this was a lower high because we're in an upwards bull trend. This is a higher high, but this is a higher high because number 3 is higher than number 1, right? So when you start to look at the prices, we're at 135 here, we're number 1, we're at 131. So we've created a higher high. So when people talk about an uptrend or a bull trend, they're talking about higher highs and higher lows. So this is, a higher low because this was the lowest low. So this is our higher low, and then this is a higher low. So you've probably, as a trader, or if you've done anything in terms of research or watched videos, everybody talks about this. So once again, I'm not reinventing the wheel. I am not telling you something that is earth-shattering or something that's going to make you a superstar trader. What I'm trying to do is I'm trying to put it together for you so you understand how these things relate. But once again, it's a subjective judgment call. It's understanding that if price moves a certain way, these are the regions more than likely they're going to hit because of human psychology, right? You can see right away we have patterns here where prices hit multiple times on a certain trend line. It's just psychological. It's the markets have priced that in. So when people say the markets are predictable, this is what we're talking about. There's a higher probability that we're going to move to that section, but it's not definite. So if you can take a piece of that range, you're going to be a successful trader consistently. Okay, but in the end, if you have mixed signals to buy and sell, do you just compare the amount of signals you see in buy and sell? No, I don't do that. I don't take a trade. How many taps until a breakout? Nobody knows that for sure, but it's the idea of you probably see it in terms of timing when we see a breakout. It seems as though you always have an equal amount of contradicting variables once you jump between time frames. I guess it would make sense to trade on a single time frame and not trade multiple time frames. Correct. You're using your larger time frames for the overall trend, so you know that you're not trading against the trend. So if there's a downtrend and you're taking a buy position, you have to be careful, but more than likely you want to do analysis where you're trading with the trend. Much information, writing all this down. Is it normal that I feel confused a bit? Yes. You will feel confused. We will get you unconfused. Ted, a lot in Instagram, members of the Forex family say the wicks don't lie. What does this mean? Haha, we will go through that. Would you wait until you tap the support to get a consolidation candle before you make a trade? Depends on where I am in that range. You make this sound so really easy. Okay, so we have contradictions even in the group. People understand, some people are confused. So this is trading. So I'm glad we're doing that. Okay, so let's move on. And here we go, wicks don't lie. So this is something that I made up myself because I like to have fun with trading. And when you're bored with your life, you make up stuff. This is Shakira, so her hips don't lie, so we always say the wicks don't lie. And I thought that this would be a very good way of understanding wicks and price rejection, which is similar to supply and demand zones. But I mean, we don't use those terminologies, so when you hear us talk in groups, and you'll see us a lot in chats, I don't use a lot of those terms. I found a lot about this, like I call it like caveman trading, because I read a lot of books, but I'm one who likes to break things and fix them. So I didn't really read stuff. And I think if I had read like supply and demand zone or talking about price rejection, I would have figured this out a lot faster than what I did when I actually understood it. It was just more of watching the patterns on the charts and coming to my own conclusions. So when I said wicks don't lie, this is what I'm talking about. So this is basically Shakira, the trader, who's going to help us determine what wicks are. Okay, there's one question here. You consider a price or an area level for support and resistance? You consider price an area or a level of trading? It is always going to be subjective, and I'm going to show you why this is what we're doing here. Okay. Can I say this is one pattern what you focus on? Yes, I do focus on this pattern, and I will show this. Injecting humor to stop crippling depression of information overload. Yes, I try that. Once it hits support and resistance zone, should we wait to see which way the wicks travel before placing the trade? Yes. Um, do you find it is important? Do you think it's better to find support and resistance with line charts? You could use those. Yes, she is a good trader. Since you brought up support and resistance, what's the primary, secondary, and all time levels, highs and lows? Can you give an example? Yes, I can. When I'm drawing the dividing line above a candle, it is confusing. Okay. You consider a price or an area of level support and resistance. You consider price or area of support and resistance. It's an area. It's always going to be subjective. You can never hit it on the head. Okay. So here we go. We're gonna capture all that information all in this next section, and it's going to come apparent to you. Okay, so what do we see here? Clearly, it is a upward or a bull trend. Okay, so can everyone see that there's a bull trend here? Okay, so we're figuring out this is a bull trend. Okay, good. So we got people answering yes, and I will show you why this is a bull trend. Okay, bull trend. Okay, so very quickly, with your eyes, you have to start figuring this out. You have to be able to spot these with your eyes. You know, so you can look right away. So more than likely, we're going that direction. Okay, you have to really study this, and this is where I say time in front of the charts will always conquer or always be greater than trying to trade, trying to read. It's just sitting there, and a game I used to play with myself when I started trading was, which way is the market going to go? And I would put a guess in. I would say, okay, in this chart as an example, I would say, I think the market's going to go over here. So I would wait to see. I would come back an hour later, maybe the market's here, maybe it's over here. But then I would ask, well, if it didn't go the direction I wanted it to go, why did it go this way? What happened over in this region for it to change? And that's how I started to become a more consistent trader, because I started to recognize, oh shit, there's some like trend line here. So maybe it had to bounce off the trend first and then go up, right? So I was answering my own questions by doing my own homework and doing my own detective work, but I was playing a game, so it kept me interested. Bull is up. Bull is always going to be up. Okay? So bull means up, bear means down. So when it's a bull trend, it's an upwards trend. A bear trend is a downwards trend. So this is bull. So we're creating higher highs and higher lows. What time frame does the FX market follow? It's GMT time. You have to check your broker. Okay, so here's exactly what I just said. So you can see now as we expand to the higher time frame, we can follow a stronger overall pattern for the trades. So, you know, you notice the size of the trends and actually the range, you can make judgments on new movements, right? So we're looking over here as an example, and this is what we're looking for. So I've drawn out what we're seeing. So we have basically wicks have tapped here, pulled back down. We have wicks that have tapped but pulled back up. But then, so once again, the wick has come all the way down, tapped this area, pulled back up. Wick has come down, tapped that area, but you can see right away we're creating higher lows. So these are where we say wicks don't lie, because this wick is lower than this wick. So the wicks don't lie. So if I see that this wick and this wick are moving, more than likely the next wicks will be up over here. And what do we have? Continuation. So that is what we're looking for when we say the wicks don't lie. So when you look over here as an example, and as we start to go through, wick, 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 Wicks don't lie. So if I took a buy over on this trend line right here, my wicks are telling me as long as this wick here doesn't close over here, we should still be going up, right? Because as we start to go through, we get to this point over here where the top wick comes. Now look what's happened. This wick is now pulled back down. But what gave us that information? And more than likely that was going to happen? We had this indecision candle, but more than likely we had this support level, or sorry, this resistance level. And when we came down over here, we had a resistance level which matched up with this one. Or sorry, support level, which matched up with that one. And as we come back down, you can start to see where things start to match up with previous levels. So when you see wicks, more than likely that's what you're looking for. You're looking to see how the pattern's moving, but the overall. This wick, once again, came close to our trend line, but it didn't actually tap it. But more than likely it came down, it would push right back up because we're following the trends. We have trend lines. So you have to be aware, and like I said, it's very subjective at that point. All right. Could you re-explain how low the wicks are allowed to go? Wicks are allowed to go to various ranges, but what I'm saying is when you draw your trend lines, you might find that they tap that region and pull back up. There's no exact science. And this is what I'm trying to say, and this is the one thing that I'm going to tell you all the time is you can't solve Forex. There's not a mathematical equation that would say if I do X plus Y, I'm going to get Z. These are judgment calls, and that's what I'm showing you here. These are judgment calls. With all the information that we have here, you can clearly see this wick dropped, but this wick was higher than this previous one. So when we start to do that and you draw your trend line, right? As you draw your trend line out, if we know that this wick doesn't break this trend line, more than likely we're going up. If it breaks that trend line, we're going down. So same thing here. We broke this trend line with this wick. Now we're going down. Sorry, not that wick, the next one beside it. This wick over here. We broke that trend line, right? Because this was your highest wick, your higher low. This candle, when it started forming, started pushing down, broke that area, came over here. Now we're down. When we hit this area over here, we stopped, then we started back up again because the wick started coming back up. But when we tapped this area over here, similar to what we tapped over here, we moved back down again. Now remember, these are 4-hour candles, so this is a lot of movement to see, but it's easier to show in a larger time frame. In the shorter time frame, you would be doing this. You'd have a lot of bounces like this, and it would be doing like that. But here, this is a little bit easier just to explain for what's going on at this point. Okay, do a lot of people buy off the wicks? It's dependent on your trading plan and what you feel comfortable doing with the trends. Do you buy in a bull trend and sell in a bear trend? Yes, you do. Do the wick theory work on lower time frames? Yes, they do, but they move faster, so your range of pips aren't going to be as great, so you have to be very quick. How about the long bearish wicks in the middle of the bull momentum in the center of the screen? Okay. Yes, the candle is still bull. Yes, it finished higher than the next one, right? So when you look, if you drew your trend line over here, you're still finishing higher than this wick. That's your key. It's where your candle's finishing to give you that information. Do you ever sell in a bull trend? If you want to do a quick correction, you can. Okay. How can you tell the difference between the market retracing and the market reversing trend? You have to look at your bigger candles, or sorry, your bigger time frames. And when you start hitting major resistance and major support in your bigger time frames, more than likely a reversal starting at that point. How did you draw the trend? How did you draw the two trend line not above the candle? I was going off the wicks to give you information on what's going on at that point. So are we more concerned with the wick rather than the box? You're more concerned with where the price region is going to tap, the wicks probably give you the best idea of where it's going to get rejected. So when you're looking at wicks, if it rejects that area, more than likely we're not going to get to that level again. So basically on support and resistance, we have to see the wicks and if they're forming higher wicks or lower wicks. Not necessarily. These are just subjective examples. It's basically you're looking at where your candles are going and where we're getting that information of rejection. So do you buy or sell when the pattern is going up? You should buy if we're going up. So Ted, if the wicks break one of the three lines, it's a start of a reversal trend, correct? Depends on what time frame you're on. Usually on the higher time frames, it would be. On the shorter time frames, it'd just be a minor retracement. Yes, wicks on 1 minute are too crazy. Okay. Is it fair to say that when a candle closes and breaks the trend line, it will more likely that trend will turn around? Once again, these are subjective questions you have to evaluate based on multiple time frames. Wick percentages. I mean, there's not really necessarily wick percentages. It's more of you know, what's going on in that at that point. What do you mean by quick correction? I mean, in the shorter time frames, there might be a pullback to get a continuation. The price needs to always have energy to move. You can't keep going up and up and up and up and up without with a continuous movement. You have to pull back a bit. So that's where you get that minor correction. Please talk about your entries. Sorry, you guys are asking so many questions. When you get a reversal signal, do you have a tendency of closing the trade or waiting for it to retest or bounce? It depends on my trading plan and where am I moving at that point. Okay, you guys are asking a lot of subjective questions that aren't going to be able to be answered in this instance. You have to work on that. Would you enter the trade based on the 4-hour chart or would you revert to a lower time frame for entry point? Yes, I did say that. You work on the 4-hour time frame to see the overall trend, and then you use your shorter time frames for execution. Can you explain how to identify wicks that are gathering momentum? Sure, you can see where they're gathering momentum. In this instance right here, we had a pull down to the trend line, we had a pull down again, and now we had a huge candle push up. So that's where you would see momentum. Like I said, these are shorter time frames or longer time frames, so you don't see it as exact. I'll go into the shorter time frames in a second. Please talk about your entries and stops on trend lines. Well, I would take an entry over here or over here, and then my stop would be below that. That's what I'd be looking for at that point. So we are looking for the body of the candle where it could touch support and resistance and more likely continue in that direction. Well, it's going to continue in that direction. It's understanding that we're entering a region of price that there could be action happening at that point. When you have a reversal, okay, we answered that. Would you not trade that kangaroo tail pin bar on the 24th? Move back down. 24th. This one. Well, I mean, once again, this is a 4-hour, so you have that kangaroo tail. It basically tapped and pulled all the way down. So when we talk about zones, more than likely that zone is going to get filled. So this range over here will probably get completed, and it did. When you see what happens over here. Would you then determine Fibonacci to take profit? I don't know. It's up to you if you want to determine that. Yes, I will talk about zones in a second. You guys are asking a lot of subjective questions. Yes, we check the news before entering a trade. I will go through all of this. Yes, we will talk about all these questions. Everything that you just asked, we will be talking about. Trust me, technical analysis is just not one of these things, okay, guys? Like, I will go through everything. Let me go through the entire section and then ask me questions. Trust me, I know exactly what you guys are asking. I didn't start trading yesterday. I know everyone thinks I did because my charts look ridiculous, but I didn't. I actually started trading like Friday. So I took Saturday off. I started on Friday, and then today on Sunday I'm doing a webinar, and you guys all signed up. So let's work slowly through this. There's a progression because everything will not make sense if I jump around and answer all these questions, because you guys are jumping ahead back and forth, and it's not going to help anybody, because at the end of the day, there's a logical progression behind this. I didn't make millions by jumping around charts. Yes, refer 3 friends later. No problem. Just patience, guys. I know you guys all want to trade because the market's open in a few hours, and you all want to trade Sunday night. It's not going to happen. Let's just take our time. All right. What about the shorter time frames? So here's all the questions about the shorter time frames, and everybody was saying, oh, what do I got to do in the shorter time frames? So now we moved into the 5-minute time frame. Okay, so once again, it's understanding wicks and making judgment calls are the keys to trading profitable. And that's what I've been trying to say this whole entire time. So you can see there's numerous trends, but the range is only about 20 pips. So if you're talking about mini pips, 20 mini pips or 2 standard pips. And it's due to the time frame that you're in. This is more of a scalping opportunity. So you're going to get in and out really quick. You don't want to try and catch the entire move, but you want to catch just a piece of it. And the thing is too, you have to remember your spreads and your commissions. So maybe catching 20 pips is not profitable. Your spread is too high or your commission's too much. So this is where I'm saying, when we dive into the smaller time frames, you can start to see where we're getting a lot of information. So once again, when I look at this, you see exactly what's happening. So the first thing I've done is I've identified, my major, I would say, support and resistance, right? So this is my major resistance. I have my support areas over here, and I've highlighted this area here. I've highlighted as the range of what my support area would be. This I've highlighted as my range of what resistance would be, because it doesn't necessarily fall into that, right? Because if you look in certain candles here, if you turn around and you look at this candle, right? Or you look at this candle, it's still in that range. It's still in that area. It hit it and pulled back. If you look at this candle, it hit it and pulled back. These candles over here, right? We tapped that area and we pulled back, okay? So these are the reasons why you're looking at stuff like that. But more importantly, in the shorter time frames, the wicks are more prominent, right? So here is an example. We have a downward trend because each wick is getting lower lows, right? So this wick we started up in this trend over here, and we started pulling all the way down. And now we're moving. We get to this area over here, which almost touches our support zone, which is our support and resistance lines, but then shoots all the way back up. But then once again, we come up here, we come out a bit of the support and resistance area. Okay, so we come out a bit of our resistance zone. So, if you said this was my resistance line, I popped up over here. That doesn't mean that we're taking a buy, okay? That doesn't mean we're taking a buy, because look, the next candles, we're dropping right back into that region between here and here. So you have to be aware, and this is why I say candle patterns are important, because what happens with the next candle pattern? So you have the top of this wick. This wick is now lower than that previous wick here. And you can start to see all the wicks start to go lower each time, creating this downward trend. So this is where I say confirmation is important, and confirmation is subjective. And what I mean by confirmation is subjective is I mean maybe you wait 1 candle because you're a superstar. Maybe you wait 2 candles because you're not confident. Maybe you wait 3 candles because you're a pansy. Maybe you wait 4 candles because you're just going to wait for the rest of your life. 5, 6, 7. Maybe you take a candle over here and you ride it all the way down. So there are multiple instances in this case where you can choose your confirmation. You can say, I want confirmation here, I want confirmation there, I want 1 candle confirmation, I want 2 candles confirmation. It's what your comfort level is based on your risk management, based on your trading plan, and based on what you're trying to do with these trades. So when people ask me, so Ted, is this a good time to get into a trade? I will tell you it depends, because what are you trying to accomplish? And as a trader, write this down on your piece of paper, get it tattooed tonight on your body. You have to say to yourself, what is my end result? What am I trying to do with this trade? Before you even look at charts in the morning or in the afternoon or the evening or whenever you're trading, you're going to say to yourself, what am I looking to accomplish with my trade? Am I looking for 5 pips? Am I looking for 100 pips? Am I looking for 1,000 pips? And with that being said, those are going to be the keys to your success at that point. Okay, so there you go. So that's some information. We got some stuff clarified over here. Now we will carry on. So let's test your knowledge. Oh, look at this. Yay! We're going to do a test. Okay, so this is I spelled that wrong. I'm such an ass. This is the pound USD time frame. What's next? Take a guess. What do we think is next? So look at the chart. You know, it doesn't really say much, but looking at the current wicks and looking at the patterns, what do we think we see? So you can type it in, you can write it down, you can do whatever you need to do. You can say it to me. Okay, so here we go. Oh, we got buys and sells. So someone's right and someone's wrong. Okay. All right. Okay. Okay. Don't. Okay. Yeah. Okay. Yeah. Great. Great. Yeah. Okay. You guys. I'm not reading all the answers. I just wanted you to. Let's do this rhetorical next time, because now my question box is loaded up with buys and sells and people laughing. Like, it's not going to happen. We're not going to get anywhere today doing this. Okay. So there we go. This is why these webinars are recorded, because of the fact that they're 9 hours, and this is the reason why it's 9 hours. And someone said wait for confirmation. Okay. So there you go. So what I did here was I dissected the trade. Okay. So the first things I did first was I drew what I would consider a range. Not necessarily a range, but I drew it like where the wicks exhausted. So wicks exhausted. See that? Exhausted. So what am I getting at that point? We're now starting to see a pull up, but this is where we had this pull down. So right away you can see in an instance we come down to this area over here, but more than likely this is probably going to be your support, and more than likely this is going to be your resistance. Why? These candles over here, those are anomaly candles, and once again I use those words loosely when I say anomaly, because look what happens. Right away we go back up. So this is probably just a price grab, and what I mean by a price grab is I mean that, you know, TD or Chase Manhattan decided I want a better price to go further up. So they drove it down to get this price here to go back up. So, you know, if you turned around and you took a price, you took a buy at like this, or you took a buy over here, that's not a bad thing. Like, it's not the end of the world. As long as you have your stops in place, and, you know, you would figure out where you want to place your stops, or if you get stopped out over here, you know, you take another entry over here and you could ride it back up. That's okay as well. So, like, you know, once again, it's subjective. You know, waiting for confirmation, you know, you hit this point over here where it starts to pull back. If it pulls back here, more than likely you could say, okay, fine, we've reached this area, because I was looking at my support level. We went really through the support level, but now it's pulling right back up again. So I'm going to take a buy in this candle, but what happens is the candle drops a little bit here, and then it proceeds to go up. So you know what? You put your stop over here and say, if this candle wick closes below this candle over here, so once again, if we get to this point where I draw this wick and this wick drops below here, that means we're probably going down still, right? Based on what we've just been discussing. But because the wick doesn't fill this wick, or sorry, doesn't finish to that bottom wick, more than likely we're going to continue in this upward trend. So these are judgment calls. So this is a judgment call. An experienced trader would recognize that. A new trader may wait for this candle, because look, the wick is now higher than the previous one. A more experienced trader may wait for it to drop back down and then grab up over here, right? But you can see overall, when you pull down, we're still in an upward trend. So even if you bought over here and you're like, oh shit, I got stuck and now it's going down, and as long as it doesn't break this wick over here, which it doesn't, more than likely we're going to go up, and hey, you're still profitable because you went from over here to up to over here. You just had a little bit more of a, like a little bit of a challenge there at that point. Does it matter the time frame? No, it doesn't. Just the higher time frames take longer to develop. If the bullish wick candle closed below the bearish wick, is it most likely going to drop lower? That would be impossible. You can't have a bullish candle drop below that. More than likely, it wouldn't happen. Which side of the wick should we see? The last three candles, there's wicks above the candles. Yes, but you're in an upward trend, so you have to recognize that trend at that point. So what you're looking for here is, so you see like these candles are up over there, but we're still pushing. You're still in an upward trend, so we're still moving up. It doesn't necessarily, it just means where price is rejected, we're still in an upward trend. It doesn't necessarily mean the top here. This top section would matter more for what you're looking for in terms of your take profit at that point, because we're in an upward trend. So if we close below the green line, it would most likely go down. In theory, yes. If that's what I was banking on from a risk management standpoint, I would close at that point. Okay. So let's carry on. And so there you go. So guess what showed up next? So now you're never going to hit the top of your bottom of your range. But what you can see is in most instances you see complete pattern. So it went down and then all the way back up. So remember from our previous point where we had this candle right over here. So everyone focus on this candle here and this candle over here. Okay. So when we see what we've done, looking at where our resistance line is, and when you look at the next slide once again, so we've focused on those two candles. So we had our candle here and this candle here. Look what happened. We hit this top and then we started to pull back down, but we still were in that trend. But what I'm saying is more than likely we're going to come to that area. So if you were to turn around and say, okay, I'm going to take a buy over here or a buy over here, and I'm aiming for this section over here, if I was looking at this range, if I took a take profit point here, more than likely you would probably hit it just because of what's happened in this instance. Now, once again, this is subjective. This is not something that will happen constantly, but based on market pattern, based on sort of structure, this is what you're looking for. You're looking for these quick hits, and this is the idea behind when you're looking at wicks. So what are we looking at for wicks? So you're looking at exhaustion of candles either near support or resistance area. It allows us to evaluate if the trend will continue or switch. Bigger wicks represent more power in the move. So, when you have a big wick push up and then pull down, chances are we're going to be moving in that direction. Don't guess. If you're not sure, it's not a trade. And the longer the time frame, the more development of the wick will take place. So you know what? When you're looking at like a 4-hour candle, it may pull back for a while before it starts to move up. And that will form your wick. So when we go back into the magic of television here and we go into our daily range, this as an example here, that took a whole day. So for the whole day, it dropped into this area, pulled all the way back up. So knowing that, and knowing that we went from this over here, came up over here, more than likely this candle is now going to be a bull candle up to this region. So you see how this is USD JPY, and we were talking about the pound US dollar, but you see how that dropped and then came back up into this area again? So if you turned around and you said, okay, Ted, I don't believe a word you ever say because you just talk a lot of shit and I don't know the future. If I waited for this one and I said that this is going to be my resistance area, and we went all the way down here, and I said that this candle was the power, and then this is my confirmation candle, more than likely I can take a buy in this position here. So this one right here, ride it up for a bit, potentially to this area. And look, surprise, we hit the same port again, okay? We had a little bit of trouble because it dropped back down, but it didn't drop back down to this level here or to this one over here, right? So once again, when you look and you say, okay, fine, we started here, I'm taking a sell all the way down to here, it tapped this area, and now we're going back up again. Oh, it exhausted. But this exhaustion, it didn't break. It kept going up. Now, when you look over here, this exhaustion here and here, it didn't break again. And so when we zoom in, which I should have done before, sorry. Give me a second. Okay, so here we go. So we've zoomed in, and what we're looking at once again is we're looking at this magic here, right? So we're saying, okay, Ted, you told us if it goes up over here and it taps this area, see lots of power with this candle here, it's going to drop back down. And I say, yes, probably it is. And then it drops back down a little bit more because it's going to go to this area over here. See, we've got like a little bit of region here, a little bit of region here. Okay, so it's tapped this region here a couple of times. So we've got like these two tapping things here, and then we have this one wick where an institution or some big money decided to move, and what we did was we basically turned around and it pulled back into this region, which was over here. Okay, pulled all the way back up. So this took a whole day, and then we said, okay, I'm going to take a buy on this trade. I took a buy. Is it going to get to this level again? So you can see we're always in that little area again. Are we going to get to that area again? So if I took a buy, I would take a buy, fill this candle, pulls back down. Uh-oh, I got problems. I'm still in profit. So this is, this is your profit. You still have profit. This could have been your biggest profit. You pull down. Now you determine how big of a trade you want to do. I would turn around and do that, right up here. Now when this starts to happen here, I can exit in any region over here because now this is a huge bear candle and I don't know the future that it's going to actually go up that way. So I'm happy taking that trade. Now, when you look and you see the indecision candle, you can say, hey, look, this candle's happening, this one's happening again. This wick over here is, higher than these wicks over here. So more than likely we're going to go up. And as soon as we pass it, now we're touching this area, and I can say, okay, we tapped this. I don't want to be part of this trade anymore. I'm out. If you're adventurous, you would have rode it all the way up here, tapped that, and you could have said, okay, well, how do I know it's going to go to that area? Because what you would have done is you could have easily said, hey, look, if I'm looking at ranges, I could say, look, that one. So for me to be safe, if I looked across if I looked across the charts, I'd be looking at this because it broke this. So where do I think it's going to go? More than likely over here. Is it going to go to here? Probably not, but there's probably a high probability it's going to be in this area here. So maybe I would take I close my position at that point over here at this to say that that makes the most sense at that point. And then sure enough, when you go through and you start to look, you see, and now we have that drop all the way back down. So more than likely, maybe we're coming to this level again. But this is the reason why the patterns are just always doing the same thing. It's understanding where you want to be in your trade and executing accordingly. That is the most important part when you're looking at stuff like this. Bullish engulfing on February 25th. February 20th. Sure, that makes sense. Why didn't it cover the range of the wick? I don't know. Just did what it did. It's subjective. We don't know why the market does what it does. We can only understand what we hope it can do in terms of our trading. That is the most important thing. Excuse me. Okay. All right, so here are samples to help reinforce the point. because Uncle Ted, I still don't understand what you're talking about. See, you guys think that this is all just fugazi, like I just come and talk out of my ass. I have all this stuff for you guys because I want you to succeed, and I've already answered all these questions thousands of times before. So that's why everything sort of works in what I consider a progressive format. So here we go. So we have USD CAD weekly, okay? So once again, the focus here is essentially the range over here and over here, right? Because this is where most of the action is happening, this section over here. This, like I said, WTF, this doesn't exist over here or over here. So when you're looking at charts and you see stuff like this, that is not an indication of stuff that's going to help you. That is stuff that happened that we don't know why it happened, how it happened. There could have been news events. There's information there, but it doesn't match up with the overall, I would say, as Rakil calls it, the cosmetics of the charts. This is just anomaly. So we have a messy trend line, but we're still moving up overall because, as you can see here, all the way up, we have lower lows and higher highs, or lower highs and higher highs. Okay. Oh, now everyone thinks this is so easy. See, this is what happens when I give you cheat codes. Everyone thinks this is super easy. See, that's not. I told you it's going to be hard. You're going to cry afterwards when you realize it's not as easy as you think. It's just easy because you're seeing the end. All these questions you're asking me, I will give you answers to. Please do not ask me questions. Let's learn this. Okay. So here we go. So now we're going to dig deeper into the 15-minute time frame. So as I've stated, the trend is your friend. So USD CAD would have been a buy position the entire day. Okay, so we looked at the higher time, we looked at the daily time frame from that previous chart. And when you're doing analysis, you have to anticipate the move and understand the wicks. Okay. And once again here, people ask me these questions. They say, but Uncle Ted, the dumb wicks on a bear candle, right? Because that's what everyone's saying. And, look at these dumb wicks on a bear candle. But here's the thing. Look at the minor wicks and look at these levels that we're creating, right? So we have an overall uptrend, but we have levels, right? So it goes here, 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 right? So as you start to draw out, your minor zones, we still have an upward push. So it's important that you look at everything holistically. And when I say don't trade off your phone, because you can't see this stuff on your phone. You won't be able to look at it as clearly on your phone as you do right here on a chart and on your desktop or your laptop, because you're able to see more information. So we're looking from the 17th of November all the way to the 18th, but in a 15-minute time frame. So you can clearly see we had an upward trend. We bounced around. We had a support level near the bottom, but we kept pushing all the way up. And these are the keys to your success, is these wicks always constantly pushing up to the next level for you, and I've highlighted them here. All right, so let's dig a little deeper because, once again, people don't believe what's happening, so now we're going to go even further. So, once again, when looking at wicks, you have to figure out where you are in the trend or the move. So you can see I've drawn mini support and mini resistance levels to give you an idea of what's happening. And what I've done is I've highlighted some key zones where we pushed up and we broke the zone the first time, right? So if you look closely, once again, here is like our lowest support for the 15-minute time frame, okay? So you see we had a little bit of touches. We almost had a touch there, but then it continued on, but we never had a touch again in this zone. So this would be your lowest support area. And this is something you can mark out all the time when you're working on your charts, but more than likely we went all the way up, we tapped, went back down. So I'm taking, at this point, if we drop here, providing we don't go into this region here and we don't break this support level, I'm taking a buy, because more than likely now the trend is starting to move in that direction. Oops, I jumped further ahead, wrong button. So that's your key. So when people are asking me where do I put my stops and where do I put my take profits, I'm looking to make sure we don't break those those areas where, you know, right here, this is our lowest point. If we break that, more than likely we're going back down again, but we never do. We continue to create a higher low. And you can see as we start to move all the way up, that's exactly what we're doing. So once again, another key point is trade what you see, not what you think. So remember, support our ranges, you know, traffic moves through. In most instances, they will stay in those ranges. So now couple this with the USD gaining strength. In this instance, I know a lot about USD CAD. So there's a minor fundamental piece in there, and that's what I'm saying is you'll learn about that and you'll start to study that, and I'll give you resources to study there. So don't ask me where to get this information. It's all in the Google Drive. We have that. You have to be able to make these judgment calls, right? So right away here, it's a perfect example. So we saw what was happening. This is a USD CAD 1 hour chart. We have this range over here, and now we're pulling right back up. But we come to this bottom point, but as we start to move, this wick is now higher than that previous wick. This wick is higher than that wick. But more importantly, this wick comes into this zone again that this previous wick did. So these are little points, and these are the things that you have to be mindful of when you're trading and when you're analyzing charts, are these tiny little nuances, because the more detailed you are in your charts, the easier it's going to be for you to trade, because of the fact that you're looking for little things. You're a detective. You have to map out the crime scene. This is your crime scene. This chart, you have to figure out what's going on and why it happened. The more times you ask why and the more ways you're able to solve why, the easier trading is going to become for you. Yes, okay, so the second tap on that support, the bearish candle went further down. Yes, it did. So we would pull out of the trade, but what I'm saying is where would we enter afterwards to see where that's going? And plus timing was an issue at this point. Okay, you guys are asking me questions once again. Day trades or you carry overnight? These are day right now. Where can we go to find news? I will tell you all that. Please, one at a time. We're doing technical analysis right now. Technical analysis is just analysis of charts. There is no fundamentals here. Fundamentals is news. This is technical. Technical is just trade what you see, not what's going on in the world. There could be a nuclear war going on. You're still trading. You're looking at the charts. That's all you're doing. All right. So here you go, putting it all together. So see, once again, you guys jump and ask me these questions, and surprise, I have the answers for you. So this is now your 4-hour chart. So we went from the 1 hour to the 4-hour, and you can see exactly what happened. So the question earlier was, well, you know, that went further down, blah, blah, blah. It did something. Here you go. Here's all the information. So looking at item number 1, and you guys are going to get used to all these charts because this is how I draw out my charts. Item number 1, patience. Wait for it to hit support. The candles will tell you where to go. See, this is noise. So this lower region, which is lower than these two regions, it didn't sustain. These are just price movements going into a lower impact zone. We're okay. We don't have to take buys here. This is the magic of the wicks, right? So when you see the next candle closes bull formation, right? So when you see what happens here, bull, and then the tiny wick is your key. So that tiny wick starts the trend to go up in the space, because here is not as low as here, which is noise we've discussed, but here matches up over here and over here. So you start to recognize zones as regions where price tap, and that starts to propel it up in here. So we have a zone here, we had a zone here, pushed all the way down. Zone here, pushed all the way down. Zone here, pushed all the way down. It doesn't happen all the time, but in most instances it does. So you just have to be aware of that. Sometimes here, look, you can say, oh, well, Ted, you're wrong because it's zone here and then it went back up. Right, that can happen. But what happens here is now we go further down. So this is probably accumulation in terms of, you know, getting a I would say, consolidation, and then we would move further down based on the times. 16 GMT is 9 a.m. So you know what? We went ready for the market, and the market started to push all the way through. So these are little tricks that you're going to learn and that you start to focus on, and we have a lot of documentation on this. So if you don't understand it right now, it's okay. We can review this again. I have other webinars that talk about this, but these are sort of your bread and butter points of how you're going to analyze your charts on a daily basis. Okay, how far back in time do you consider relevant? 20 days. Yes, there's head and shoulder patterns, there's tweezer tops, there's M's, W's. I don't go through any of that stuff. That's not important to me. I don't care about those things. Those are, however you want to define those patterns, I look at it as the candle going up or as the candle going down. How is it doing? Why is it doing that? That's all you're doing at that point. So you're making decisions based off of past patterns in the wicks. As in the wicks touch the resistance line, they tend to believe it go up again. More than likely, yes, because it's going to fill that range. There was a downtrend, yes, but we saw that it went up again afterwards. And once again, these are trades that are taken just for a certain time frame. This is not an overall trend. All right, next one is zones. Yay, zones. All right, so zones. Everybody wants to learn about zones. These are supply and demand zones. And these are things that what you're looking at in terms of how things are going to react to certain prices. So what I mean by that is where price hits a certain point, gets rejected, and pulls to the next area. Okay? So like I said, simply put, these are your supply and demand zones. There are tons of videos on YouTube. Go and watch them if you want. We have a book in the Google Drive called We Don't Need No Stinking Indicators. It's like 36 pages. Quick read. It will give you information regarding this as well. And exactly what I said. Essentially, zones are where price pushes hard in one direction for a single candle, then pulls away in an opposite direction. Okay? And that basically sets up your move. Would you enter at the close of a candle short reporting resistance? It's all subjective. I can't answer when I would enter. You can't answer those questions. Guys, don't ask me any more questions on entries and exits because we don't have a trading plan yet. You have to build your trading plan first, then we talk about entries and exits, because I can tell you I would enter everywhere. And how does that help you as a trader? It doesn't, because your trading plan is different than mine. So what I'm trying to say is when we do this and you guys keep asking the same questions, there is the system. Let me go through the entire system. Finish the whole entire webinar. When you guys have questions, we will go through them again, okay? I can't repeat that enough. You guys keep asking questions that are jumping topics. Doesn't make sense. All right, so here's an example of our zones, okay? So once again, we look at this and, we can say right now this is a relatively current zone. This is from this last week. This is what I'm focused on. This is what I'm focused on. Okay, so you can see it's not the greatest picture, and I'll go into an actual chart in a second, but you can see where we tapped into this region. This is a region, and we pulled all the way up. We tapped into a region, pulled all the way down, tapped into a region, and right away we pulled all the way up, tapped back into that region again, okay? So when we go and look at a specific chart, which I will bring up now on MT4, let's go into our quick 5-minute charts, okay? So here we go. What's a good thing to look at? All right, perfect. Look at this. All right, so here we go. So I'm going to do this, and I'm going to do this. Yeah, let's do that. All right. So here we go. So I went into an editor to give you a better idea of what I want to look at, okay? So let's go down over here. Let's do that. let's do this. Okay, so let's just focus on this area a bit because I want you to understand the concept of what's going on in these situations. Okay, so once again, these are zones that I've identified. They don't necessarily mean anything right now. So don't ask me, how did you know that was a zone, or how do you know, excuse me, that wasn't a zone, or can't this be a zone, or can't that be a zone? Um, it's not. It's subjective, and I'm doing this on the fly so that you can get an idea of how I analyze things and what I'm looking at. Okay, so with a zone, I'm looking at what I would consider the biggest areas. Okay, so when you look at stuff like that, you're looking at sort of the biggest wicks, right? So this is a perfect example of a huge wick, right? So you know, if you looked in over here, we have like a huge wick. This software is also available in the Google Drive, so you can use it. It's free. I got it from a special place called the Internet, so you can borrow it. But what I'm trying to say is, when we have these zones, what we start to see is we start to see essentially a tap into this region, right? So we've tapped. The wicks also help you because now this wick is higher than this wick, right? So you start to understand what's happening with wicks, but more importantly, zones, right? So we knew that this zone touched this one over here, but what happens is we get this huge pull up to this area, right? So we're back up into that zone. So, you know, once again, this is a 5-minute chart. So this is going to move fast. So this is 5, 10, 15, 20, 25, 30. This is like a half an hour of movement, right? So we've moved up, but what I'm looking at is we have this zone over here. So if I turned around and I extended that zone, because that's sort of what I would do, is I would look for all this area over here, right? So I don't know that this exists yet. This doesn't exist yet. So none of this exists. This is future, because all I'm focused on is this area over here to say it's going to go up. But because we had such a big movement there to push down, more than likely we're going to come back up to that zone there. And this is 5-minute movement, so this is not a lot of space, but it's enough to get you understanding how those areas get filled and how those ranges get filled. So now what I'm looking for is this key area here, which matches up with over here. Because what this is this is your consolidation now. So when you look at consolidation candles, these are your consolidation candles. See, they're not really going up, they're not really going down. But my trend is up. So more than likely, this consolidation is going to get me up into this zone again. More than likely. It's not 100% proven, but because these wicks are higher than these ones, and these wicks over here are higher than these ones, more than likely we're going to see that movement up until this zone over here. Now also, bear in mind, when you keep track of your various time frames, you can see here at this point you're looking at like major movements in the currency. It could be the Asian time frame, so you get a lot of movement in that specific area. So that is, you know, when you're looking at your first zone. Okay, there's a question, but you only take the upper top and bottom wicks, not the one under beginning the first zone. Not really, because I'm looking to see the candle that forms afterwards. I'm looking to see that that's the continuation of that push down. The next candle could be part of your zone. It doesn't have to be. It usually isn't part of mine. I'm looking to see the candle that takes off afterwards. That area of consolidation would be considered exhaustion. No, it's basically price accumulating. Wick exhaustion is equal to the tap in the region, which is a reversal, not in the most cases, but it does help you understand that there is a possibility that there is a reversal coming. You have to understand how your wicks are forming at that point. Okay? So you can see, and then if we zoom out a bit, that wasn't too good. Let me do this. I'll stop that. So if you zoom out a bit in this instance, you can see how we turned around and we pulled, and this was like the lowest pull, but we created a higher high off of that piece there. We pulled, but we never broke. Let me do it better. This being the lowest, you can start to see as we start to pull up, you can start to see we never broke this zone again. So even if you took a buy, eventually it would come back to that level again. But the idea is these are short, quick trades, and you're reaching zones. So you can say, okay, this is, I would say this would be the top of my zone at this point because we've had those are those two wicks. We've pulled all the way up through. I'm closing my position there, and more than likely we're going to come back down to this zone again. And like I said, this is from, it's basically a few hours of movement because we're on a 5-minute chart. So we're 10, like basically almost 8 hours of movement, but you can see in that point, that's exactly what's happening there. So we can, yeah, so if we turned around and we went through and we looked over here, you can see where we tapped on the hour, but we never really broke this area here. And then we finally came back down again, but it came up, pushed right back down. There was consolidation. So once again, if we zoom in, we have a bunch of consolidation here. We had that one pull all the way down, touched, but it never touched again until recently in the last couple of days. Ted, do you watch the charts to wait for an entry or just check the when you get to the zone? I do a little bit of both. My trading plan in the morning is to execute on what I currently see because I can get in and out really quick, and I will talk about that. Zones are like magnets. Yes, they are. Price always tends to go back to them. Okay. All right. So here we go. So once again, talking about USD JPY, 4-hour. And what I've done here is I've drawn out our zones. And what we're looking at is, you make a note of the support and resistance area. And what you're looking at is first, like the demand zone, which I've drawn, is a little bit wider, just because you had a lot of wicks coming into it and tapping it and coming back out again. So, when you look and you say this is your demand zone over here, you pulled up and then basically you saw that movement where you're coming back into this range, and then you can see sort of the aftermath, right? So we're at basically 112, 580 or 894. So this is where we were because you can see that candle there, and this candle here matches up with these ones. And then you can see as soon as we tapped into this region here, we pulled right back up again. So once again, this can act as a minor support and resistance area, so be careful because it might not necessarily move as much as you think it's going to happen, but it actually just pulls all the way through. We had a consolidation and a continuation drop into that zone. So you have to be aware of where your zones are. And once again, when you start to look, things start to give away. So this is your lowest support. Suddenly now this wick is higher than this one, so you can say that there's a mini trend starting at that point. We're starting to pull back up a bit. But the overall trend probably was trending down. But once again, depending on your trading plan, you can then get pips on either direction. Why did I draw that region? Okay, I just explained why I draw that region. So it's a little bit bigger because I'm looking at various wicks. So all these wicks over here are tapping that region. So that means that over here in this specific area, there's a lot of traffic. So there's a potential for a lot of traffic in this area here because you have a lot of price in this area specifically. And then it pulled out of that region. So I'm expecting to pull back out again at that point. Price is stalling in that area, yes. What time frame is on the second chart? It's still a 4-hour chart. How do you know how wide or close to draw your areas? It's subjective. It's still the same. They're still the same for. That is consolidation. That is a consolidation area because we didn't have a lot of movement and then it pulled down. So there was a little bit of consolidation for the downward trend before it continued on its way, because that was basically about 16 hours of movement at that point. Okay, yay. All right, so here's another area. This is our gold. We're talking about gold, and this is just some information that I passed on to everybody that I'm passing on to you guys now. So, we had a drop from, what would I consider like the 1260 area, because you can see right away, and this was back in March, the beginning of March. You can see right away, this was a zone that we hit, and we tapped it multiple times. So we tapped that zone multiple times, we pulled, and then we tapped into that, which basically was this consolidation area here, and we continued then back up. So my judgment call was we may come back to this area again, or we may then come to this zone because of this wick here. So once again, I don't know the outcome. I don't know what will happen, but currently we're at, like, I think 1230. We're in this region over here. So more than likely, we're starting to come into that area here, or even in this zone over here. So once again, it's subjective, and what you need to understand is what you trade what you see. So if I saw that we weren't moving up anymore, chances are this is now going to tell me that we might move up for a bit, but more than likely we're going to go back into this zone over here because of the push that we had originally to get this trend going, right? Because when you look closely at the trend, this is your giveaway, because this one, and now this one are all starting your trend, right? So if we were betting on this, we would say maybe it would continue up to that area again, and we would have issues over here, because we're looking at, now we were in February the last time we came there. So right now we're at, I think, 1230, 1233 actually. Let me just open the charts and see. Sorry. Sorry. Yeah, we're at 1230. So at that point, we're at 1230, and this chart right now, we're at 1248. So we've basically come down into this region over here. So what ended up happening was we tapped and went down over here into this region. So we're coming very close. We've hit this zone. We're coming very close again to this zone. So that's what you're looking for, and to give you judgment. So now, based on candle patterns, you would say, are we going to continue back up, or are we going to continue back down into that zone before we then go back up again? And that's what you're looking for in the overall. Yeah, so it went down to 1196, right? So it dropped all the way down, and so it basically came into another zone in this instance, and then went all the way back up again. So you know what? So we went here, and then we went all the way up through again. So there you go. So I mean, it's very subjective in how you approach this, but once again, you're building out these zones and you're building out the movements based on your overall trading plan. Like if I'm trading off a 4-hour chart, I'm looking for maybe, between, I would say, 5 to 600 pips, or 50 to 60 standard pips at that point. So 500 to 600 pips. Where if I'm trading on a 15-minute or a 5-minute plan, maybe I'm looking for only 5 or 10. So it's really subjective in what you're doing with your plan. So you have to understand what frames you're going to work off of, what your pip quota is, what your percentage of return you're looking for. All of those things have to factor as you start to do this. All right. So now here is your indicator list. So we're going to talk about indicators now, and all the fun stuff that come along with indicators. I think you'll find that these are going to help everybody, and you guys are going to understand that there's so much to learn about it. and so much to understand. So, you have your Arun, you have your directional price movement, you have your McLaren's, you have like a whole bunch of stuff here. It's awesome. There's so many indicators that you can use, and if you want to, you can throw them all up and just have a big old Christmas tree on your MT4 charts or your C Trade or whatever you're using. So now the key with this, and I think this is something that people start to do and they start to ask is like, what indicators can I use? And like I say, I'm not a big fan of indicators, but at the same time, they can provide you confluence. And as a new trader, maybe you want indicators. I used indicators a bit when I was in a new trading. It helped me a bit, but it also showed me that sometimes indicators don't give you the best information. And it might be something that when you start using indicators and you start using candle patterns, you start to realize that indicators aren't always going to help you. So indicators that I use, but not all at once, I've used MACD, EMAs, Bollinger Bands, RSI, stochastics, Fibonacci, and volume. So all those questions earlier about do you use Fibonacci, do you use this, do you use that, we're going to talk about that now. There's essentially two types of indicators. I mean, you basically have your momentum-based and oscillator-based. So momentum being your averages, oscillator being the way that the price moves. So when people have more than one or two indicators, it's really something that is not going to help you as a trader because there's only two real types of indicators, which is oscillator and momentum, but each of those indicators, or sorry, those groups of indicators all tell you the same thing but in different ways. So if you're using like RSI and Bollinger Bands, they're basically telling you the same thing. You're using RSI or stochastics, they're basically telling you the same thing. They're momentum indicators. They're going to tell you when things are overbought or oversold. So really, to have a Bollinger Band and an RSI open doesn't make any sense. You either have one or the other. And now we'll go through and we'll talk about what we're doing here. So MACD, basically, any indicator that you're going to have in your charts, and you want to use them if you do, is use the default. They set them up as default because that's essentially the easiest way to use them. If you change time frames or you move into different time frames, you can read up on how to change indicators to get better signals in terms of what's happening. But once again, you're only using that as confluence. Your candle patterns are always going to give you the best information overall as you start to look at that. So when we look at the MACD as an example, right? So I mean, this is a signal line. It's a bearish signal, which indicates there may be a time to sell. Conversely, when MACD rises above the signal line, the indicator gives a bullish signal, which suggests the momentum of price of the asset is likely to experience a momentum, upward momentum. So what you're looking at is you're essentially saying, okay, when there's a crossover here, we're going to go up, and then when there's a crossover over here, now we're going to go down. So that is essentially MACD, but that doesn't necessarily always happen in the charts. So when we start to look, and here's an example of a chart with MACD, the candles sort of start to give away what's happening before it actually happens, right? So if you start to look at a crossover, so we're looking at this crossover over here in an upward momentum, you can already see that these candles over here, as an example, have already started that trend. So if I go back and I look specifically at this candle here, MACD still hasn't crossed over yet. We have an indecision candle. That's when MACD started to cross over, and we have a continuation up. So it's safe to say if you did a crossover here, you would be okay for it to do what it needs to do. Now, alternatively, the issue becomes, and the issue arises when you get situations like this, right? Because look what's happened now. We dropped, but we don't have a crossover, but now we're going back up again. So you see where indicators can sort of steer you wrong a bit, and you really want to use candles. But more importantly, if you turned around and said, okay, well, I'm going to draw out, just a mini support and resistance, if I did that and I turned around and said, okay, that this is probably another support level, I can see that when I touch here and then when I come back over here, because this indecision candle sort of matches up with this range over here, if I start to see a bull trend, we're going right back up. If we touch that area again, we might be going back down. So you can start to see how support and resistance really works fundamentally in a technical analysis standpoint to gauge where you are. Where you had all this information here because your MACD was essentially topped out, like this section over here was topped out, but you don't know how far you're going down until you actually map out your trade and say, okay, this is the region where I think I'm going. And once I get candle confirmation, now we're moving back the other way, because there's nowhere where we're going down here, but MACD is still moving down. So how long are you going to hold this trade for MACD to do a crossover for you, when if you look at the overall trend, we're making higher highs and higher lows, right? Because you can see here we go up, down, up, and we're still moving up in that direction. But MACD is telling me I'm moving down. It's only till once we get to this crossover here where we actually break trend that we see that full push down, which comes back to this area over here, which is basically your crossover again. So you can start to see as you use indicators, and like I always joke about this, and people are like, oh, Ted, you don't use any indicators, and I laugh at people that do, because if you're not doing the overall holistic analysis, and what I mean by that is, if you're not understanding your candles, you're not understanding your support and resistance ranges, and your, all those different areas, it can really mess you up, because you would be sitting here, waiting for this thing to go down, and it's still moving up. So like, it's like, when do I exit? Like, how do I know when we're crossing over? And then finally, when we get to this point over here, now we're moving all the way through. So it's really important to think about, okay, we've tapped out, but the candles are giving me more information than these indications over here, right? There was no crossover over here, but we went back up. So it's very important when you look at using MACD or you look at any indicators that you would really want to draw out your support and resistance lines first. Sounds like you could be missing opportunities. Once again, when you read Trading in the Zone, you'll realize that there are no opportunities that you will miss. Having that kind of, I guess, attitude or that kind of thinking or thought process, it's going to mess you up. It's not opportunities. You're looking to stick to your trading plan, and you're looking to get the highest probability setups for yourself, because really at the end of the day, your candles are going to determine where your movement is, and the amount of pips that you're going to get comes from your trading plan and your overall structure of what you're doing every day. The next break will be probably in 20 minutes. Okay. Moving on. So let's look at EMA settings, so exponential moving averages. So here are your EMA settings that you're looking for if you're doing a trend. There are many documents, and I'm gonna put this in right now. There are many documents in the Google Drive from people that are trading in the groups that have built really, really detailed EMA strategies for specific pairs, for specific time zones. So there is a folder, and I will explain the Google Drive towards the end, but I'll tell you a little bit now. It's called Member Contributions, and everybody that's trading usually adds to that and provides documentation, how they're trading, why they're trading the way they're doing. There's other people that have given webinars. There's other information. So these are settings that are generic, but you can get into more specific stuff if you go in and you start to build your own plan out. So for an upward trend, you're always looking at your exponential setting. The 10 EMA would be on top. The 20 would be below the 10. The 50 would be below the 20, and then the 200 would be below the 50. For a downward trend, the 200 EMA is on top, the 50 is below 200, the 20 is below the 50, and then the 10 is below the 20. Okay, so I'm going to show an example of this as well. Everything is to be approved by me. Not necessarily, just let me know you want to put it in there and I put it in. Usually a lot of the information we just put in there for people's reference. So I don't really approve or disapprove stuff. It's just if you believe if you believe there's a value to it, I always put it in there. So here you go. So we can look clearly right now at this is Euro AUD, a 4-hour chart, and you can see our line. So our moving average for the 10 is a blue line, the 20 is a red line, the 50 is a yellow line, and the 200 is a green line. Now take a look at 200. That's 200 days, so that's why your line is relatively flat. So as you get closer in days, your line gives you a little bit more information. So what you're looking for in that instance is when there's certain crosses, you can see there's a potential for a push up, right? So we had a cross over here, we had a push through. Here we had a cross here, we had a push through. So if you're looking at specific things where we had certain crosses, that is what you're looking for, where your EMAs are always matching in an upward trend. So you have that information, and you can see where we pulled back into the almost the 20, and then we had that crossover here, and then we had a push up. So you know what? You don't necessarily have to turn around and take the trade right here. You could wait a bit, and you can still grab that in that sense because now we've crossed over with those EMAs. So once again, this is subjective. There are so many different ways to use EMAs correctly or incorrectly. It's, you're just looking for crossovers and you're looking to see that the pattern or the trend is staying in the same. So these are the moving averages. Oops, let me do this. And now for a downward trend, you'll see here we have the same thing, right? So we came out, your opposite ends now, so your 10 EMA is below your 20 EMA and your 50 is usually below your 200. And what you're looking for once again is you're looking for a cross. So we had a crossover in the instance right over here, which pushed downward trend. We came up, we had another crossover here, which pushed a little bit further down, and we continued forward. Now, once again, it's not always accurate because we have a cross here, and now we have a push up. So it's very subjective, but it gives you insight into it. So if you know that you're in a downward trend and you're out over here as an example, so we had this, looks like a gap over the weekend, we know more than likely we may pull back into that trend. So in this instance, in this gap here over the weekend, we found that we were outside the averages, the moving averages, but as we crossed over, we came back into the bear trend at that point. Usually your 10 and 20s need to cross. Those give you better indication because it's based on your time frame, right? So if you're using a 4-hour time frame or a shorter time frame, your smaller MAs have to cross before your larger ones because that is really going to give you a little bit more of a real-time situation when you're using them. Oops. Why am I going backwards? All right, so Bollinger Bands. I think a lot of people know this already about what they are and what they do, so we'll go through this. Bollinger Bands are essentially a simple moving average. So, you have your middle Bollinger Band, which is a moving average, your upper Bollinger Band and your lower Bollinger Band. They measure deviations. And what I mean by that is where the price is moving at that point. The only thing that we should really know is that they do locate reversals in trends, but it's not necessarily as accurate as you think. And one of the important features about a Bollinger Band is that if there's no volume or there's no reason for the market to be moving, you'll find that the bands, the upper and the lower bands, tend to constrict and they consolidate a bit. So you'll see the candles move closer and you'll see the bands move closer as well. So here we go with a Bollinger Band again. You can see you have your upper Bollinger Bands and your lower Bollinger Bands, but more importantly, you start to see where price expands and contracts. So in the instance over here, as an example, we pulled out of the upper Bollinger Band and right back in again. And in this instance as well, we did the same thing where we pulled up and then we pulled back in. It doesn't necessarily mean it's always going to happen that way, but you can start to see where our Bollinger Band matches up a little bit with the candles, and then we pull back down. Same thing here, we pull out of the Bollinger Band but pull back in. Now obviously you don't know that's happening until after the fact, but it's a good idea to study and to see, okay, where are we at with our candles? So if we're outside the Bollinger Bands, maybe we're going to pull back in, and once again what you're doing is you're looking for your candles to provide you that information. So you see, if you look very closely and you start to draw support and resistance, you start to see where we topped out, we bottom out again, we top out right near our Bollinger Band, bottom out again, top out again, bottom again. So once again, the indicator gives you confluence, but it's not something that you necessarily need because the candles are giving you that information. So you're looking at all this information here and you're saying, okay, this works or this doesn't work, but it's really your candle confirmation is the one that's giving you that at the end of the day. It's giving you that signal to say that we had a consolidation over here in this instance and we had a drop. It's not the Bollinger Band. The Bollinger Band didn't help you in this point. It was the candles that were providing you that information. Same thing over here. Candles provide us information. We drop down. Candle provided us information here. We pulled back up. So you can start to see where, as you add various elements of support and resistance, your candle patterns along with your various wicks and also your different ranges or your zones like supply and demand, things become transparent and you can start to gauge where we really think we're moving in the market and where we think the market's going to go just based on that information as well. RSI. So, the relative strength index, it's an oscillator. So similar to what I was saying with stochastics, or MACD, it determines whether the currency is overbought or oversold. The normal settings are, you want to look in between the 70 and the 30. So anything over 70 is usually overbought. Anything under 30 is oversold. So when you start to look, you start to say, okay, well, this could be oversold. This could be overbought. This area here can be oversold. But once again, that doesn't necessarily mean that price is going to reverse. It's just giving you indication that there's been so much activity at that level. That's why we're at that range. So when we start to look at things and we start to examine, and what I did was I started to pull up and I highlighted, our ranges. So 69, 70, 30, so it should be a 70, but it's 69, close enough. But you can start to see here where we have an overbought and oversold region. We also have candles that are providing you with that information. So here we have an overbought, we have a candle range, and you can start to see where, once again, when you draw out your support and resistance, we've hit a resistance level to push the candle back down a bit. And then here we've hit a support level where now we've started to push the candle back up again. You can start to see where we're coming close, and once again we pull back down. So it can help you and it can give you information, but if you didn't have any of this, you could start to see just from the candle patterns that we have an overall uptrend at this point, right? If you're trending, but we've tapped the top of the trend line and now we're pulling back down. So it's interesting when you add all these things together, if it helps you or hurts you, but it gives you a little bit more insight. But what I'm saying is, not even using any of these items, we can start to see where we have reversals just based on candle patterns and then just the market moving. You're here as an example at like the highest, at a highest resistance range. We're tapping this resistance range. We know we're going to start dropping back down to a support level at that point. All right. Carrying on. So stochastics, similar to what we have with our RSI. There's basically two lines. You have the K line and the D line. They help us, and because once again, the overall overbought and oversold issue is here too. You look at the K line across the D line through the 20 level to identify a solid buy signal. So, if you looked over here as an example, we have a crossover and we're able to push back up. And then if you're looking at the other direction, you have a crossover again, and then you have an overbought region, you're coming down through. So, it's just as the lines cross, that's what's giving you your information to say there's either a bullish or bearish momentum. So here you go. To the right, when the blue line passes above the red line, indicating the market is bullish momentum. So right here, we have bullish momentum going up. And then when the red line is above the blue line, in this instance over here, we have bearish momentum. So it's not as clear here, but we'll see that in a second. When am I going to talk about time session? In trading plans. That's where session starts. All right, so here we go. In terms of what we have here, we have once again, so we have our zones drawn. So you're looking once again at your 80 and your 20 for stochastics. And we have our overbought region here because it's above our 80. And we have our oversold region over here because it's below our 20. But once again, you're looking at candle patterns. Your candle patterns show that we've reached a resistance area. We're dropping down. This helps. Now, what I want to draw your attention to, and this is where looks are deceiving, is we're still overbought here, right? We're still going up. So there's no indication for me that I should be selling until we reach a point where we have candle confirms. So people would turn around and say, and it's funny because people are like, oh, look, we're over the 20, so I must take a sell position here. But there are no candles to give me that confirm that a sell is happening. So if I took a sell in this spot over here, because that's where my candles are, all that's going to happen is we're still going up. So you have to be very careful when you're using indicators because they're not really giving you that full information of, okay, this is what's happening, this is when it's happening. So if you look as an example, as you start to go through, once again, here's the same thing. You have this region here, we're overbought, we're not dropping anytime soon. We haven't seen a drop. It's only until once we get over here, that's when we start to see our drop. So if you're using stochastics and you're using this information, it's just important to realize that as you start to go through this, that your candles will lead you down the right path. This will help you determine, and rightfully so in this instance here, that we're in an overbought region. Most likely this is a resistance area, and we're going to start to go down. Once I get my candle confirms, that matches up with my stochastics, chances are it'll work a lot better that way. But I am just giving myself indication that we're in an overbought region, so more than likely price will start to slow down a bit at that point. Do you recommend to start off using indicators to help learn or just focus on candle patterns? Like I said, you'll find that if you start to use like indicators, you'll start to slowly go away from them as you get better with candle patterns, and most people in these groups don't use any indicators, they just use candles. It seems like 2 or 3 candles is where stochastics matches up. Yeah, more than likely. So you can start to see how they do level up, but I mean, once again, it's easy to see once we've already seen movement or once we see the whole chart. But if you're just looking over here as an example, in this section here, we're already overbought and we're still moving. So where is it that we're going to start going back down? It's easy to see now because we went down over here, but if I had just this section of the chart, I'm just going up still, and this is still going up, so there's no reason for me to take a sell at any position. So it's really important to understand that concept as well of waiting for confirmation. How do you place these indicators on MT4 on the computer? Yes, I will go through that. Seems like support and resistance, trend lines, and wicks are the way to go. Yes, it does. It is interesting that things are a lot easier when you just look at it. So if I'm going to go insert indicators, I go into indicators, go into oscillators, stochastics, And everything here you can see is standard. Click, there you go. So you can start to see, as an example here, a real live situation in gold. We had overbought, so here we go. So we're already overbought. So look at this, we're already overbought, and we continue to go all the way up. So you go from 1196 to like 1125, 1130, and you're still overbought. You drop, but look how much of a drop there is here. It's very interesting how it doesn't necessarily match the way it's supposed to be. So I mean, if you look at these different situations, you want to make sure that you're really examining what's happening, because there's a lot of instances here where we're almost in an overbought area and then we pull back down. So you want to make sure, as you start to review your indicators and you start to review this information, you're looking at your candle patterns to give you information on where there's possible movement for a change in direction, right? So, we had an overall downtrend down. FOMAC came out, pushed it all the way up. We still had a bounce back down, but we're still almost on an upward trend at that point. Can we do that again to place the indicator? Sure. Give me a second. So, object, let's do this. Indicator list. Let's delete, close. Okay, so we have no indicators on this chart, and I'm going to show you again where to go. Yes, the big bullish candle was news. It was FOMAC. It was the interest rate information. Do you ever use the line chart for support and resistance as suggested in Naked Forex? No, some people do. It's not my style. You can use it though. It's fine. So we're going to add indicators. So you go to Insert, Indicators. You have all your indicators here. You go to oscillator because that's what they are. You have MACD, you have RSI, you have stochastics. This is where you would enter all that information at that point. So you just check MACD, everything is set up, and there you go. So you have your MACD as an indicator as well. So it's just going into that indicator list and then choosing what you want. We have a book in the drive that helps you use MT4, so I mean you won't be lost at that as well. All right, so Fibonacci. Fibonacci basically allows you to give you points of reference for both upwards and downward trends, to place various stops along the way. So Fibonacci is very mathematical. I tend to look at them as minor support and resistance areas. So when you start to look at various levels, you can start to see where we have Fibonacci in this instance. It's not something that I use often, but I'll give you an example here. And I mean, we have information on how to use Fibonacci in the drive. So don't take this as verbatim. But ideally, your best numbers are your 61s and your 38s, because that's where the region you're going to hit most of the time is. And you can see here, you don't necessarily hit that area, but you hit the range. So that's something you have to be careful of as well. So when you turn around and you use Fibonacci, and we'll use that right now, and let me just do this. And if I was to use Fibonacci, and I would say, okay, we're going to move from our swing high, we're going to move from swing high to swing low. So, as you start to move up the swing high from swing low, you could start to see here where you tapped up here and we're going into these ranges, but you can see how price starts to tap these various areas. As you start to go through and as you start to see things, that's what you're looking for. And Fibonacci basically becomes essentially, if you want it, for lack of better terms, support and resistance, because you can start to see, in this instance here, if I drew all the lines according to Fibonacci, you can start to see this, this matches up over here with this area over here. We have this tap over here. We have a tap over here. So it's just another way for you to draw support and resistance, but more importantly, it gives you sort of ranges where you think we're going to have that definition, right? So we came up over to the for basically the top, if we're looking to draw down and we're going down, we came and we hit the 23 range. So if you know that you're at zero up here and we're dropping for a drop at that point, you know that that's where we're going to hit at that point. In terms of Fibonacci, it'll be a range in that zone. And once again, you're always looking at like your 38s are going to be like key areas. You know, in this case, your 23s are key areas, and then your 61s are another key area. So if we were saying, okay, potentially in USD JP or in gold, as we're using right now, we've tapped out at the highest level and now we're starting to reverse. There is a possibility for it to come back to this zone, but when will it come back? Once again, that's determination, and it's very subjective. So that's where you turn around and you say, okay, I use these as just a guide. It's not necessarily the be-all, end-all, but it's more of just a guide to help me to determine where I think price is moving. And I think that's something, as you start to get better in trading, is you start to realize a lot of things are subjective at that point. Volume, very straightforward. This indicator helps you to let you know that there's a lot of volume in that particular session. Really, you can use this, but I mean, the biggest train of thought or the biggest tip here is you're trading currencies when those markets are open. So if you're trading US dollar currencies, trade them in the North American session. If you're trading Euro currencies, trade them in the Euro session. If you're trading Asian currencies, trade them in the Asian session. Try not to overlap. Obviously, if you have like a pound USD, you might find that'll move through the Euro session and also the North American session, but not as much in the afternoon, as an example. So here's where you build out your trading plan. If you work 9 to 5 and you know that you're not going to be home during the North American session or the London session, as an example, you set yourself up to trade the evening. So, you know, in the London session, maybe you're trading the early North American session. In the North American session, maybe you're trading the Asian session. So that's how you build out your trading plan, and you get comfortable with those pairs at that point. Yeah, so with Fibonacci, swing high, swing low. That's basically how Fibonacci works at that point. All right, so we're done. Topic 3. So let's take a break for like 10 minutes, get everyone recharged. I'm going to grab a drink, and you guys can go do what you need to do. Once again, if there's questions about some of those topics, we can talk about them and I'll answer them. But other than that, take a break. We'll reconvene at 10 after the hour, and we'll continue forward. What session is around 12 a.m. to 4 a.m.? That would probably be the Euro session if you're talking Eastern time. Is the supply, demand, support, fibs concept the same with pivot point all towards the zone? More than likely. It just really depends on, you know, what you're looking at and how you're mapping out your trades. It's, you know, you don't want to throw too much together. You want to make sure it's simple and concise for yourself. Okay. Do you need to sign up for a broker? You just have to enter in simple information. You don't need to enter in any confidential information. It's only once you start depositing, but it helps you get a demo account. You should demo with the broker you're going to use. The American session is basically 8 a.m. to 4 p.m. Yeah, 7 a.m. in Canada, you'd probably be trading the North American session. When do we get our groups? Do we have to be here for it? No, I will send you an email to give you information on that. Are you going to do what exactly, are you going to go over what you do exactly when you look at charts? I'm pretty sure that's what I've been doing. But I mean, I don't know how much more clear I can make it, but yeah, I can go over some stuff in my strategy session. What I look for personally, yes, I can show you that, but it's not going to be the same as what you need because I am looking at things very differently than you will be as a new trader. How do you separate the groups? Like, do you put people from the same country? No, it's random. I try and match them up so that we have people fill all time zones, but it's just random. So the times in Canada correlate with the times in each session. Well, no, I mean it's there's a map that tells you what's happening in terms of when different sessions are open. We have a legend that tells you all that. So there's information about when the time zones are for which things open. Do you ever did you ever thought about if support and resistance works so good because it's only price, not time? Um, yes, but I mean you use price also to provide you insight into volume and direction. You don't want to trade off a low volume. Will you talk about compounding? Sure, I can talk about it. Um, how many mentors per group, not including yourself? Probably like 10. There's like 10 of us in there, 8 to 10 people. So we'll be there. All right, so I'm going on mute. Is there a strategy topic today? Yes, we will go through that. But once again, it's going to be determined on how you trade, not on how I trade. I can show you everything I do every day, and you will copy it and you will fail, guaranteed. Because there are too many variables that I know that you guys don't know yet. So you have to remember, as a new trader, you can collect information, but you have to dissect it yourself and, and actually understand what's happening. Does all the mentors start from zero as well? Yes. Every mentor that you're going to be working with is a previous webinar attendee, and they're actually in the webinar right now talking, watching you guys. When do we start with my money? Yeah, Eric, don't worry, we'll get there. Yes, I know, it's exciting when you're learning something new. Okay, so there's some questions here. Did you go over candle confirmations? Yes, I did. I saw you and other guys placing a lot of orders at the same area at the same time instead of one big order. Is it because of FIFO first in, first out? It's more of just being able to control your prices. I will go through that. Since I have no experience, Ted, what do I do if I do not come with the everything. With everything, we have everything, trust me. We have a lot of information. You guys don't realize what we've built here. I think you don't understand that what I'm offering and what the Forex family offers is worth thousands if you want to put a monetary value on it. This webinar is easy to watch. Time flies. Yes, it does. See, we're like hour 6, hour 5. Were the mentors once taking the webinar with you? Yes, I mentored everybody. Everyone that that was in these groups are mentors now. They do it out of their own free will. They like helping people, and they like also expanding their knowledge. So people like to give back. I think overall I've set a good precedence for a lot of people, and they just feel it's necessary for what they've done in their lives and how they've changed themselves to give the opportunity to the next people. So we have a good group of people. I think everyone in the Forex family means well. You'll see, and it's funny on social media, we're all a bunch of I would say hyenas, because if someone attacks one of our own, we're out there fighting because we work hard at what we do and we want people to succeed. And it's not very often that you have a group of people that see that, and you have leaders that want people to succeed without taking anything from them. I don't ask for any more money from you. I don't say, well, pay me monthly. I still give you information every day, and people can attest to that in the groups, that we're constantly working every day, and I'm always there with everybody. So I think you'll be in for a good surprise. Yeah. They're in for a surprise. See, so all the people that are mentoring, they're all watching you guys and they're just laughing at the questions, because that's what they used to do to me, so it's not surprising. So they think it's funny. Um, yeah, so the fact that I help after the webinar, yes. We all help afterwards as well. It is a lot of information, one day at a time. You just move slowly and we'll be okay. Yeah, we all started somewhere, so you know what? I guess I used the wrong term laughing, but I think it's just more of like we were all there, so we know what everybody's going through here, so you guys will be fine. Uh, Let's see. All right. Okay, so we'll get ready to go. Let's start the next topic. Did you mentor Rag, Raquel, and Javier? Yes, I did. I mean, do I have mentors from the UK? Yes, I do. Rag mentored Javier, but I mean, we all work together. I mentored Rag, I mentored Raquel. They mentor other people, so it's all a combination of things. What have the previous people who attended your webinar do that made them more successful than others? They made trading their own. They made it subjective. They did their own thing and figured out what worked for them and just kept repeating it. The best traders are the ones that don't follow any path. They make their own, and they just work. All right, let's carry on. So this is a topic that I like to bring up for everybody. I like to provide this information to help with real live examples and sort of trades that I've taken and why they were successful and why they weren't. Who's Mr. Cheers? Mr. Cheers is Raquel. Um, he's one of my original people. He actually is a very good person. So we'll do that. And sorry, I was on mute there. Okay, so let me get to what we're doing. This is probably the time where I think, you've all basically said that you're having a mental breakdown because of all the information that you're getting. But I mean, once again, this is part of learning and part of learning something new. So it's a little bit of overwhelming, but I mean, at the same time too, I think you guys are going to learn, that this is probably the hardest thing you've done in a while. And I think a lot of the times people underestimate the fact that this is a easy thing because they see people succeeding and they all think that they can do it. So I think at this point, you need to figure out, what will be the key topics that you want to understand more of and dive into those. And we have all that information there too. And like I said, don't be worried if you don't get this right away. This is being recorded, so you'll have an opportunity to watch this over and over again as well. All right. So this is an example of a chart. And what I want to talk about is I want to talk about, we have our Bollinger Bands and RSI and things like that in there, or moving average. And I want to talk about where we think price is going at this point. And, keep it rhetorical. Don't message me and say that's going up or down, but I want you to look at the last candle. So we're here, this is August. So this was last year, August. And we're looking at this candle here. So first of all, what I want you to think about in this chart here is I want you to try and identify if you see any potential patterns. So take a look and, if you have a piece of paper in front of you, draw it out, or if you don't, or you're just looking at something, what I want you to do is you really got to get focused on what do you see. And this is sort of the key with the sort of what we're doing in this section is what do you see and how do you interpret the data. So as we progress, now you're going to start to see this is what you should have seen. So you can start to see we have trends, pushing up, pushing down, but then you can start to see clear, a little closer, subtle things, start to see subtle things, potentially a support area, potentially a resistance area. So as you start to map this out, this is how I start trading. So this is when I start trading, and people ask me, Ted, what do you do all day? This is what I'm doing in my brain. I download my entire brain to you, and I give you that for the low price of $450 US. And I give that to you every day. And as I get stronger, I pass that information to you. So this is what I do. Like I said, when I started trading, this is what I would do, is I would look and I would say, what do I see on the charts? And what do I notice about the charts? What am I looking at? And this is a perfect example. I wouldn't draw it like this on my charts, but from a visual standpoint, I wanted to show you what I saw. And this is what I see. Okay, so as you start to progress and as you start to look at your charts, these are things that you want to keep in mind as you're looking. Because as you start to look a little bit further, now we start to see a little bit of zones. Okay, so you start to see various levels of support and resistance. So you can start to see there's a high resistance, like what we say the highest level of resistance, we have the lowest level of support, and then we have some secondary support and resistance levels, because you can see where price has tapped those regions and gone back up or gone back down depending on where we are. So as we start to go through, you can start to see you have a little bit of action here, you have a little bit of action here. Our upper range is over here where we top out, we go back down. We have another range over here, we pull back down. We come back into this area over here. We're back in this area again from previous, right? Because you're in July, and now we're moving all the way to August, and you can see we've moved all the way back into that region again. So these are things that you need to start paying attention of when you're trading, of like what's going on and how is it working, right? So now when we move forward and we move to the next level, now you start to see exactly what I'm looking at. So now we've got, what I would have considered, this is noise, right? Because we don't see it anywhere over here. We don't really see it anywhere over here. We see the bottom levels over here. right? So we have all our bottom levels. And at the same time, what you start to see is you start to see other levels. So we have a little bit of a level over here. We have a little bit of a level over here in terms of support and resistance. But we're seeing where we have multiple touches, where we have multiple instances where price is getting rejected or it's advancing where it is. So what I want you to take a look at is, so, we looked at this section of the chart here. So all this section over here, we looked at. So we recognize that we came up, we came down, came up, came down, came up, came down, up, down. Now, what we're looking at as we start to move through is now we're going to start to focus on this section of the chart here. So this is the section that we want to start focusing on because we've gathered data from here. We've said, okay, this is probably my lowest point because this is my lowest point over here, right? I've seen that it's hit here and here, but more than likely now what I'm looking at is I'm looking at saying, okay, what do I think is going to happen over here based on over here? Okay, so this is how you dissect your chart, and this is how you start to become a detective when you're doing your charting, is you're giving information based on previous history, right? And once again, when you look at charts, you say, okay, price always, tends to repeat itself. The institutions do the same thing over and over again, but more importantly, what is happening? So if I consider this area and this and all this a major resistance, what do I think is going to happen with price? Price at this point over here, what is happening? And you can tell right away. We had, if you want to be specific, you had almost like you had a zone. Essentially, if you looked and you drew out a zone, you could say, this was the zone over here where we had price get inside in this region, and now it's pulled back down. So with everything that you've learned so far, and you can say this is another region over here, and you could say maybe this is a region too, and just color it in for the time being. From everything that we've learned right now, you should have a good idea or a semi-understanding of potentially where the market could be going. Right? Because now we're putting everything together. We've drawn our support lines, we've drawn our resistance lines, we have a little bit of indicators on here, we're looking at our candle patterns, we're looking at the overall pattern. Now we have a good idea of potentially where things could be going. So let's take a look. That last candle is closed, so now we're looking at the next candle moving forward. So there you go. So what you're seeing now is we've broken resistance on the 4-hour candle, right? So we broke that area from, you see here, we broke that area. And now what we're looking to do is we're going to be looking to see where the next confirm of a reversal is. So this was an early morning chart. This was actually news that pushed it up. So now what we're saying is the afternoon 4-hour candle potentially could be going back down, but we don't have any information that the reversal is coming right away. We just know that we've broken this resistance area. So this is where when I say to people, you hunt a trade, I'm hunting a trade here. So, people were asking me previously, what do you do here? How do you trade? I'm hunting this trade, and I hunted this trade because what we saw exactly here, and this is exactly what you guys will be doing, is we had this major resistance, right? So we're looking at July 27th, a month ago, to August 5th. We had major resistance here and we haven't broken it. We broke it here, but there's nothing to tell me, when you're looking at previous ones, that we're breaking it again because we're starting to reject and we're starting to pull back from that area. But I don't have confirmation to say that, yes, it can continue going up, and I don't have confirmation that it's going down. So I am waiting. I am examining the trade. I'm hunting the trade to make sure that I get confirmation, whether it's one candle or two candles, that now we're having a rejection of that resistance area and we're heading back down. Yes, the huge bull candle was a news event. It was NFP. So here you go. So you can see now in the next 4-hour candle, so this is the 1 p.m. candle, there was a drop and a doji was forming. You could have taken the trade at this point because now we see that, your previous candle, as an example, is now lower and we're starting to pull down, or you could wait for the next candle to come and it would more likely be going down. So you would wait another 4 hours. So you would wait for the evening session, which isn't the greatest session, but if this was, say, the morning, you would wait for then the next 4-hour candle to get that movement in this specific interest or instance, because you had this major rejection of major resistance at this point. And at this point in time, that was a major resistance. So this would be a very profitable trade because we've already confirmed essentially that price doesn't like this point, and now we're heading back down. So you have an opportunity there to take a trade. What does NFP stand for? NFP is non-farm payroll. It's the highest volatility news, and we'll go through that afterwards. Yes, so there's a statement here, the last candle exhausted the line of resistance. Based on the knowledge from this webinar, I'd say the current market will show a bearish trend after the last candle. Yes. How often does that news release? Once a month on a Friday. Would you also be checking the daily and weekly chart or just stick to the 4-hour? You could check the higher time frames, but I'm not, it's really dependent on what you're looking for in terms of your range, and that was my range for this trade. I was looking just to hit that resistance level and pop down for a correction for a bit. All right, so here we go. What we're looking at here is an example of a four buy positions with Euro USD and a confirmation with a take profit point. So what you're looking for here at this example is we're looking at multiple things, right? So right away, our entry was here in this range over here. So this is where I was doing my entry, and here is my take profit mark. What I'm looking at is I'm looking at the overall trend, but more importantly, I'm looking at the fact that we have this trend line moving forward up. We also have a lot of information regarding these candles. So we have a bull candle, bull candle, bull candle, but we have our lower highs, and now we're pushing back up. So what you're looking at here is we had an pullback down to what we consider our support level. We didn't break it, and then we pulled all the way back up and we hit take profit at this point. Now, I could have held it for a little bit longer, but what I was looking at in this example, I mean, it's not the greatest, but there was, multiple factors on the other side. But essentially, as you take your entries, you start to realize now we hit this major resistance, we pull back down, and, I'm out of the trade at that point. So I'm looking at essentially this is a 4-hour candle, and it would be a 4-hour trade. So I'd be entering on the one candle and exiting on the next because of the current trend. As soon as we hit that resistance point, I know that there is a potential that we'll stop and we'll start to reverse, which ends up happening. But you can see then the reversal starts as you start to see this little wick start to pull back down at that point. So we get a little bit of a wick, pulls into the support level, pulls all the way back up, and now we start to pull back down, and our wicks start to show the opposite trend now at that point. Here you can claim, yeah, that's an issue because we came back up again. But once again, what you're looking at is you're looking at your wicks. Your wicks are still creating lower highs, or sorry, lower lows. So you have a lower low, lower low, lower low. When you say that 10 times fast, you get tongue twister. This would have pulled you all the way up. As long as we're not breaking that level there, now we're coming all the way back down. So you're looking at, once again, your resistance levels. Once you break support, you're off to the races going down at that point. Yeah, so my entry had exhaustion, and that's the reason why I took it, because I was hoping that we would continue back up. If I had, you can see that there's a bit of a wick there. We still had the wick that was above this previous candle, so I was looking to pull and take that up, and you can see now we pulled all the way through with the next candle at that point. All right, so moving forward, now we're going to play a game. All right, so this is USD JPY. What I want you to do is you're going to look at essentially the end candles, and we're going to talk about whether or not this was successful or not. And I've highlighted the region that you should look at. So I took 4 sell positions with USD JPY. What I want you to look at is the chart and what you're looking for in terms of what we have available to us. So we have an RSI indicator, we have volume, we have stochastics, and then we have our candles. So what you'll do now is take 30 seconds and make a judgment call on whether the position of a sell was successful or not in this potential example, which was a real life one, and I'll give you the results because I actually took this trade. Part of being a real trader is you actually are able to give you a real life example of a trade that was actually successful or not. Okay, let's take a look and see what people are saying. So that candle I sold on. So the last candle is the candle that I took the sell on. All right, so good. We got a lot of answers. We had a lot of yes and a lot of no. Okay, good, good, good. Okay, so we had a lot of information. Those positions, it was successful. So the sell positions did work. You can see, I mean, as an example, we started to see a curl with the stochastics. Our RSI wasn't at the peak, but it was okay. But more importantly, our candles, once again, we created almost, like a mini resistance at that point, right? So if you were looking just right over here as an example, you had like a mini resistance where we dropped down, we pulled up, and then we came back down. So this was actually really acting as a nice ceiling for us. And that's the reason why I took that trade. It was aggressive. This is a 4-hour chart, remember? So, the next position would have got me. And really, I had 4 positions. I took my best position got me 160 pips, mini pips, and my worst position got me 93. So as far as I was concerned, it was a successful trade at that point. Okay, so really, just support and resistance, looking at candles gives you your keys to success here. All right, let's see. USD JPY, 4 positions. Buy positions, was I successful and why? So take a look at the buy positions and see if I was successful. No, I can't zoom out. Okay, people are figuring it out rather quickly now. Then it's a buy. Yeah, okay. I bought at the last candle. This is pretty straightforward. What I'm making you look at is I'm making you look at everything that you see. Okay, good, good, good. Everyone's sort of on track. This one was pretty straightforward. Once again, what you're looking at here is we have this, we have no crossover. We're in an overbought area, but not necessarily giving me indication because we have essentially that movement, and you can start to see here as an example, I mean, it's not a great one, but your channel of moving up through all this information here, we had a breakout. So you're able to see that it was successful. So I was able to get my best position on that one. I got 114 pips and my worst position was 85. So once again, I'm not going for huge gains. I'm looking to just grab parts of the move and get in and get out and doing that over and over again. So, when people say, Ted, you don't lose trades, I don't put myself in a position to lose trades. And what I mean by that, and I don't mean to be arrogant, but I mean if the range is there and all I need is like 10 standard pips or 100 mini pips, depending on what you need, I don't need more than that. I have to be aware that if I can do the same thing over and over again every day, the power of compounding will allow you to do that. And what I mean by the power of compounding is I mean that you're able to just, in the first week do 5-cent lots or 0.05 lot. The next week you do 0.06 lot, then 0.07 lot. But you're doing the same thing over and over again with your analysis, and you're able to find these instances where you can get in and get out. And this is the other thing that people tend to get upset with is they say, well, you guys just take multiple positions, you're scalping, you're only getting 10 pips or this or that. At the end of the day, the one thing you have to realize, and this is one thing we talk about in the chat rooms, is the grocery store, when you go pay for your groceries, doesn't say get into the line with the pips where you got 500 pips on your trade or get in the line where you only had 5 pips. The grocery store says, do you have $10 for those groceries? You either say yes or no. So if you're getting paid and you're doing what you want to do as a trader, there is nothing wrong with the way you're trading. The reason why people say there are things wrong with your trading is because they're conditioned by other people to judge what people are doing, because everyone was told that if you don't trade a certain way, you're not going to be successful. Now, this is the reason why people come to myself and say, can you teach me how to trade? It's because I innovated something. I decided this made sense to me. This is what I wanted to do and how I wanted to do it. So if I only took 100 mini pips in a position, I was happy because I knew if I could do that 10 times over, I would make 1,000 pips rather than trying to wait for one huge move and hope that I was right. Here I can get in and get out really quick, really effectively, and just do the same thing over and over again. And it becomes boring and it becomes automatic. And that's sort of the key you have to take when you're trading is do things that work for yourself. What about the wicks in these examples? What made you think it was safe from a fake out? It wasn't a fake out because we broke resistance and it continued. The next candle was already above that. And remember, once again, these are 4-hour candles. So that's a big move. These aren't short time frame candles. These are big time frame candles. So when you move out of these ranges, more than likely you're going to be correct. All right, so this is the pound US dollar. I took 5 sell positions. And was I successful? Why or why not? So let's talk about that. Okay, so we got a couple of answers there. I think they all come in. Uh, all right, so we got people. Good. I'm glad people are figuring it out. That's good. Okay. All right. So essentially, no, I'm not muted. I'm just waiting for people. Okay. So let's get the answers. Okay. No, I wasn't successful. So people said no was right. Reason being was there was no confirmation of a reversal yet. We broke trend. Once again, we pulled up. Even though stochastics, and once again, this is where stochastics crossed, you figured that you have an opportunity for a sell position here. But once again, the issue becomes, in a sense, that, the stochastics didn't give you enough confirmation in terms of the actual trade itself. So if I was going purely based on indicators, it showed me that everything was overbought, so I should be selling. But the candles did not give me that confirm. So you have to be patient. You have to wait for your confirm. So I ended up losing on this trade. I ended up losing 140 pips at this point. Can I please explain this example again? Okay, so I was looking to take a sell position on the basis of this candle here. So I took a sell position because I saw this and I saw this. So these were all overbought. This was crossed. You had this breaking out of the Bollinger Band. You had all the indications to say that we should be selling, but we did not have confirmation that there was another candle to go the opposite direction. All we have is this trend continuing up, and because of that, this candle then pulled all the way up, and the next candle was a bull as well. So what I'm saying is we did not have a candle confirmation such as this, to say that the market was going down. I was relying too much on this and on this to say that everything was good and we should get in there. So basically I tried to get in early and I failed miserably. I don't use indicators, no. Okay. All right. Okay, so this is the pound AUD position, and was I successful with a sell? So I did 12 sell positions here. Was I successful? Is it better to get in on the last closed candle? Well, it's just better just to get better confirmation overall. That's what you're looking for, confirmation. That's the most important thing. All right. What do you mean by 12 sell positions? I took 12 trades that were sells on this specific one. So I clicked 12, I took sell 12 times. All right, so there's people here that actually are getting this. So that's good. Okay. Yes, I said sell. Okay. No, I didn't take 12 entries the exact same time. I just took multiple entries in the same region. So they were various entries. Okay. So this is sort of a interesting setup because of the fact that there was news here. So I tricked everybody. I wasn't successful, um, but there was news, and basically the news was interest rate for AUD was no good, and it pushed this all the way up. So I lost 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 25, 26, 30, 35, about $40,000 on this trade. Okay? So once again, indicators were telling me that we had a downward movement, we had a RSI, we had the candles, but I didn't check the news. And like I said, I will show you news information and where to get that news. but I didn't check news, and that cost me a lot of money. So once again, follow your trading plan. See? So that was what happened afterwards. So we went from that little tiny candle here to a huge push up. And there you go. That's the reason why you check the news, because it spiked up and you can see where you had the dip on the stochastics, and that's it. I keep wondering if there's a reason why you're doing a trade. If you would take 12 different trades instead of one large, it's easier to manage multiple trades and you get better positions. I'll explain that in the strategy section. Yes, I like to throw in trick questions. It's fun. All right, next one. This is the pound US dollar sell position. I took 4 positions. Was I successful, and why? Yes, there was news on that one. I didn't check it. So they were collecting liquidity to push back up, and I got caught in that. Yes. Well, there you go. I guess everyone's figuring this out. All right, people. It's good when you guys all are getting the right answer, because it means that either you know how to trade already and you wanted to give money to my charity, or you actually are paying attention. So this is good. Okay, so I was successful, and for the reasons people were saying. So I mean, once again, you sort of look, and you can look pretty straightforward at what happened. You know, you can look at your indicators, as you want to say, and say, well, we're in a sell, sort of oversold area or overbought area pushing down. But more importantly, we have a nice downward trend. We sort of bounced off the top, and now we're coming into that section there. So if you wanted to look at this closely, you would say there's up, down, and then we should be going down. These candles over here, sorry, let me do this a little bit better. These candles over here sort of give it away, and it's an easy 200 pip move, essentially into this little range over here. We go from 905 or 140 to 39. We hit that area nice and easy. So if you wanted to say, okay, this is support or sort of resistance and support area, you got a little bit of ways to go to hit that line as well, if you want to take a look at that. Yes, I used support analysis for this one. What was the profit on that one, Ted? Let's see, 2,000, 4,000 plus $10,000 on that one, 4 positions. Okay, good. Yes, correct. So in a downtrend, you would look at the top wicks, and an uptrend, you look at the bottom wicks, just to see where we're getting exhaustions. The black candles, are they bulls or bears? The black candles are bears. Bull candles up are always going to be my upside. Bears are the downside. All right, Euro AUD. Let's take a look. Let me just move my pip facts over. 2 sell positions taken. Was I successful or was I not? Let me know. Indicator that shows a pip counter. Yes, you can have that. We have that. I just usually just use my pip facts and I just calculate it myself. Are you entering on lower time frames? Yes, I am. These are just higher. Um, Trading the news is a bad idea. Yes. Okay, so I was not successful here. once again because of a bad entry, and a lot of people picked it out. Once again, you could take a look and you could say, well, you had a little bit of a push up, so we should be, that should be an indication, and we didn't have any movement down. But what ended up happening was this candle basically created a new support. We continued up. So what I was looking for was the drop through here, but if I had paid more attention, I would have seen this. Sorry, let me do that one more time. You would have seen essentially this upward trend. So that's the key. This area here is your key of we bounced that trend line and now we're going back up. So once again, it's understanding your candles, understanding your confirms, and then understanding the fact that, we haven't broken a region or a support level, so there's no reason for it to go down. Did I just draw my trend line wrong? No, I don't think so. It's more of, if you're looking to see where you're hitting marks, right? So it's not going to be the straightest line, but you could say that this was probably a support level. But this, if you looked, it's not the best line, but it probably would have matched up in some way. Like you would have tapped it a bit, and then it would have pulled back up. I wasn't successful. No, it was just bad entries because once again, I wasn't patient enough, and it cost me once again. All right. Pound CAD. 10 positions taken. Was I successful here? Why or why not? This is probably one of the easier ones. So what you see is probably the right answer. So if you're thinking too hard. It's very straightforward. So why I give like an example like this, because when people say trading is hard and I can't be successful, stuff like that. At the end of the day, it's when you look at stuff like that, you're going to be able to find simple setups, and it's important that people have those simple setups, and you're able to say, hey, if I can find these setups constantly, then I really don't have much to say in terms of, I guess, what's the word, the confidence that you'll have. And that's probably one of the biggest reasons is, as a new trader, you're always looking for these setups, but then you're going to see these setups one day that look like this, and they're just like, you notice in on Instagram, or you notice on social media, people are like just saying like this is the greatest day ever. Like, you turn around and you see people, they're just like laughing because it's like, I can give you a perfect example. Like, if you turn around and let's see, what did I do? Like, I mean, I turned around the other day and I did this. We sent it to this group. Like, trend lines respected the entire morning. It was a good day because essentially, like it was so easy to trade. So, when you turn around and you look at trades like this, you're like, how could you lose? Like, how can you turn around and make mistakes trading? The problem is, as a new trader, do you really want, you're going to be so impatient because you want to be successful every day, and that's the biggest mistake you can make is trades like this you're going to capitalize on and you're going to make good money because it was a very straightforward setup. So here you go. Just a quick summary. So you're going to review, essentially your candle patterns. You want to build out support and resistance, review your time frames, review the news before potential, review news sites before potential news that could disrupt your current candle patterns, review indicators, and you also want to set your stop loss and take profit marks and just let the trade run its course. And I think we see a lot of information there that will help you. And I mean, we've gone through a lot of the information here. We have our wicks, our zones, you have basic support and resistance. It's just a matter of doing it over and over again. And it sounds silly, and some people are in the webinar saying this looks incredibly easy, like why can't everybody do it? It is easy, and I don't want you to be in a way, I don't want you to be scared, or I don't want you to turn around and think that you're going to make millions of dollars, but I want you to think about it as this kind of activity, Forex, the stock market, has been going on for so long. There's just way too much involved for it to be so drastically different the next day. Like, people will turn around and they'll start trading and be like, well, the market's against me. It's like, you really think you sitting in your basement, like, my office is in my basement in my house. It's like, I'm sitting here in my basement. You really think someone at like Goldman and Sachs is going, hey, that Uncle Ted guy on Instagram just made another like couple $100,000 and all his students are making money. We better just move the market just to get rid of them. Like, these are some of the things that, when you look at various items and you start to deduce your trades and you think of stuff like that, you really want to be cognizant of that. And, was that last trade successful? Yes, it was, because of what it is. Can I go back to the previous chart to say what was so straightforward? Sure. All right, let's go back. So, I mean, once again, you're looking at that huge candle. So, you could say you had a resistance over there. You could say you had support. We broke support right away. We're off to the races. So, I mean, if you wanted to look at it very closely, you had a very simple setup with a lot of information going across. You had up and down, push up, we pushed down, we broke through. The next candle continued on its way. There was such strong bearish movement at that point. And stochastics and things like that. All right. So let's do that. All right, so everybody wants to trade gold. Everybody loves gold. They see everyone in the groups making money off gold, and everyone says, Ted, tell me how to trade gold. And I'm going to tell you right now, gold is probably the hardest thing for you to trade ever. It's going to piss you off. You're going to want to strangle it, and you're going to want to beat it down to submission. And the reason why I say that is because gold works on so many levels. And when people ask me, I want to trade gold, tell me how to trade gold, I want you to learn how to trade a currency pair first. Learn USD JPY, learn USD CAD, learn the pound euro, learn pound JPY. When you start messing with gold, you're playing with fire. And what I mean by that is gold can move like 5 times faster than any currency pair in the wrong direction and blow your account very quickly. So, I will leave you with your own judgment. If you feel that you want to trade gold and you want to be a hero, fine. But what I'm telling you now is, as a new trader, learn a currency pair first, get consistent on the movements, get consistent on how things work, then move to gold. But with that being said, I'll teach you a bit about gold and how it works. We have a lot of documents in the Google Drive about gold. Many people trade gold. There's lots of discussions about it, how to trade it, when to trade it, why to trade it. So it's all there. You can definitely read them, review them, figure out what you want to do with them, but I'm going to give you the gist now so that you can, move forward and say, okay, this is interesting. So you want to trade gold. So basically you're looking at XAU USD. And it's, not always available in all brokers. There's country restrictions. Some countries can't trade gold. There's also some account balance restrictions. So you also have to be aware of that as well. So you might find that your broker doesn't allow you to trade gold. So that might be a blessing in disguise. But also too, your account balance might not allow you to trade gold because gold works on the 10th of a cent, not 100th of a cent. Or you look at currency pairs work on the 100th of a cent, gold works on a 10th of a cent. And gold doesn't always move the same way other pairs do. It has a lot of variables. And what I say about variables is, gold reacts to the equity markets. And what I mean by the equity markets is a stock market, like the New York Stock Exchange. Gold works against the bond markets. So there's a lot of other variables that it moves against other than just looking at normal support and resistance or normal trend lines and things like that. Why are some times on gold different brokers candles different from others? It's the liquidity provider and the price points that those brokers get it at. So there'll be different prices for different brokers. Some brokers have better spreads than others. Gold is one of those things where if you have a liquidity provider, you might not have the same prices. All right. So like I said, before you trade gold, understand, several pairs first. Learn USD JPY, very relatively easy. Learn the pound JPY. Most Japanese currencies are very easy to trade. Euro USD is very safe to trade. There's very movements natural. If you trade North American session, maybe you want to trade USD CAD because there's a lot of things like people live in Canada. They know a lot about the Canadian economy. It'll help you trade there as well. Here in this instance, your technical analysis has to be very consistent. And what I mean by that is you have to be accurate. You can't second guess yourself when trading gold because there's fake outs, there's movements that are unpredictable, but they are predictable if you have experience trading. You start to recognize what's going to happen and why it's going to happen. Here, you need fundamental understanding of economics. In other words, you don't need to, you don't ask me why Canada sucks or why USA sucks and why Canada sucks. These are innate things you should already know. So if you don't know a lot about economies and a lot about market structure and things like that, this will become very overwhelming because global economics affects gold. There's a lot of things that affect gold, and gold is so violent when it moves. There's a lot of information. And there is a correlation between gold and USD JPY, and it's basically they're both safe havens. So a lot of the world's currency, when the market starts to tank a bit, everything moves over to USJPY. And in terms of equity markets, when the markets move over, in terms of a bad equity market, everyone exits the currency market and it moves into metals. So it's like another safe haven. So that's why when you see people move to JPY, gold usually moves up. Do you make more trading gold or Forex? Well, Forex, it's trading gold on Forex. That's what we're doing. And I was just told the market's open, so we're good. Okay, so teach me to trade gold. Understand where gold moves first of all. It moves the best during the biggest markets. So North American market and the Euro market. Don't try and trade gold during the Asian session. Yes, it's possible to do that, but you don't have the volume. The Asian session is for Asian pairs. US JPY, pound JPY, Aussie dollar, stuff like that. You want to trade during those specific times. So don't try and trade gold 24 hours a day. Like I said, gold moves according to the equity markets. When the stock market goes up, gold goes down. Reason being, like I said, gold is a safe haven for when people are scared to invest in the market. You can review the U.S. index. That also helps you as well. And that'll give you some insight as well. And like I said, gold moves very quick and very violent. So you can get into big problems very fast if you don't know what you're doing or you're stuck in a trade. So here's the thing with gold trades, and like this is where I sort of deviate from normal trades, and once again, it's because you are understanding that you're working with a violent currency, so you want to get in and out as quick as possible. So I usually start with the 1 hour time frame, and keep in mind that gold is closed for an hour a day, so the 4-hour candle doesn't line up with the rest of the currency. So you'll see a new 4-hour candle for currency pairs, but the next hour after that first 4 hour will be the the gold 4-hour candle. So that's a little tidbit that you should realize as well. Gold trade closes between 5 and 6. What about silver? I'm not too versed with silver. Is it the Japanese market right now? Yes, the Japanese market just opened because it's Monday morning. So once again, you're looking for quick movements. Gold respects support and resistance very well, and also it respects trend lines. So you can ride various channels up and down, and we'll talk a little bit about that as well. So you can see here on the 1-hour time frame, you can see that I have the U.S. index item up in terms of what's going on. We tap a lot of things, and as we start to trend down, the USD index keeps moving up. But more importantly, you see a lot of consolidation, excuse me, and a lot of breakouts. So here you have a lot of consolidation, push down. You have a lot of consolidation, push up. But you can see once we tap these resistance areas, we're pulling right back down. Once we tap this resistance area, we're pulling right back down. But you can see how quick we can be very violent. So you're always managing these trades. These are very important. But more importantly is you're looking at specific support and resistance areas, and you're looking to see where you can maximize your efficiency in that aspect. This is the 1-hour time frame, H1. What is this indicator? This is the USDX indicator. It is the dollar average, and that is available in the Google Drive. So how do we execute? So essentially you're watching for exhaustion candles near support and resistance levels. And what you're looking for is you're looking for essentially movements to give you a range that you know you're going to be able to hit. And you're also looking for information in terms of candle patterns and how to grab those quick movements. So you can see as an example, I've done this in the 5-minute chart. Okay, so each one of these candles are 5-minute. We start to go in terms of our support and resistance. We have basically a 200 pip range essentially, because we're going from 61 to 59. And what you're looking for is you're looking to see areas that aren't broken, and as soon as it pulls down, you're getting in to ride it to a certain range. As an example, as you start to go through this, you'll see here, this is like a huge fake out, right? So you're like, okay, we're riding this trend all the way down. As soon as it pulls up here, we're coming back to this previous support level. Taking a buy here, more than likely we're going to get that rocket pushing all the way up again and then all the way down. But when you get to this point over here, this is where you start managing your trade, right? So you're looking at 5, 10, 15, 20. This is a 15-minute trade, and you've basically gone 100 pips. So you've gone from 58 to 59, and you're out. So in 10 minutes, you're out, and you've taken your 100 pip profit, which I normally do, is, you're trying to master these movements, but also being aware of where support and resistance are. Because what ends up happening is you can see we have this fake out at the bottom. Now we're creating movement. We come tap the zone again, and now we're pushing up. So more than likely, we're going to keep moving that direction. So you have to be aware of the market moving. And also, more importantly, you have to be more aware of market timing. And there is a gold document in the Google Drive you can read, and I give you specific timing on when the easiest times to trade gold are and what you're looking for when you trade gold. All right, so we're almost done. We're actually pretty on schedule. So let's take a 5-minute break. We'll come back at 5:15 or a quarter after the hour, wherever you are. Take a break for 5 minutes, and then we're going to come back in, and we're going to talk to some previous people, and hopefully people that are around in my groups, they will be available, and they will come and chat and answer some questions, and we'll go from there. But take a break. If there's any questions, let me know. We are on break. USDX is the name of the indicator. It's in the drive. I'll find it afterwards for you. How do I access the Google Drive content? I will tell you. Okay, Anthony's here. Good. Is there a chat I'm missing in here? It's just Q&A. Your stops are placed according to risk management and also what your trades are designed for, so it varies by person. Okay, so there's question talking about. Okay, so are we going to talk about risk management and risk reward ratios? Yes, we are. Do the support resistance trend line candlesticks wicks formation work on all time frames? Yes, they do. I guess it would depend on broker. Yes, it depends on your broker, your max lots you can trade. So what time will current gold currency be most active? Euro and North American sessions, and we will give you that information too. All right. Okay. Um, get ready in a minute to go. It's a question here. If I'm trading after 5 p.m., should I be doing Asian currencies here? Yes. Okay, we will cover compounding in the strategy session. We still have a lot more stuff to talk about. Please, one at a time. It's a very comprehensive webinar. All right, so we got some people here from previous webinars. So what I'm going to do is I'm going to unmute them, and if they want to talk about their experience, some of them have information regarding what they do, where they're from. I know there's some people here from the UK, there's some people here from Africa, so it'll give you an opportunity to connect with them afterwards as well, because they'll be in the other groups, but they'll just give you a little bit of background, some expectations of what they want to do. So, you're up, Mr. Forex Six God. How are you?
Hey bro, how are you?
I'm good. I'm good. So just Alex, go ahead and just chat for a bit. Let them sort of know your experience. I know you've been very active and working hard with a lot of people. So I think it'd be a great idea to sort of give your background, talk about a little bit what you do and how you've been working with this and all the success you've been having and all the pain you've been having as well.
Oh, okay, sure. Thanks, Dad.
No problem.
Yeah. So, my name is Alex. I'm Kirui from Kenya, Africa, and I've been a part of the Forex family since I think October. And the experience that I had before joining, like the Forex family, was everything was downhill. Like I didn't know like what I was doing as far as Forex was concerned, and I really needed some guidance and mentorship. And when I like met Ted and we talk, and yeah, I signed up for the webinar in October, and like I accessed all the materials that you guys are going to get in the drive, and it's really life changing, you know. And I just want to tell you guys, like, if you put in work, things will happen. Like you will get where I am right now, or where Ted is, or even much better. And I just feel like for you guys to be here with us, I think that's the best decision you guys ever made in your lives. As long as you just put in work and dedication, it's hard, but eventually you'll get there. I'm yet to get there, but I'm almost halfway there. So for me, I just want to encourage you guys and tell you that um there is no shortcut. Like this is success. Like you're already halfway there, and I've been consistent. Like from let's say January up to now, I've been having let's say one or two losses out of like 600, 700 trades. and that's something else. And I just want to tell guys, especially from Africa, man, like this concept is not yet here, and we are the pioneers. And for you to actually um get success in this, you have to be real with yourself and legit in your own beliefs. Don't let anybody tell you you can do this and you can do that. And as far as I'm like concerned, Forex is real, man. Forex is real, and it has changed my life. And I'm just grateful to the Forex family and Ted and all the other guys, Rakil, Raghav, everybody else. I'm just grateful. And so with that being said, I'm just welcoming you guys to the Forex family, and just let's have a ride and we can connect. Um, I may be joining you guys in the groups. I'll talk to Ted about that, and yeah, this is the Forex God here, and I wish you success in your trading journey.
Perfect. Thanks, Alex. I think there are people here from Africa, so I will make sure that you're connected with them as well, and they will also work with you. Alex, I think trades selective pairs based on his plan, and I mean he'll talk to everybody on that because he'll be in some of the groups, and I know he's starting to try and get some movement with in Africa and build out some things out there for him, and these are the things what we try and do as a group. You know, I promote and I support everybody that does that. I don't, this is something that he undertook himself and that he wants to do. It's great that he's doing that. And anything that he needs from us, we give. And, if he's going to mentor people or if he's going to do whatever he's going to do, he has the full support of us, and that goes for everybody moving forward. This is a way to learn and get better, and everyone can then help each other. So, I mean, he'll definitely go through some stuff with you. And like I said, he just wanted to talk to people about what's going on. And you guys will all connect, and that's why we use Facebook as a chat as the chat group. It's just easier to get everybody together, and everyone connects, and everyone starts to really get to know each other. So, I mean, it's a great example of someone who, like I said, in October joined my webinar, who now I consider a friend, and we've talked about different things, and I've helped him just in general with other stuff as well, just so it's, to see him progress like that, that's important for everybody, and I treat everybody the same. And the people that put in the effort, like Alex and everybody else, we're all brothers, we're all friends, and like I said, all around the world, we're trying to do what we need to do. It sounds cheesy and sounds cliche, but it becomes you're against the market. It's important that you realize, like, you have people here, like 400 or 500 people now that are like-minded. We have to battle the market together. We have to band together. So if there's information, you don't hold it back. You share it. You make everybody work a little bit harder. So I think we're doing that. I don't know if there's anybody else. I don't know if Anthony wanted to talk. Anthony's from the UK. Anthony, do you want to go? I unmuted you. Anthony, do you want to talk?
Yeah, I'm
Ah, there.
fine. I'm fine. Let me stop my stopwatch so I don't go over 2 minutes. Can you all hear me?
Yeah, I think we can hear you.
Right. First thing I want to say is, for well done for joining, guys. I mean, probably the best decision you ever made in your life. And what Ted says is absolutely. I'm not one for blowing smoke up anybody's arse, but Ted's absolutely bang on. All of the mentors, everybody's here to help me, help everybody else. They'll help you as much as they help me. The biggest thing, as Ted said, is the mindset. He can teach you, anybody can teach you how to draw support and resistance and what have you. The trader's mindset is really key. You'll get all the materials that you need to be able to do that. Study much, much harder than you ever have in your entire life. Ted will go over building a trading plan. Hey, the guys will even help you build a trading plan, whatever works for you. Listen to your mentors. When you get put in your groups, there's people in there who know more than you, less than you, and leave your ego behind. There's people who are 16, 17, who are millionaires, multi-millionaires, And those guys are great, you know. They'll take the time for nothing. They're after nothing but to help you. It's a fabulous place to be. And like I say, I'm not trying to blow smoke over anybody's arse, but just do as hard as you can, you know, put as much effort as you can, and you'll be rewarded. And everybody's there to help you. That's all I had to say, really. And, you know, I'll help anybody as much as anybody else will.
Yeah, thanks, Anthony. And I know Anthony is out of the UK. He's working hard. Um, he's actually building a group out there, just because there's a lot of people in the UK, similar to like in Toronto, that meet up and do stuff. So he's building that out there, and there's a lot of people in the UK area and out in Europe that want to get together. So I'll definitely have him in some of the groups, and you guys can touch base with him. If there's people in the UK that want to work directly with them, that's fine as well. I think it's important that everybody has that opportunity. So thanks, Anthony. I appreciate it.
You will.
Um, yeah, so I see people, yeah, everyone wants to, oh, yeah, so, oh, wow. What is this? I think we have a special guest. Is this the Forex God, Rag?
I think this is him, if you can call me that. But I'm more of a pit burglar, if anything.
Yes. So
But yeah,
guys, this is Rag. He runs his own mentorship as well. So the thing, there's a little bit of dynamics with the Forex family. Elias, myself, Rag, Rakeel, there's a couple other people. We all run various mentor groups, but we're all in all the groups together. We help each other. But the thing that separates all of us is if you pay for my webinar, you get my webinar information. But if you pay for Rag or Rakeel, you get their webinars. So we trade information back and forth, but it just makes it easier on everybody. So like I always say, you want to try and go with who you want to work with. We all share information, so it's not like we're hiding one from the other. But like webinar stuff and like this, like things that we take time to build, it's more of just a courtesy that you go to that person and you pay for that information. But they'll work with you on a daily basis. But a little bit about Rag. Probably one of the best guys I know in terms of just genuine hardworking. He's got a lot of grief. People once again bother him on Instagram because of what he does or how he does. But I think he's a prime example of someone who's young, ambitious, who built a trading plan and did his own thing. And I think it's important, and I mean, I'm happy that he's here just to talk a little bit today, and he'll give you his experience. And I mean, definitely feel free to reach out to him as well. He'll be in the groups, helping out as much as he can because he's got all his groups. But he's another great resource and a very, very powerful mind. So go ahead, Rag.
if anyone has any questions or anything, please don't hesitate to hit me up. Wherever it may be, I always make time for anyone who is definitely willing to learn. But yeah, a little bit in terms about um, my trading career per se, if you can call it a career. I think at this point you can. But I started trading about 4 years ago. I was in high school when I started trading. Started trading equities, things of that nature. I was a little bit skeptical and a little bit sort of held back from getting in to trading currencies because you have these different misconceptions about how there's more risk. And stuff like that, deregulation and things of that nature. However, I mean, there's a lot more financial scalability. Um, from my perspective, the problem is that I think maybe a problem, and it's definitely advantage to many people. There's a low barrier to entry in forex, right? You can start a small account with really a mediocre sum of money. There really and there's really more sort of opportunities because of leverage and things of that nature, and how overall um, the industry is structured to become successful. But you have misconceptions, you have different perspectives and different perceptions on how to trade this and that. I'll tell you right now, there's no right or wrong way to trade, quite honestly. It's really all about finding your edge as a trader and finding a strategy that makes you successful and makes you profitable. If you find it profitable to only aim for 5 to 10 pips a trade, and you can do that consistently with a small win percentage, and that's completely fine. But I think from the get-go, you really shouldn't be orienting yourself around making the money. You should really be sort of orienting yourself around becoming exceptional at analysis, finding a strategy, and really developing consistency, and really learning how to position yourself to capitalize on highly probable moves. That's really sort of what I sort of recommend that you guys focus on. I know a lot of people see the amount of money some of us are making, see the type of financial success that is possible in this industry, but don't let that cloud your judgment, right? I know at the end of the day we're trading money, right? But the actual pursuit of money isn't what's going to make us exceptional traders. The pursuit of becoming exceptional, developing a strong, consistent strategy, becoming great at conducting analysis. That's what's going to make you a great trader, and that's really what you should focus yourself around doing, from the very beginning. And that's what I sort of tell everyone. Right? I mean, it's all about sort of education, all about the consistency, and that's really what's going to, help you develop your own sort of ideas, your strategies, and provide you with your own personal edge. Um, the money really is tempting and things of that nature, but I really recommend that as a new trader, it's important that just orient yourself around becoming extremely educated. But I promise you the money will come. I mean, for me, it took a lot longer for me to find my edge than it did for other amazing traders, Ted, Rakil, Elias, so on and so forth. Sorry if I'm missing any one of you guys. There's a lot of you who I look up to, but it took me longer, quite honestly. It took me about 3.5 years or so before I finally that code finally clicked for me. But now that I look back, I really realize that what made me have a larger learning curve was because I situated myself around materialistic pursuits in the beginning. Um, per se. I mean, that's just really, I started when I was young, so I guess the money was really something that attracted me towards trading, and I guess the perceived um, limitless scalability, you could say, with uh, trading in general. So, I found myself pursuing things that I thought could really make me a lot of money, rather than just orienting myself around, what could make me a great trader, because we're all here to trade. But yeah, that's really my 2 cents around the subject. Um, but yeah, I mean, it's gonna be a lot of hard work, and trading is in my opinion one of the most mentally strenuous and stressful occupations you can really take up upon. I found myself when I was really sort of grinding it out when it really clicked for me. I was studying and really looking at things for like 18 hours a day for like a month straight. All I was doing was living, breathing, um, and just existing for the purpose of excelling in this industry. But it's a lot of hard work. It's definitely very strenuous in that sense. But you also got to understand it's a very introspective process. It requires a lot of self-reflection from the get-go. Um, for example, I mean, your personal situation, your personal circumstance, your day-to-day life, and your finances and stuff. Those factors are gonna impact the way you trade and how you conduct yourself as a trader, how you perceive things, how you perceive risks. So what I really recommend is when you're sort of building your strategy, building out your trading plan, you're reflecting upon all these things. It's really an introspective process, and each strategy needs to be individualistic and oriented around how you perceive things and how you can best, position yourself to reach all of your objectives. That's truly what it is. I mean, that's why I always say, and don't copy someone's strategy. And Ted says as well. I mean, don't try to mimic what works for someone else. We go, what works for us, what works for me won't work for you, and what works for me doesn't work for Ted. What works for Ted doesn't always work for me, and so on and so forth, vice versa, right? It's all about finding individualistically what's going to enable you to become profitable. And everyone has their learning curve. Everyone has their own way of perceiving risk, own ways of handling, stress associated with, different monetary risks, so on and so forth. And it's important that you find your own sort of balance within those things, so you can position yourself to succeed on your own terms. Yeah, that's really all I have to say. Yeah.
Perfect, right? Thanks a lot. And I mean, once again, he'll be available to help you guys, and he'll be around. So I mean, like I said, I've had the opportunity to work with Rag a lot, and very, very astute mind, and I think it just shows that we have, you know, the various people in here to come in and help out everybody. So thank you once again. Next we have Kevin. I think Kev is from our US of A, so I think you guys will enjoy having him chat with you guys. But he was from my last webinar groups. Very, very hard worker as well. So let's bring him on. Hey, Kev, you okay?
Yes, Ted. Hi. Hey, how's everyone doing?
Good. Go ahead, my friend.
Hey, so first of all, Ted, thank you for everything you've done. Thanks to everything you showed to the group. We always hit you up and you always respond in a timely manner. Guys, this is the best investment you could ever make. I could tell you for a simple fact, I've been trading probably for the last 7 years. I lost about maybe 70K in the market, and I'm still struggling to find my way. I am profitable with Ted, but I'm not hammering these trades out like everyone else. I could tell you that the simple fact that I'm taking my time as a trader. I actually reach out to his previous students a lot more than I reach out to Ted. Like Ted said, everyone is sorry, everyone here is willing to help you. I think I have a good relationship with Rag. Anytime I need any help with anything, I reach out to Rag. Actually, I just got off of a webinar with Rag, studying and going over some trades. Guys, feel free to reach out to any one of these guys. No one that I ever reached out to in the past has ever said no to me. So utilize these guys. I utilize most of these guys that's successful more than Ted. I just feel a lot comfortable going towards a student because they share their they share their struggles with you and what you're overcome. I know as a trader, I'm overcoming entries and actually holding my trades. So I actually think I found my niche. So today, I'm excited for the market to be open to see if I could utilize what Rag just told me on this webinar that we just got off of. So guys, utilize it. I'm surprised Ted could charge probably tens of thousands of dollars, and it's still, I'm thinking people will still sign up for it. Like for him to charge, I think 450, 500 is undermining it. Like I'm not exaggerating. No one paid me to have this conversation. I'm genuinely appreciative for what Ted done. I was a little bit skeptical when I first signed up for it. I'm like, okay, it's gonna be some next MLL crap. He's gonna show us this. He's gonna provide some nonsense. But trust me, guys, the material is it's mind blowing. Like I studied 24 hours, guys. I probably took two to three trades last week. I'm studying more than I'm taking trades because I want to make sure that when I hammer the markets, I want to be a profitable trader. We're all going to get into this like from the previous students, what Ted just showed you on the webinar. You'll be like, oh man, it's so simple. No, it's not simple. I could tell you that I was one of those who was like, oh man, I have to look at the wicks and the previous wick closed lower. Oh, that's a trade. No, it's not. Take your time, guys. I could tell you that in January, I almost blew my account. I had initially started off with about 10K, and I draw down to about 8K, and I had to deposit some more money because I almost blew my account. Now I'm up to 20K, and it's not because I'm an experienced trader. It's just I'm just taking those little trades at a time. So guys, take your time, please. It's hard to blow. I had to lose over 70K in this market. It's not easy. It's hard-earned money, guys. Take your time. The market's not going anywhere. I could tell you this. I probably won't take a trade today. I'll probably look at the charts till 6 p.m. Eastern Standard Time till 5 in the market, just to see the trends and see how the market goes. Not everyone can trade gold. Stay away from gold, guys. I almost blew my account with gold. I focus on UJ, and that's still a volatile pair, but take your time. I'm telling you this. Take your time. The market's always going to be there. It's not going anywhere. The most valuable information I think I've taken away from TED is the news. I remember a couple years ago when the Greece exit came out, I was trading options and I didn't know anything about news and I lost $30,000. But take your time, guys. Learn everything that TED is willing to teach you guys. I think there's a doc in the drive that called the first thing you need to start with that. It's very valuable information. And once again, guys, reach out to anyone. They're willing to help you, from Rev, Zeddy, Kevin, Ted, Daniel. All these guys are willing to help us. At some point, they was just like us as a struggling traders, and now they're successful. So just take your time, guys. The market's not going anywhere. Thanks, Ted.
Thank you, Kev. It's interesting because people come on here and they talk about the various information, and Kev's exactly right. I mean, and Anthony said the same thing. We're not trying to do anything crazy here or, do anything that's out of the ordinary. Um, it's really, at the end of the day, trying to help everybody. You're only going to be as good as the weakest link. And I've always professed that. I mean, I'm a little bit older than everybody else, and there's people here that are older than me now that are in the groups. And we mentor each other, we talk about life experiences, but it's nice to have exactly what I've said, the support of everybody. And, he, like you said, he reaches out to other people. He does what he needs to do. He, maybe he doesn't want to bother me. I mean, I never say don't bother me, but, he's more comfortable talking with somebody else because maybe, he relates to them better. And that's not offensive. Like, I don't get offended by that. I think it's great that people have those relationships within the groups, because at the same time, there's groups that have formed on their own because people have gone off and they said, we want to study together. So we'll be part of this group, but we'll also be part of that group. So I mean, it's one of those things, right? You just sort of do what you think, and you know, it's whatever you decide to do and how you want to do it. That's sort of your own track and your own course. But we're all here to help you out. So I don't think there's anybody else here that wants to chat. I'll wait to see if there's anybody else that pops in the chat box. If not, we'll move forward. Okay, I don't see anybody, but oh, does anybody else want to chat? No? Okay. Going once, going twice. Sold. Alana said she sounds horrible, so okay, that's fine. You don't have to chat. Okay, so next we're going to go through and talk about battling the institutions and institutional trading. So I think this part of the webinar you're going to probably watch a couple of times. It's hosted by Dave and Wes. I don't know if Wes is going to join us today, but Dave is around. He will be talking about this. He really dives into the art of the big banks and the way institutions think. Dave is a very astute trader as well. He's in some of the groups. He runs Mastermind FX, and there is something that we're working with Mastermind FX that we want to build something greater for everybody. So we're in the works of trying to do that. I'll let him speak a little bit to it and really help out that way. But other than that, his information that he has is very, very informative. It's a little high level, so this is probably the most advanced you're going to get in terms of trading and understanding and knowledge, but he's very good at what he does. And like I said, this is something you may want to watch twice or 3 times just to get an idea and a sense of what the institutions are doing, and go from there. And we can definitely talk a little bit more about it in the groups, but I'll bring on Dave. Give me a second here. Let me see if he's here. Dave, you available?
Yeah, I'm here, Ted.
Okay, perfect. So what I'll do is, do you want me to transfer over the screen to you, and you can take over and sort of do your thing?
Yeah, just give me 2 minutes.
Okay. All right, we'll give you 2 minutes. Oh, he's muted
Okay,
himself.
I'm ready. Sorry.
Okay, perfect. So I'll transfer the screen over to you, and go for it, Dave.
Okay, let me know when you guys can see my screen.
Yeah, give me a second.
Yeah.
Make presenter. All right, so Dave, you got control, so go ahead.
All right, perfect. Thank you. So you guys can hear me? Let's do a quick check.
We can all hear you.
All right, perfect. So basically, a little bit about my background. I've been working with Ted for, I would say, about 2 years now, 1.5 years, 2 years. Regarding Forex, we pretty much started at the exact same time. I was trading in the stock market to begin with, just buying and holding stocks, nothing too crazy, mostly just paying attention to the fundamentals and things of that nature economically, and that's how I got my start in trading. And then it ended up branching into the foreign exchange, and that's basically where we're located today, is mostly in the foreign exchange. The barrier to entry was a lot higher in the stock market and equities regarding competition. It's been publicly tradable for a lot longer, and the foreign exchange has been something that's more of a recent phenomena that used to be allocated only to very, very high net worth individuals and mostly, if not all, institutions. So that's pretty much what we're going to be talking about in this section here, is just giving you guys a little bit of insight on economic data, why it's important, technical analysis as well, and mostly just everything to do with institutions. So this is just a website. We're going to come back to some of the material at the end. We also have an Instagram if you want to check us out after. So that's a little bit about who we are. These are some of the topics that we're going to be talking about. And that's basically where we're going to start, is right into the institutions. So some background on how the institutions move the market, how they trade, why it's important to pay attention to them, and really the size of what they're trading with compared to what most people are just familiar with in the retail market. So here, an example here is a scenario that some fines got passed out to the biggest investment bank in the world, JP Morgan. They're located in the United States. They had a very, very massive trading loss from a single trader at one of their offices. It's called the London Whale because it was in London, and the size of the trade was basically the size of a whale. So, as I said, JP Morgan's an investment bank known as a market maker to traders. Their assets under management are accumulated from individuals, small and large businesses, governments, nonprofits, which are spread over deposit accounts, loans, credit cards, mortgages, capital markets advice, and mutual funds. So with JP Morgan's total assets under management above 1 trillion, over 70%, which is 700 billion, of these assets are actually invested in trading and very, very high risk. And we're going to get into why it's traded and why they have so much risk actually in the market. So all trading affects the movement of currency, whether it's stocks, options, futures, equities, everything that's tradable ends up factoring in and affecting the currency market. That's why it's such a massive liquid market. So the bank leverage is 50 to 1. So they have about 50 trillion active in the markets. So just because they have, $1 trillion doesn't mean that they only have a portion of that. They have their leverage basically up to 50 to 1, where they actually have market exposure of over 50 trillion. That's just one investment bank, by the way. So in the late months of 2011, there was a single trader working for JP Morgan. He lost a string of trades, resulting in a $6 billion hit from a single trader. With very little regulation and loopholes, too easy to capitalize on for the large funds and investment banks. It makes it an easy decision for them to put the majority, 70%, of their assets at risk in the trading markets. Since the investment banks' assets under management are so large, so many groups or individuals have their money invested in these single firms, the government concludes that the banks are too big to fail and allows them to conduct their investments in where they see fit. So you guys can clearly see, just from the topics talked about today, how in-depth and complex the market can seem. And it's not just for you guys, right? So in the political offices all around the world, they have, a very, very hard time trying to figure out how they can try to cap risk exposure in these banks as well, and things of that nature. Trading, from what we are going to be discussing, is very simple and straightforward in the methodology that we approach the market with, but trading as a whole, to try and understand all of the different strategies and risk exposure in a lot of these profiles, not just in Forex, but in equities and so on and so forth, makes it hard for regulatory bodies to try to regulate the investment environment. So because too much regulation would cripple the economy of growth, such as the need of investment from these firms and companies with IPOs or publicly traded on the market and the government keeps regulation very low in order to keep the economy stimulated and growing. So with the financial crisis of 2008, many investment banks collapsed, resulting in one of two options: either global depression from the failure and foreclosure of over 245 organizations, mostly including banks or government, or the second option was a government bailout using all funds from taxpayers' money. So obviously the government chose the second option, resulting in $700 billion taxpayers' money to bail out these institutions. With some of the largest investment banks in the world topping the list, JP Morgan trumps them all. They received $25 billion in taxpayer bailouts. So the government bill, the Emergency Economic Stabilization Act, allows banks of enormous size to be bailed out with taxpayers' money upon any failure that they cannot themselves pay off. So with this bill in place, and regulators too fearful of placing any regulation that would slow the economy in place, the banks move the majority of their assets under management in risk profile, knowing that regardless of the outcome, it's a win-win for them. So if they over-leverage, they win, and if they default, it's taxpayers' dollars that's going to be bailing them out. So with the 2011 trader known as London Whale as a prime example of how banks still have not changed since the 2008 crisis. Mention all of this to give you a very clear idea of how big this industry actually is and how maximum incentives after 2008 are given to the bank traders to get the highest returns with no chance of failure, which results in higher volatility in the market, making it obviously the best time for all of us to be traders. So with JP Morgan as one of the many large funds and banks trading in the market, you can see how they make the majority of their money, which is in trading, and how they move the markets. So when they place orders, noticing that a single trader had access to over $6 billion and took a $6 billion hit. So you can imagine with the tens of thousands of employees they have and the hundreds, if not thousands, of traders that have access to that amount of capital, how much they actually have leveraged inside the markets. So here's the government bailout bill of 2008. These are just a list of like the top, I think 15 or 20 organizations that received bailout money. You can see on the top here 965 recipients, 621 billion dispersed. 390 billion has been returned since the government gave them that bailout, which had no interest on top of it either. So it's basically a free loan from the government of billions of dollars of taxpayers' dollars. And then the total revenues from dividends, interest, and other fees is 303 billion that was given out. So obviously that goes to show you that they were actually incentivized not only from being paid out from taxpayer dollars, but secondly from actually continuing to make the wages that they make without really taking any hits. So you can see I've highlighted a couple banks on here. You've got JP Morgan, you got Citigroup, you got Bank of America. Bank of America was the biggest investment bank that got the biggest bailout, 45 billion. JP Morgan, 25 billion, Goldman Sachs, 10 billion, and Morgan Stanley, 10 billion. So that's just an example there. And here's a Wall Street Journal article showing the 2015 annual report has Deutsche Bank, which is a massive investment bank in Europe. Their exposure to derivatives currently is 41 trillion. So as I was saying, there's some proof that they are actually using up the full amount of leverage of that 50-to-1 based on the assets that they actually have on hand. So here's another example of some of the investment banks and their assets under management. These are in billions of dollars, so you can see JP Morgan is the largest there, 2.4 trillion total assets there. You've got Bank of America, 2.1 trillion, Citi, Wells Fargo, Goldman Sachs, 923 billion. The list goes on. So, we're not dealing with little banks or institutions. And if it goes back to 70% of their assets are being traded in the market, you can see why we pay attention to what it is that they're doing. So to show another very clear example that all investment banks are doing the same things, there was a former head of Goldman Sachs U.S. equity derivatives business in Europe. He he operated Europe, the Middle East, and Africa. His name's Greg Smith. You can look him up, Google him. He explained in a university lecture that with governments promising to instill regulation on the big banks after the 2008 financial crisis, still have less than a third of the act that they had put in, called the Dodd-Frank Act, has been implemented. 3/4 of the deadlines of the bill have been missed, and $400 million has been spent lobbying against the bill. So there's a clear indication, obviously, that the markets are here to stay, and as well as the banks getting even bigger than they were in 2008. So more money moving into the market. So Goldman Sachs is a U.S. investment bank, also assets under management of $861 billion as of 2015, and they have over 80% as of 2013 in trading. So they also had a $10 billion bailout in 2008, as mentioned. And there's another correlation that you can see, that these banks are all trading in the markets with most of their capital at risk. So with 75% of total Wall Street revenue coming from trading, the biggest players at the table are the pension funds, investment banks, charities like the Red Cross, university endowments such as Harvard, Yale, governments investing hundreds of billions of their dollars in Wall Street firms to trade. And CNBC has quoted that in 2014, the hedge fund industry alone had over 11,000 hedge funds with total assets under management of 2.6 trillion. And those are just hedge funds, those aren't investment banks, with on average 236 million per fund. So the top funds control most of the funds, with some of them having over 150 billion assets under management, like Bridgewater. And this represents the hedge fund industry alone offers enough liquidity to keep the market going in itself, with thousands more investment banks, prop trading desks, and large firms. It's the most lucrative industry in all of finance. You'll be able to see that very soon. So some of the top trading firms outside of investment banks are, here's a list of them. As mentioned, Bridgewater Associates, as of last year, 2 years ago in March, they had just about $170 billion in assets trading in the markets. There's a big list here. You can look up some of these firms if you want. Come back to this once it's recorded. Here's another list of some more firms. This one is a little bit dated. As you can see, Bridgewater is on that list when they only had $87 billion assets under management, but also, you see some investment banks on here as well, with Goldman Sachs and JP Morgan. These are their subsidized hedge funds. So that's not actually the investment banks. These are just some of their hedge funds. You can see BlackRock there also is a investment firm that has 5 trillion assets under management. So you can see they diversify in a lot of hedge fund groups as well. So how Forex became, the reason why a lot of you are on this call today and you heard about Forex is how did it become as large as it is, comes back to, what is the majority of trading come from, right? And that's obviously the US dollar is the most powerful, country in the entire planet at the moment. And then second would be the European Union, pretty much, right? So when and why was the euro created is a great question to ask when it comes to Forex, because it gives you a lot of insight on how this market came to be. So the European Union introduced its new currency in January 1st, 1999, the euro. Originally, euro was an overarching currency used for exchange between countries within the Union, while people within the countries continue to use their own currencies. So obviously, pairs, as Ted was mentioning earlier, euro USD, there's a lot of euro pairs, a lot of US pairs. So that's where a lot of the volume comes from. So that brings us into a little bit about price action to begin with. So some quotes here from some of the top books on investing. This is one called Inside the House of Money. Top hedge fund traders on profiting in the global markets. Stephen Dromby, billionaire. He mentioned the collective knowledge of a group of people is always higher than the individual parts. So even recognizing for experts, price action tends to confirm that. So the price action never lies. So what you can take away from this is that price action is more accurate than trying to articulate a vast amount of fundamental data from a variety of different sources. It's obviously what Ted has shown earlier. You really can just look at the price and have a pretty good understanding and clear picture of where price is likely going to go towards. So 75% of price movement happens only 10 to 15% of the time. You'll learn that very quickly once you have started trading the markets and periods of consolidation, so on and so forth. You'll see that there's a very short amount of time that price actually moves massively, and then the rest is, as it says here, nothing but noise within a range. So the 10 to 15% is where we focus the bulk of our entries. The next quote is from George Soros. He's the richest hedge fund manager in the world, also known for making over $1 billion shorting the Great Britain pound in a single day. In his book on the theory of reflexivity, he talks about theory of reflexivity in his book, The Alchemy of Finance, stated that when it comes to the markets, the participants' views influence the course of events, and the course of events then influence the participants' views. So it's a self-fulfilling prophecy. When explaining the cycles of the market, which explains that as traders, the number one common trait is to trade with the trend. And as traders pile on orders trying to get the most returns out of the market, the fundamentals that caused the trend in the first place is typically then surpassed, and then the fundamentals change again, once again. So from being forced to be revalued from the massive surplus in underlying economic predictions. So since this continuously happens in the market, technical analysis side of trading can become valued higher than the fundamental side. So that's why you see most traders focusing more so on technical data rather than economic and fundamental data. So we're going to talk a little bit about economics first, then we're going to be getting into some technicals as well. So the definition of what economics really is it's a description and analysis of the production, distribution, and consumption of goods and services of a country. It's very simple, right? So what's happening in an economy. In order to analyze how much you think a country's currency is worth, you need to evaluate the economic situation of the country in order to more effectively trade currencies. Simple, makes sense, right? Very, very logical. So economic indicators are reports that detail a country's economic performance in a specific area. These reports are usually published periodically by government agencies or private organizations, as we'll be talking about later with some of the sites that you go to view the most current economic data. As Ted was talking about earlier, most traders just call it news, right? So what news is it's economic data that's factoring into what you're seeing in the charts and trading. So here's a little bit of what had happened this week. A lot of traders made an absolute fortune. Some of the biggest firms out there had some of their biggest days, if not in their lifetime of their company, or in that single day or for this year, right? So as interest rates was released this week by the Federal Reserve, there was an interest rate statement in the United States increasing their interest rates 0.25%, but the statement that Janet Yellen, who is the head of the Federal Reserve, had given had propped the market up a massive amount, as you can see here. With this being on a 4-hour chart, each candle representing 4 hours of activity in the markets, you can see that there's one massive green candle compared to, the, if not 100 previous candles there that you can see on the chart. So you can understand, the importance of what was it that happened in that single event and what was it that changed from that downward cycle that we were in to now very, very bullish nature in the charts, right? So this is something that you're going to learn the importance of. You don't need to fully understand it right away in the beginning, but you can clearly see that there was something massive that happened, and most people would want to know what was it that happened, right? So a little bit about this was on the 15th, the Fed, as I had mentioned, had raised interest rates in the United States due to inflation, which we're going to talk about in a little bit here. So as you can see, the US dollar index and interest rate correlation did the exact opposite. So as the US economy raised interest rates, it dropped down the US dollar, right? You can see that massive red candle there, and it propped gold up. This is gold, by the way. So gold went up from an interest rate statement, and the US dollar went down, right? So there's a little bit about correlations that you'll learn as you're continuing on, but that's just one of the correlations. Comes back to what Ted was talking about with gold as a safe haven. As there is uncertainty happening in the United States, people move into safe havens as basically an insurance policy, right? We'll talk about that in a little bit. So here's some economic data regarding interest rates from PIMCO. They're a very, very massive institution managing trillions of dollars. So this is a little chart that shows you the blue line is inflation in the United States, and I'm going to describe what inflation is in the next couple slides. Then you have the yellow line on the chart, which is unemployment. So you can see that as unemployment rose, inflation was down, right? And then as unemployment came down and was low, inflation started to go up, right? So what is the correlation there, and how does that affect interest rates? So you can see here is another quick chart. Gold and the US interest rate correlation. So as interest rates on the left-hand side of the chart were going down, gold was going down as well. And as interest rates start to go up, gold starts to go up also. So you can see the identical correlation that depending on what's happening with interest rates, you can look to the charts and find amazing setups just due to simple correlations such as inflation. So how interest rates play a role in Forex, as I mentioned, when the amount of spending and income in an economy grows faster than the production of goods, prices obviously rise, right? We have a little thing here in Toronto where, a lot of people are making a lot of money and a lot of people are buying a lot of real estate in Toronto, and the prices are going up. They're inflated. You get a condominium there for $1 million. Is that condominium really worth $1 million? Does it cost $1 million to make that condominium? No, it doesn't. But because prices are inflated in the area, people are willing to pay that, right? So that's not typically a good thing long term. So that's just an example of what inflation is. So when prices rise, the economy enters into an inflationary stage. The central bank doesn't want too much inflation because it causes problems, as mentioned. And then as the central bank, which is the Federal Reserve in the United States, sees prices rise, it raises the interest rates, which they just did on the 15th of March, which you saw in those chart examples that I had shown. So with higher interest rates, fewer people can afford to borrow money, and then the cost of existing debts rises. So things as mortgages, it'll be more costly as far as the interest on your mortgage will go up. And then for people that already own assets, that own things such as mortgages, their interest rates also go up. So it costs more to service the debt. So think about this as the monthly payment on your credit card simply just going up, right? That's basically what interest rates are. So because people borrow less and have higher debt repayments, they have less money left over to spend. So spending in the overall economy slows down. And since one person's spending is another person's income, incomes drop. And then so on and so forth. And then it's a downward cycle, which leads to recessions and depressions and so on and so forth. So therefore, as U.S. interest rates go up, the U.S. dollar weakens, and investors move into gold as a safe haven to also as an insurance policy against a weakening or inflated U.S. economy. So it's going to get in. We're going to get into some of the institutional things that we actually look for as far as the charts. The first one we're going to talk about is institutional sponsorship and why we want to be on the right side of the market and how to tell what side of the market the institutions are on so we can be more correct than not. So who are the institutions? As mentioned earlier, they're investment banks, large-scale funds. Why is it important to understand how they function? Because as retail traders, we need to understand that we have no impact on the direction of the market and the way that it moves. Only large institutions can do that simply because of the size of their trades. And that goes back to showing you how vast their assets actually are that are being traded in the market. So an investment bank can have over $1 trillion in assets under management, if not more. Where their funds come from is mainly 401ks, pension funds, large-scale charitable organizations, as mentioned, like the Red Cross. Because they have access to these funds, 70% of their assets are being traded on the market as a whole. So the first thing we're going to look at is the top-down analysis when it comes to trading in the charts, things that all of our top traders start off with typically at the beginning of the week and continuing on week after week. So you always want to conduct your analysis from the highest time frame down. So you have the daily/weekly chart. You want to find your long-term directional sentiment. You can use the 4-hour chart to plot your support and resistance using about 20 days of data, determine trading conditions, and then use your 1-hour chart to narrow down the entry based on your strategy, and then finally the 15-minute chart to execute your trade by determining precise entry points. So the next thing we're going to look at is range trading. So what is a range? Range is a high and a low of a set amount of data in the charts. And as price begins to respect these highs and lows, it begins to bounce between the range, just as if you're playing Pong. So it's just bouncing up, down, left and right. So most beginners aren't aware of the range, therefore they can get trapped in buying high and selling low. That's what we want to try to avoid, is buying when it's not time to buy and selling when it's not time to sell. It's like real estate. You don't want to be buying at the top of a market. You want to wait till it crashes to be buying. It's the same thing with trading. So the objective of range trading is to buy low, sell high. Another problem beginners have is closing trades. Because they have no idea of the range, this can lead to gambling and marrying trades, not exiting when you should and holding on when you shouldn't. So when trading in the range, make sure to determine your take profit point always before you enter. So here's an example in the charts of what a range looks like. You're going to see this pattern over and over and over again once you start your trading. The bottom line there is what you can call a support. Top line is your resistance. And then you have that nice range where it pretty much goes to the same area on the top every time and pretty much the same vicinity on the bottom. So the bottom's where you can set up some nice buying opportunities, and the top is where you can be selling. So what consolidation really represents when the market's not doing anything, it seems, when it's just sitting there, it's not moving, there's no volume being traded, it looks like, it's not appeasing for retail traders to be in the market, right? We want to make money in the market. We don't want to sit there and just have a trade that's just stagnant, right? So what institutions, when institutions and market makers cannot fill their orders unless they have liquidity, they also do not want people riding on their coattails, right? Because then you're taking liquidity away from them. So once they have the liquidity they need to move price where they want, significant moves in the market that's when they occur. So in order for the market makers to hide their massive positions, they slowly add in their orders as price is either moving in the opposite direction or of the trend, or by filling their orders during consolidation, right? Because the thing is that their orders are so big that they need to either be hiding their orders or putting them in when they can put them in because they need the liquidity. So why retail traders view consolidation as unappealing and an unappealing time to trade, which allows them to be stacking their orders and sneak them into the market basically when no one's looking. So consolidation, when the market makers are able to fill their massive orders, broken up one block at a time to lock in the best price. So when they have the majority of their positions filled, they're able to put the last bulk of their orders in all at once, and then that's what causes the extrapolated moves in the market. So here's an example. If you look in the first blue box there, it's pretty unappealing. Like if you're, let's say you're swing trading this at 15-minute time frame, not too bullish, not too bearish. It's just moving sideways, right? I mean, there's some scalping opportunities in there for sure, but you can see in that time frame, you have the market going up a little bit, down a little bit, right? So that's the market makers are stacking orders in there of which direction they want the trend to actually be going in, right? So you can see just up and down, sideways, and then as we get to the right green box on the screen, you can see that massive move of 115 standard pips or 1,150 micro pips. And there you go. By having the higher time frame bias, that would have been a nice profitable move, right? The overall direction of the trend. So that's where the market makers are hiding their trades within a consolidation. So the next topic is buying dips and selling rallies. So you have retail traders generally that have the herd mentality and chase price action. So they're chasing price. They don't know which direction it's going in. They just want to be in and out of the market. They don't really understand what's going on. They just, come home from work or whatever they were doing for the day. They see price moving down. They take a sell, right? They buy, they sell based off impulse, depending on the direction price is currently moving. And typically that's on a very, very small time frame. So for example, a new trader may have just got home from work, as mentioned, decides he wants a piece of the pie, enters in the market anytime a large move had already occurred, right? So that's the wrong thought process, which can result in large losses due to late entries. So market makers place the bulk of their orders during reversals against the overall trend, And when trading your strategy, the best time to buy is when price is making a dip, if it's in a bullish market, bullish sentiment. So a dip down in price, and the best time to sell it in a bear market is obviously when price is rallying up. So here's a little example here with a bullish trend. The market makers wait for 1,067 pip reversal, buying on a dip down in price. So boom, you see price go down. In a bull market, dips down. That would be the best time to typically buy, right? So then as we move to the right side of the chart, you can see as the market trend begins to shift bearish, the market makers wait for that rally back up, about 1,327 pips, reversal to continue their entry, selling as the price had rallied back up. So by buying the dips and selling the rallies, the market makers ensure they're getting the best price. So trading with an edge. So this comes down to obviously more confirmation or confluence is a higher probable trade. But you want to try to avoid too many indicators on your screen, as the indications can begin to contradict each other. So stick to a strict trading strategy that uses the same confluence factors every time. And with the proper strategy, this is what's going to give you an edge over time. And what you want to typically be doing is session trading. So we're going to talk a little bit about that, where you're trading the pairs, your currency pairs, within the current trading session. The market tends to retrace before the open, followed by the move with the trend after the open. Now, why does this happen? Now, what is an open? We're going to talk a little bit about an open in a minute here. So why does this happen? Most volatility occurs upon the opening of each session. Therefore, the market makers begin pricing in at that time. And like we've said, they're getting a premium price. So as the sessions close, institutions begin to cover their positions, close them out, and take their profits, right? So what is the opening or a close of a session? So we have a little chart here of the Forex market times. You've got London. This is Eastern Standard Time, this chart, so it may be dependent on differently, dependent on where you're from. So 3 a.m. here in Eastern Standard Time, Toronto area, New York, is when London opens. So then you have London open from 3 a.m. till 11 a.m. Then you have New York crossing over with London from 8 a.m. till 4 p.m. And then from 8 a.m. till 11, you can see London and New York is open. So that's a very, very peak time of volatility. And then you have Sydney from 5 p.m. till 1 a.m. and then Tokyo from 7 p.m. till 3 a.m. So weekly insight. How do we view our trading week after week, right? Just rinse and repeat. So Sunday typically is when you want to start your analysis for the week, if you haven't done so already on the closing of Friday. And then Sunday to Monday is generally very little directional premise. Tuesday's London session is generally the high or the low of the week. That's a probability, not a guarantee, but you will find that Tuesday is typically when the market has the high or the low of the week, depending on what the overall direction of the trend is. So Thursday is typically the reversal for the week as institutions close their positions, as Thursday for us here in Canada or in Toronto is Friday morning for a place like London. So they're closing their positions out as the day is going on. And then Friday, bank traders have already began their weekend. This means there's going to be low volatility, and you want to be careful of getting caught in a trade over the weekend, as the market tends to gap. You want to be careful of that. And there's also news over the weekend. So Tuesday having a 70% chance of being the high of the week. You can see here Tuesday's London session. This is a bearish trend, obviously. You can see Tuesday was the high of the week, and then you can see in the second box here we have Thursday's trading, which was the reversal of the market. So as institutions are closing their trades out, close them out, and then take their profits, which results in the opposite side of the trade pushing the market up in a downward trend, right? If you're closing your position and you're in a sell, that's going to act as a buy position because somebody has to buy it, and then vice versa for selling. And vice versa for buying, sorry. Institutional order zones. So what are these? It's a region where banks value price and stack the bulk of their massive orders. Order zones occur in trending market conditions. Bullish order zone is large bearish body with small wick. It's typically the last bearish candle before a very, very large move up. And then the opposite for bearish order zones, which is a large bullish body with a small wick, and it's the last bullish candle before a very large move down. So bullish institutional order zones here is an example. So you have the first arrow there on the bottom, the last bearish candle before the large move up, and then you can see as we move on to the second arrow to the right, price goes all the way up, came back down, touched right into that body of that first bearish candle, the red candle before the up move, then bounced off of that very, very massive move, comes back down, and then the new order zone there is that second bear candle before that big move up, and then price comes back down, bounces right off of it. So for a total of a 4,052 pip move. So price action comes back, taps into that, and it's an opportunity to buy, right? So you want to look for that in up moves. It's the last bearish candle before the massive up move for price to eventually come back to that point as a great place to buy. And then here's a bearish example of institutional order zones. It's the last bullish candle before a massive movement down. You can see as price starts to move down away from that area, starts to reverse back up, comes right back to where that bullish candle was before the first leg down, taps into it, starts to move down, taps back into it again there with that wick, and then boom, you can see that massive gap down there, huge gap down, 5,198 pips. So these are typical areas that we base a lot of our entries on, not only when we're scalping, but swing trading also. So here's a monthly institutional order zone. You can see here this was on gold. You can see that last bearish candle, and these are significant, obviously the most on the highest time frames, but they work on the lower time frames as well. So you can see that last movement there, bear candle before that massive green movement up, is where institutions place the last bulk of their orders before that big movement up. And you know that the next time the price comes down to that level, it's going to shoot away from it again. There's going to be a high probability that's going to happen. And then that's where you can catch very, very vast moves. So here's another example. This one's on US CAD daily chart. You have that bullish trend and that last bearish candle. Price jumps away from it, comes back down, taps into it twice, and then expect that next movement forward going bullish again. So what are stop raids and liquidity pools? So institutional traders' main job is to provide liquidity to the institution. The institutions move the market, therefore they cannot buy if somebody is not selling, and vice versa. Market makers will move price to specific areas to hunt for liquidity, and raid stops of the large funds. Finding these areas are significant and give the ability to catch very, very large moves. So liquidity pools can be found on all time frames, but the higher the time frame, the more significant the raid will be. Stop raids can push you out of the market by closing on your order, even though your intended direction was correct. Just that quick, massive candle down, hits your stop loss, stops you out of the trade, then goes in the direction that you had assumed. So time in front of the charts will give you more clarity of when these stops will have happened, but there are some examples that we can go through here. So everywhere there's a bullish X or a bearish red X is an area of clean support or resistance. Since banks know the majority of stop losses will be placed above or below the previous high or low, they raid these areas, which provides liquidity for their massive moves away from those areas that follow. So you can see there, you have that first blue X there on the bottom, you have that support, and then price respects it, then you see a wick go right through that line. That's what you can expect as your stop raid. Typically the last low, so that first wick there to the left would be a low that was made on the chart, and then traders expecting that bullish run. You can see it wicks down, hits most of the stop losses, then they have all that liquidity and they jump price right back up. So it's the same thing for the next X. There you can see the second blue X. You have price come down, make a nice support off that level, then that second red candle shoots the wick right through it, stopping anyone that would have their stop loss right at the bottom of that wick. right? So then you see price go up. So to the third blue X, you see a nice support made there. You can see we're in a trend here where we're making higher highs and higher lows, makes that nice support. Then the two red candles, that second red candle comes right below it, stops anyone out, then boom, massive movement away from that back bullish. So then we go to the red X. So now on the downside, as we're in a bearish market, bearish sentiment, you can see this red X. It marks where people would be having their stop losses in sell orders. So, you know, let's say they caught a very nice position there towards the top of this sell-off, and they're moving their stop loss down accordingly. They're going to want to move their stop losses down to where the previous lows are, right? So as they're making lower highs. So as they keep making lower highs, move your stop loss down, lock in more profit. Price starts moving down massively. Then that second red candle there shoots right back up. That wick goes above where most people are going to have their stops out, and then price shoots massively down again. And then there's the third example. Obviously, it's self-explanatory now. You can see that happened again. So very frequent that this happens, but like I said, time in front of the charts, you really start to see this stuff happening over and over. So fake outs. Fake outs are the next thing you guys are going to want to pay attention to. And don't worry, as Ted said, if you guys aren't getting all this right now, I don't think I have the ability to answer any questions at this point. I don't think I have access to the question panel.
No, there was a couple. Sorry, Dave. There was a couple just in terms of the charts. If you can sort of scroll with your mouse, just so that they can keep track with things. That's about it. But yeah, other than that, everybody's good.
Okay, good stuff. So as mentioned, you know, this will be recorded, so you guys can come back and watch this, and you have any questions, feel free to reach out as well. So fake outs are very common in trading, but they're not what the retail world thinks of as a fake out. As stated earlier, the banks need liquidity to trade, so they will manipulate price to fool the majority of traders to enter in on one side, then move price with conviction totally in the other direction. So it's like a basketball fake out. You know, you go move one way and then slide to the other side, and people are breaking their ankles. It's the same thing that's happening in foreign exchange. So normally after 12 p.m. Eastern Standard Time, you'll see price move in the opposite direction of what your analysis states. This is a topic that we train in our private training groups, very, very in-depth topic, but this is typically what you see. Your analysis against your analysis in the direction of the trend, and this normally will lead up into London session before you see it turn into the actual direction, which ends up stopping the majority of retail traders out, confusing them, and makes them think, oh, Forex is rigged. So we can show some examples here. So as price was moving in the up direction, you have that last low there, as mentioned before. Just over 20 pips below that is where you would have your typical stop loss for the majority of traders, 20 pips stop. And then as price goes up a little more, fakes everyone out. You know, they think they're in that buy order, the trend's starting to trend up, they're maybe in some profits, and then you see, boom, price spike right back down, right down to where that stop loss would likely be placed, hits that little liquidity pool there, and then this is what we call a fake out. So it's a suspected area where stop losses will be, triggering buy stops for the market maker, right? So price moves with conviction, the opposite direction, fools traders to think price is going to be going short. So what is the difference between a retail mindset and the institutional mindset that the banks have? Well, retail traders do not move the market, obviously, once again. Only large-scale institutions and funds have the ability to do that. To move a country's currency, as simple as 1 single cent requires billions of dollars of liquidity. So, for example, most traders will only trade up to, let's say, 10 lots. Maybe you have people in Ted's group that are doing about 100 lots. Whereas institutional trades are about 2 million lots or more on a bad day. So banks need all the liquidity that they can get, which is why they do not like traders riding on their coattails. It's just taking money away from them with the liquidity. So the majority of Forex knowledge that you'll find on Google is herd mentality, and easy for the banks to manipulate and push people out of the market, since the retail traders are doing all the same thing. They're all taught the same indicator. You know, Google, everyone is doing the same thing. But luckily you guys are on this webinar. Now you're going to be very, very informed. So to think like a bank, you must fully understand price action and how banks trade. We've touched upon some of the ways that they think, which leads us to the next segue of that topic, which is premium price. So institutions and market makers are greedy. They like to get the best price that they can when it comes to trading, so they'll move price to that area multiple times, getting the best returns. And then this is what we've already listed as institutional order zones. This is another example of it. So market makers will continuously drag price back down or up to specific areas where they're factoring in their best price point before they move price with conviction away from that area. The reason they do this is to hide their block orders that they're placing, as well as get an entry at the cheapest price and make the most money on. These levels are very clear to pinpoint out, and you'll have an understanding of price action from an institutional perspective, which can be profitable very, very, very much. So here's a premium price candle or bullish order zone. So you can see that last red candle with the least amount of wick prior to that massive movement up. See if I can move my mouse a little bit over here. So just down below this level here, you can see, boom, price just shoots massively up away from this level. All right, then price comes all the way back here, and the market makers enter in the same spot multiple times, giving them a premium or discounted price to enter, allowing them to stack orders before a big move. Once the bulk of their orders are placed, you see a large move with conviction away from that area. So you can see price moves with conviction away from this area here, taps into this zone where we first saw the biggest move away from it, comes back into it, taps into it once, comes down, taps into it again, third time taps into it one more time, and then it starts to move massively away. Now this would typically be a good entry. You know, it doesn't really matter depending on your lot size and your account size. You know, you want to use accordingly use your risk, but you could get in here anywhere within this block here, and this would be a great place to enter into the trade, right? And as you can see, as they're stacking their orders here, they keep dragging price down because they're making the most money by capturing the move from here, not from up here, right? So as they're stacking price, you can see price starts to move away from that area. You'll start to see these in your trading once you spend some more time. As mentioned, don't expect to get this stuff right away. So the higher time frame obviously is going to give you confluence of higher probability. So when trading, it's very important to use the higher time frames to build confluence towards a trend direction so that you do not get caught on the wrong side of the market. So you want to picture a higher time frame as sitting in a room. Let's say you're sitting in a boardroom. You have 100 of your professionals that are telling you something is correct in one of your questions, or sitting in another room with a single person trying to desperately convince you that it's wrong. So that's where, you know, the fake outs happen, where, you know, you could see price going down, and that's where the fake outs happen, where, oh, you know, it looks like price is going down. You get caught on the wrong side of the market. So the 100-to-1 ratio here is you have a time frame that's a daily time frame, a weekly time frame, and a monthly time frame. You've got a lot more confluence in the higher the time frame because it makes up a lot more of time in that period. So when looking only at the lower time frame, it's easy to get confused or lose sight of which way you should trade if you don't have the higher time frame bias. So it's a weekly time frame of Euro USD. Each candle obviously represents a week's time. So rarely do higher time frames range trade. So having a higher time frame directional bias leads to a higher probability of being on the right side of the market and leads to more wins than losses and more conviction. So with a higher time frame bias, you can drop down time frames and trade in the direction of the trend, making you more consistent. So you can see here to the right of the chart, you just have that smooth bearish downswing where, you know, anywhere throughout that time, you could clearly understand that the market is going to be continuing a downward trend. So you wouldn't want to be obviously a swing trader and be a bull in a market like that. So the big picture here. So in 2015, we're just going to go through some statistics of some of the top hedge funds. The 2015 top hedge fund manager earnings, number one was Kenneth Griffin of Citadel Securities. This individual owns a hedge fund, a trading operation, a trading firm, and they trade all the markets, including obviously mutual funds, stock market, and majority of currency trading as well, right? So they all interconnect with each other, but currency is one of the big asset classes that a lot of these fund managers trade. So you can see these are just a single year's earnings for some of the top fund managers. So depending on what it is that you're really looking to do in this industry, your career can scale to the highest level or anywhere in between. But there's literally, as I think Rag said it earlier, there's no limit to what you want to do in this industry. Obviously, it takes time, it takes effort, but the possibilities are wherever you really want to take it. And that's what we're looking for, is we want people that really take this seriously, because we have next level stuff that you could be introduced to as well. So. And then that brings us to our conclusion. So we have an upcoming platform. I know a lot of you are probably a little bit confused on some of the topics that were spoke about in this session. Just from our section, this was mostly advanced institutional insight, economic data, a platform that we have that's coming up soon. We have a website. What we're going to be doing is you're going to have the most up-to-date economic insight and information regarding the foreign exchange. We have connections globally to all sorts of organizations, including hedge funds, investment banks, and the most up-to-date economic information from actual Bloomberg terminals that the top institutions use. So these are some of the tools that we use to actually have the most current analysis in our trading to keep us with that edge at all times in the market. So this is something that we convey to all of our members that are part of what we're doing. Obviously, we're working together here with Ted, so that's something that we're going to be coming to basically a unit of getting this together on this platform, so you guys can have the most up-to-date information. So we also have currently over 10 levels and tests for traders of all experience levels, from advanced topics such as some of these to really, really, really in-depth topics that we did not even speak about here. Really, it depends what you want to do with your trading, right? So some individuals like to learn a little bit more, and that's what we specialize in. So we also have a live proprietary chat room on our website, a forum with all technical analysis and updates, economic fundamental updates, and live daily sessions from our top traders who have made anywhere from 6 to 7 figures. We're working with some traders that also have access to the equities market. So if some of you were interested in that as well, we also have some traders from the States there that have a lot of experience that we've collaborated with now, that have 6, 7 figures out there. And you'll be able to see live analysis just like we were going over today. And you'll be able to ask any questions that you have, similar to the way that this webinar is set up, but on a daily basis with our traders, and you'll be able to rewatch those videos that will also be recorded. We also have an incentive program that we are putting together for our top performing and most collaborative members. Obviously, as you can see, Forex is very profitable, so we want to make sure that we're spreading that around. And then there's much, much more. So this is stuff that's going to be coming soon. We're going to be working together directly with Ted to have this brought to you guys in the most professional manner. It's really the next level that we're looking to do. But I just want to pass it off to Ted quickly to just give you an overview of what we're really looking to do with this platform as we work together on it.
Yeah, thanks, Dave. I'll keep you unmuted if you want, or if you want to self-mute, just go ahead. There might be some questions, or if there's issues.
You can talk, and then I'll just show in the background a little bit about the site while you're.
Yeah. Okay. So Dave, this is sort of his brainchild, and like I said, Dave did say we've been working a while together, and he is actually he's part of the private equity firm that we own together. So this was something that we were thinking of, and it'll be open to all the Forex family members. And this is something that we don't know the timeline specifically, but it's it's in the works. We want to make sure that we have something that will be sort of the next level for everybody that is going to be part of this. And it's just a combination of a lot of information, a lot of ideas out there. And since everybody's looking for specific mentors or specific training, what we were really trying to do here is build out something where if people wanted specific one-on-one training, or if they wanted to do other information, or they wanted to have other things given to you. We were thinking of doing some sort of small token program where maybe there's you pay a monetary fee for like a half an hour or an hour session with people, see how that works. You as a trader could also then be on there and also educate people too. So I mean, it's just something that we were looking at as well. So I mean, we're going to definitely look a little bit deeper into this, and if there's any suggestions that people want to see with various ideas, I mean, we'll be open to them. But like I said, this is sort of something that's in the works. Dave's worked very hard on it, and we're just trying to tweak it for everybody in the group so that you guys get the most benefit out of it. Just because, I mean, at the end of the day, we do like a simplistic, Facebook group, and there's WhatsApp groups and things like that. So this is just the next level. For right now, I think in terms of costs, I don't think there'll be. I think everyone will be grandfathered into the system, and then we'll figure out something accordingly. But like I said, it's in the works. We're working on it, and we'll meet with everybody, and there'll be feedback in the groups on what people want and what they don't want, and we can go from there. But it's just something that Dave's been working on. He's very astute with institutional trading, and I think a lot of you guys, if you saw this past half hour, it is a lot to take in, but also at the same time too, as you start to understand trading more, you'll see how much of a benefit this is actually. So I mean, like I said, and Dave said the same thing. It's a lot to take in right now, but as we move forward, you'll find that it'll be pretty straightforward, and it'll just be an additional to your repertoire and also your education. So Dave, I don't know if you had anything else you wanted to talk about, or if you're good.
That's everything, Ted. Thank you.
Okay, perfect. Thanks a lot, Dave, once again, and we will be chatting with him, and he'll also be available to help you out. And like I said, he does private mentorship. He's super busy just with the firm and just running things on the side for himself. So he's part of the family, but he's more of like a cousin. He's around when you need him, but he's not actively as involved. So don't really pin it against him if you can't get a hold of him all the time. He's super busy with the firm, and no offense, but that's where we're heading, and we will obviously want you guys with the firm with us as well if you do want to take that opportunity. So you'll get to meet him and greet him a little bit more there too.
For sure. I look forward to meeting everybody.
Yeah. So with that being said, I'm going to jump back on, and I'm going to take over again. So we'll see that everybody's muted. Topic 6, we're just about at Q2. I think if we take a 5-minute break again, we will be wrapping up. So we've got 2 more sections to go, and we can pretty much wrap things up for today. So guys, take a break for 5 minutes, go grab a drink. If you have to use the restroom or washroom, go ahead and do that. And then what we will do is carry on moving forward with some strategies, setting up your trading plan, just going through some of the variables, similar things that Dave talked to, but we'll go in a little bit more detail. And then we'll go through some of my strategies, what I've been doing, and then we'll have Q&A, and then that pretty much wraps it up. And I'll be sending you next steps and talking a little bit about that. Okay, so take a break, guys. If there's questions, post them in, and I'll try and answer them, but I'll be on mute. Okay, so we got some questions here. Uh, Probably maybe 1.5 more hours, I think we're at this, and we should be good. Some people are dropping out. Like I said, if you have to go, that's okay. It's not a big deal because it's recorded and you'll have a chance to see it afterwards. And also at the same time too, I'll be sending out an email with the link and everything else, so you're good. Yeah, it's pretty crazy. Like some of the time zones, I do apologize. It gets a little messy, but like I said, I tried to accommodate as much as I could. It's just really hard to get everybody wrapped in a certain time zone. I figured if I started Eastern in the morning, we'd be okay, but then people are overnight, and it's very mess. But hopefully everybody's hanging out, and if you have coffee, you're drinking it or whatever you're doing. But I think people are good. How about the Google Drive stuff? Yeah, we'll talk about that as well. It'll all be there. Um, you mentioned grandfathered into the training costs of Mastermind. Yeah, so that's what we're trying to figure out is just, we'll be there too. No, the new project will be for everybody. There'll be probably some pay options, just similar to what we do now with webinars and stuff like that, and that's about it. Did you ever trade drunk? Nope, I never did. Okay. The Google Drive stuff is in this section as well. We'll talk about that too. And there's also a document in the Drive talking about Google Drive, but I'll mention all that in the email, so we'll be good there too. People are spending birthdays here. That's great. Happy birthday. I'm glad you're here. So I'm trying to give you somewhat of a birthday present. Yeah, most people are overwhelmed by this the first time, so it is a little bit tough. But like I said, just bear in mind that it's one of those things where you'll learn a little bit as you go now, and then you'll watch the video later, and you can rewind it and do anything you want. It's a very long process. You really just have to understand that it's not something that you're going to learn in a week. It might take you months. So I mean, just consider this part of the education. You'll get all the information. There'll be an email. So whatever email you signed up with here at the webinar, I get a list of that email, and you'll get an email later on about that. I'll post on Instagram and social media when I've sent it out, so if you don't get it, let me know. But more than likely, the email you sent here, you'll also get it back there. It'll be in the Google Drive. It's all saved there. We have all previous webinars in the Google Drive, so you'll be able to look at them there. What is the last topic? So we'll be good. All right. Oh, yeah, people are going to fly and have drinks with us. Yeah, we feel free to come and have drinks. Gets a little sloppy over here too. What is the last topic? Basically next steps and questions. We're going to talk about trading plans, strategies, building out risk to reward ratios, things like that. And with that being said, let's go on to topic 6. Are you ready to trade? Yes, we will talk about compounding and all that other fun stuff. Okay. So, talking about trading and talking about, various items, these are some things that you want to look at when you're talking about trades. So what I'm going to go through here is I'm going to run through some terminology to help you as you build out your trading plan. A lot of people you'll see take market orders, which are just entering the trades at the time that they see them, but there's other ways to trade too, and And looking at what we have here, we have buy stops and sell stops. What that basically means is when price is moving in a certain direction, if you place a buy stop, the order will execute as price is moving through that direction. So if you want to look at a chart, and I'll bring up a live chart now, if you said as an example, like right now, let's go into USD JPY. There's not that much volume, but if we go into a minute candle and we're saying, okay, at this point we have an upward trend, it's going to hit a trend line, and now we want to take a buy stop in this region here. So what I'm looking to do is I would take a buy stop at this point here, and then so as price decides to come back up, it hits that and it becomes a market order. And what happens is now the order continues and it's a buy in that spot. Sell stop is if I took a sell in this position and now price is starting to move, as soon as it hits this order, the order would be executed. So for people that are working full-time and working during the day or working at a time that they want to trade, you can set these anywhere you want. Like I could set a sell stop right over here, so when the market moves to that direction, it would hit it. That comes down to charting, and as you would go through and look at it. Now, alternatively, when you look at a sell limit versus a buy limit, okay, so we'll go through that again. That is basically when price touches that point, it's doing a reversal. So if you were to take a sell limit, what you're looking at is as that order runs up, so the price is increasing, it stops at a certain point and reverses. So if you were taking a sell limit, you would look at the resistance level and say, okay, if it doesn't tap this resistance level, or sorry, if it taps this resistance level, I can then take a position and now it becomes a order for a sell. And the opposite true is for a buy limit. So if we go back to our example here, I would take essentially, if you're looking as an example, I would probably take a buy limit in this spot here. So if price touches here, and now we expect it to go back up, you would then have the order executed. And now you can see right now live, we're moving up. Right? So this is a 1 minute frame, I'm just talking off. And now if I was going to say, okay, I believe now price is going to sell over here, as price moves up into this direction, I take a sell limit, and then now it drops, and this order then becomes activated at that point. So that is what you're looking at in terms of a limit versus a stop, where a stop is price is going through it, a limit is price touches and then moves in the other direction. Yes, you could do the same thing with a buy stop or a sell stop. It's just, you're setting yourself up a pending order where you think it's going to reverse. So in this case here, we saw that, and I can probably do this pretty live right now for you guys just really quickly. You can see straightforward here the reason why you're taking a order at that time, as an example, is if I look in the 1 minute frame, oh, sorry, wrong in line. So I'm looking at the 1 minute frame, you could start to see somewhat there's a trend line already formed, right? So we tapped these trends and pulled up. So we tap this trend here, now we're pushing up. And if you look and you turn around and say, okay, well, where's the next trend line in this instance? More than likely now, when we get to, I would say, this point here, we're going to probably have a touch back down, because you can see, learning from today, that we hit a bunch of zones here. So this was your zone here. So I'll do this really quickly here. So we turn around and we look rather quickly, we can see that this is probably a very important zone. You can see here this was probably a very important zone earlier on. So what we're more likely going to see is we're going to see that push up, tap that zone, maybe come back down again. And you can see over here another example, in today's trading, there was a zone here and we pushed all the way back up. So it's interesting in that respect that when you start to see things take place, that's what you're looking at. Like right now, you can see here as an example, this was a zone. So we tapped that zone, came back up, it tapped it again. So if you want to go through really quickly, we tapped that zone here, we tapped it here, and we went up. We pulled all the way up, came down, came and tapped the zone here, pushed all the way up because we tapped this zone previously, came down, and now we've tapped it again, gone down, come up, tapped in the zone, and we're going back up again. So when you start to see what's happening, you're able to go right through and take a look at that. And that's sort of what you would do in a live situation if we were trading at that point. But like I said, this is minute candles, so it's a little bit more involved. But I mean, it gives you the gist if you were working on a longer time frame. And you can see already, we see that it's coming into that zone. So it's tapped it, and now it's pulled back a bit. All right. So it's as you start to look at the charts and as you start to understand what's happening, you can then work on those ideas. Now, in terms of a market order, once again, that's an order that's placed right away. So you click. A take profit point is, once again, where you want the position to move in your favor, where you want to have it close at a predefined level. And a trailing stop is basically an algorithm for a managed stop loss. So what happens is, as you open a position, as it gets into profit and you're still moving in the same spot, you can then lock in pips. So the minimum you can lock in is 15. So as you start to move up, if you went from 0 to 15 pips of profit, you can set a trailing stop, which would mean that your 15 pips, if it moves back down to 0, it automatically closes the trade. But if you move up to 16 pips in profit, now you've locked in 1 pip because you have a 15 pip trail. So what that means is if it moves back down 15 pips, it will close at that 1 pip profit because you've moved up 16 pips total. So as an example, if you went up to 30 pips, you've now locked in 15 pips of profit, because once again, if it drops down to 15 pips, it will close. So every 15 pips, it locks in a little bit more. Now you can adjust your trails from 15 pips to whatever you want, and it's a good way to manage trades as well, instead of hitting a take profit or a stop loss. Now, once again, a stop loss is pretty straightforward. It's basically when it's an order, it's an order level, so if the trade moves against you the wrong way, it automatically stops your trade, so you don't have to actually go there and manage it yourself at that point. Sorry. And this is exactly what you would be using in MT4, is you would essentially be opening the market window if you wanted to, and then you'd be placing an order at that point. So you can take a look and you're able to put in what you're doing. So here you have, as an example, you enter your order, market execution. Here's where you would say the drop down, you'd have pending orders. You can do markets, buy stop, sell stop. You can sell by the market, buy by the market, and then you'd enter in your lot size. You can enter in your stop loss and your take profit points. So all this stuff can be entered in on the order window at that time. Yeah, so okay, so the take profit in a trailing stop automatically moves to that specific point and closes after 15 pips. So that's correct. How do you set up a stop loss, or sorry, a trailing stop? You would go into the market order and then basically right click in the terminal section, and it would allow you to add a trailing stop, and you can adjust it that way. Do you put a stop loss? Do you put a stop loss in every trade? You should put a stop loss in every trade. It's basically protecting your account, and we'll go through that with risk management. And it's just, trying to make sure that you cover yourself in that point, making sure that you don't blow your account or the trade doesn't suddenly run the wrong way. Do you recommend trading without a stop loss? I do it occasionally because I'm in front of my computer, but as a new trader, I would say put a stop loss in because you're still learning. When you trade demo, try it out both ways, but definitely with a live account, definitely do that unless you're going to sit and monitor the trade. Yes, you click buy and sell with the click of a button. You would just enter your order at that point. Yeah, so market order and pending order is there, and when you click on pending, it'll give you options at the bottom to say buy limits and sell limits or buy stops and sell stops. Okay. What does standard deviation MT4 mean? It's a little more of like just the range of where we're moving. That's a little bit more of advanced. Okay, what should be the range of the stop loss? It's your risk versus reward. We will talk about that. How do you put a stop loss in all the orders when you scalp? We have programs for that. Yes, when the locks, does it give you a take profit of 15 pips? Yes, if you had a stop loss at 15 pips and it moves to 30 pips, you're able to take the 15 pip profit. But once again, if you only move 15 pips and it pulls back to zero, you lose everything at that point. So you break even on that trade. Okay, so formulating a strategy and a trading plan. So this is a topic that everybody wanted to talk about it like right at the beginning. Now you realize why we didn't talk about it at the beginning. We talk about it at the end after you understand what trading is, and now this is sort of the end game for you in terms of what you want to do. Basically, what we're going to talk about is, long time frames versus short time frames, similar to what I've talked about previously. Longer time frames are your swing trades, your easier analysis. Your shorter time frames are your more scalping, so intraday, your in and out quick pips. We're going to talk about pairs to trade, what the best pairs to trade, the best times to trade, and then your money management. So, let's go quickly through, and you're going to look at your longer versus your shorter time frame. So once again, this is our shorter time frame. Yes, all scripts and everything are in the vault. What's the difference between a swing trader or a scalper? A swing trader works off the longer time frame. So I'm going to go through that right now. Okay, so let's not jump the gun. I said I would help you, and I'm going to do that. So this is our USD JPY on the 1 minute, right? So you're at a scalping selection. If you go to the 5 minute, you're scalping again. So you can see right now in the 5 minute frame, live, we can see right away, I'll do quick analysis for you. We have, what we would consider a bottom here. And then what we can see is we have almost lower highs being made. So we're ranging right now because there's not a lot of volume in the market. So we're basically ranging. And we had an initial start over here, which is the open of the market. And then now we've had a push up. We've tapped what we consider a first resistance level, and now we started to come back down again. So what you can see here is basically, like I said, you're looking at now where the market's moving. So from a short-term scalper, you could take probably some pips off of this. So if I turn around and I erase this and I go back in and I say, okay, if I started the day off here, I would get 150 pips. So you can see here we're at 155, so you're looking at that number there, and now we're pulling down. Now, as I start to go into the higher time frames, and I look at our daily and our weekly charts, now this is where we start to get a little bit more interesting, because now what you're saying is, okay, what is my bigger range? And this is where you're looking at a swing trade. So if you turn around and say, okay, this is going to be my resistance level at this point, and this is probably going to be my support level. So now as you start to work through this trade, you start to realize now you basically have a wider range. So you see this is your range if you were to say, okay, we're going to come down to this level. And what that means is essentially if you were to take a sell here at this point, you're looking now at almost 1,000 pips. So you're working off a longer time frame, but you're not worried about all these shorter time frames. Like I'm not worried about what's happening here because there's things that are happening that will make the market move that I don't worry about because I'm just looking at my longer time frames and I'm saying, okay, if I'm taking a sell position and I'm hoping to hit this support level, That's going to be my range. Now, where am I putting my stop loss? More than likely, I'm putting my stop probably right about here, because you can see that we have a little bit of resistance there, and my take profit is here. So if I was to enter a trade right now, my stop loss would be 780 pips, and my take profit would be 1,085. So, keeping in the risk versus reward, what you're looking at is essentially a one-to-one almost. So you have a 700 pip loss to a potential 1,000 pip gain. And that's what you're looking for when you start doing trades, is you're looking for a one-to-one. So you have to expect the trade to move somewhat so that you can gain that pip and that liquidity at that point. Now, alternatively, if you were to say, okay, I don't think it's going to be a sell. I think we're going to be in a buy because, Ted, I see that this is sort of a trend that I'm watching, and this is what I'm looking at. So you would say, okay, fine, I'm putting my stop loss probably over here, because we see at this point, I'll move this out of the way for a second. We see at this point you have essentially what I would consider a little zone, right? Because you have that area where you have that one long wick here. And then what you would say is, I'm looking to take profit probably just before this zone. So if I was to look at that risk to reward ratio, I would say, okay, I'm taking a buy. I'm getting now 2,100 pips, but on the downside, I'm losing 1,200 potentially. So you're looking at a 2-to-1 risk ratio. And that's sort of in line with what you want to do. Obviously, you could shorten it up, and you could say, I want to do a 1-to-1, but more than likely, like I said, you potentially could hit this zone again before it goes back up. So you really want to manage your trade and make sure that you're looking accordingly in terms of where the zones are, so you don't get your trade stopped out too early. But I mean, at the same time too, you don't want to put your stop loss over here when you know that more than likely, if we break this little zone here, we're going back down, because we're on the highest, we're on a one day time frame. So your longer time frames do not move as fast, they're less volatile, but you have to open up your range for the amount of pips you're going to get in terms of risk versus reward. So with that being said, if you're risking 1% of your account and you're using $1,000, you're basically risking at that point $10. You have to understand that you have to choose a lot size that will allow you to either gain $10 or lose $10 in this point. So maybe you're only trading 0.01 lots, because that will allow you for 1,000 pips to stop at $10, or 1,000 pips up that will allow you to stop at $20, or sorry, $10 again. Do you have to swing trade on the daily, or could you also do it from the 4-hour? You can do it from the 4-hour, but once again, it just depends on your preference. And as a trader, you'll start to figure out what time frames you enjoy a little bit more. We have swing traders. We also have scalpers. So there's people there that have different ideas of what they want to do. So you'll be connected with those people. But once again, I'm just giving you an idea of what you're looking at in terms of how you're managing your trades. Our next topic is pairs to trade. So you basically want to trade the major pairs. And what I mean by that is you're going to essentially look at the pairs that have the highest volume, the highest liquidity, and the highest movement. So pairs such as the big six, so the majors. So any pair that's backed by the US dollar, like US dollar yen, US dollar CAD, US dollar pound, those are the pairs that you're looking to trade, okay? So like I'll go through that again. So you're looking at like Euro USD, so that's a Euro dollar versus the US dollar, the pound, the British pound versus the US dollar, the Australian dollar versus the US dollar, the New Zealand dollar versus the US dollar, US dollar versus the Japanese yen, the US dollar versus the Swiss franc, the US dollar versus the Canadian dollar, and you also have gold and silver. So, these are quoted in US dollars and they're traded regularly. So when you look at pairs like this, more than likely there will be a time frame and a time or session, whether it's the Asian session, whether it's the North American session, or it's a Euro session, where you will have an opportunity to trade that pair and there will be some movement. Once again, you don't want to trade pairs that are exotic, because of the fact that it's going to be tough to have those spreads and also find that liquidity. Um, so now talking about correlating pairs, and this is something to remember, uh, they're correlated with their price movements. So as an example, Euro USD and the pound USD tend to move in the same direction. So if you're trading one or you're trading the other, chances are their movements will be the same. Now, what that means is, in some instances, one of the pairs will move a lot faster than the others. So if you see one moving, you can potentially catch the setup on the other pair. So these are things to keep in mind. Now, once again, if you look at the volatility, the pound US dollar is more volatile than the euro US dollar. So it's something to keep in mind in that respect. We have all this stuff in the Google Drive as well. So there's more information that's written out so you can read that at your leisure too. Looking at an example at the euro, at US dollar, Swiss franc versus the euro US dollar, when you look at the way it's correlated, more likely than not, if the Swiss dollar is going up, then the euro is likely moving lower, or vice versa, right? Because the base pair has changed. So when you have USD in front of CHF, when the US dollar strengthens, the market is going up. Now, euro is in front of the US dollar. That means that the US dollar is dropping in that respect. So, if you think about it, pretty straightforward. So I'll do this really quick. So you have euro USD. So this is a pair. So this is your base. Now you have USD CHF. This is your base. Okay, so now you can see here your correlation. So USD is here, USD is over here. So in a chart, when you're trading this pair here, as the euro tends to rise, it will go up. So that means the euro is getting stronger. So euro, but if the US dollar is getting stronger, that means it's going to drop. But here in this instance, now in our second chart, when the US dollar strengthens, it goes up, because see, in this example, euro went up, now USD is going up, and now if the US dollar weakens, CHF is dropping. So what I mean, and this is important to realize, because you don't want to take a buy here because you believe euro is going up and take a buy here. They both can't go up, because here you're saying the euro is strengthening against the dollar, and here you're saying the dollar is strengthening against the Swiss franc. So now you can see sort of the issue you have. You have to sort of make a decision, and you have to be aware. If the US dollar is strengthening overall, this would then be a sell, right? Because the US dollar is strengthening, which means the euro is going down, and the US dollar is strengthening here, which means the US dollar is going up. So you have to be aware of this correlation. So, your crosses, as an example. It's the same thing with USD CAD, right? So if you say USD CAD, sorry, my writing's not great with a mouse. And then you say, CAD JPY, right? You can't say that the Canadian dollar is strengthening here and the Canadian dollar is weakening over here. So, what your chart essentially looks like is if we think the CAD is strengthening against the dollar, we know that it's dropping. Now here, if we think the CAD is strengthening against the Japanese yen, it's going up. So you're taking a buy here and a sell here. You have to be aware of these correlations because you don't want to just start ramming off positions and realize now you have to battle both sides. You want to make sure that you're on one side, and that's why I say to a lot of people, you want to stick to essentially just one pair and really get to know that one pair. It's a lot easier on that way. All right, so talking about trading strategies, so we talked a lot about price action, and we also talked a lot about trend trading. We're going to talk a little bit about trading the news, and we're going to talk a little bit about scalping. Now, once again, all these items in terms of what you're learning and what we're doing here, they're all in specific ideas. So price action is the overall strategy, okay? So price action is what you're going to use every day because you're using candles, you're using support and resistance, and you're using indicators as confluence. But really your focus is on where the market's moving. Trend trading, you're looking at the overall trend and you're using your moving averages and your exponential moving averages to understand when they cross, things that we've talked about earlier. Trading the news, you're looking to trade the news during what I would say is high volatility, big events, things like that, and there's ways to trade the news with that as well. So there are various items and various things that you want to look at when you're doing that, and it is one of those things where if you're going to trade the news, you have to be very, very cautious and you have to take certain approaches to trading the news. So I mean, we went through a lot about this. So we did price action explained. We talked about the definition of what price action is. And how to identify trending and consolidating markets. We talked about that where there's a breakout. So what I'm going to do is I'm going to show you some examples of what we're looking at in terms of the various movements, and we can go through similar items. Dave also talked about that during his session about how the market trends and ranges. So we'll go through that a little bit here, and I'll give people an example. So if we look very close, if we zoom out a bit, you can see where we had what I would consider a, somewhat of a, consolidation. We had a bit of a consolidation here in this area, and then we broke up into the trend. And then we had consolidation here, and then we dropped back down. And then we had some consolidation, we pushed back up. So normally what you're going to see is in terms of consolidation, and similar to what Dave was talking about, and this is part of price action, is you're going to see the ranges. Let me turn off this so we don't move live. You're going to see there's candles that give away that information. And what I mean by consolidation, and you'll see a lot of my Instagram posts were like that, is I would say this is a key, right? Because you can see all the candles are similar bodies, and then you have this big giant wick that goes up. If we start to go through the charts here, you'll probably see other areas of consolidation. Over here as an example, there's a bit of consolidation where we had, some candles, and then we had a push up. We had, as an example over here, we had some consolidation, and then we had to drop down. So it's important as you're a trader to recognize these areas, and these areas happen as markets are moving. And what I mean by that is you'll see these areas as the larger markets are opening up and forming, and you'll start to recognize certain times during the day that these are going to start. So when we talk about an Asian push, a US session push, it's usually when the market's open. So you'll understand that when you start to realize when the market's open. Yes, this is the daily. So you can recognize your chart by looking up over here. That's where it'll tell you your daily, or right over there, that will tell you your daily. So that's what you're looking for. So now, as you start to drop into the shorter time frames, you're going to start to see, a lot more information and a lot more consolidation as you start to go through. So, in a time zone in a 15-minute time frame, as an example here, you can see where we had consolidation. So once again, 15 minutes, we had consolidation here, and then we had a drop. And now the question comes is, Ted, how do you know which way we're going with the consolidation? So here's where your trend analysis comes in, right? So you can easily see at this point, let me actually do it this way for you guys. You can see that we hit that downward trend, right? So we can see over here as an example, we dropped all the way down, we pulled up, dropped down, pulled up, and now we're getting ready to drop down some more, right? So you can start to see the candle patterns where we start to move, and we can see as an example this, I would say a little bit of support and resistance is almost like a consolidation area. And now finally we get that additional drop where you're going to make that extra money. So when you start to look at your charts and you say, okay, well, what am I looking for? That is sort of the information that you're looking for, because as you start to go back out, you'll start to see sort of the same thing. So if I zoom out one more time, you can start to see how that all started to make sense, right? So you had, from the top, and we'll look at this rather quickly here, you can see we had our top, and here we dropped, we sort of consolidated, we dropped again, then dropped again. So you're looking for those specific times, and then that's when you start to look at, as you're back testing and as you're studying, what times are those happening? Like what time are these drops happening, and why are those drops happening? So this is what I mean when you go and study charts and you start to see anomalies, like you see this huge drop. What happened here? Why did this drop? Like we're at March 15th. What happened here to create this drop? We know that it was news related. So, what happened over here? There's potentially another news issue. So you have to start looking at your charts and scanning through them, and say, what happened here? Why did we consolidate here? And then, continue up. So these are things that you want to recognize, and if you're recognizing you're an upward trend, you know that you're going to have some pullback, but as long as you don't break this trend line and go down, you're pretty much good to go, because you can see over the longer period we hit that. Now as soon as we broke that trend line, now look, the trend is reversed. So the market is very good at giving you signs of what's happening. You have to understand, and as you start to work through the charts, that some of this information that you have in front of you is going to be experience. And you're going to say, well, how did you know that happens? It only comes with time. And as you start scalping, if we go into the shorter time frames, and we'll jump into like a 5-minute time frame, and when I zoom in, if I'm going to say, okay, I'm going to scalp this, right away for me, this is very easy. Like I'm looking right here, I'm pulling this up like right over here, because I'm starting to see where there's a lot of price movement, and I'm saying, okay, fine, I'm pretty sure I can scalp this, and I'm gonna go up, and I would probably aim for 30 pips or 40 pips, because what I'm looking at this point is I'm looking at this section here, right? Because we had this wick come in. So I'm thinking, okay, if we're following this trend, more than likely we're going to probably come to that area. Now, where am I putting my stops? I'm probably putting my stops after this, because I don't want to go too deep with scalping. I want to make sure that my scalps are quick, but my risk to reward ratio stays the same. So I'm doing a 1-to-1 essentially at that point. So it's just something that you want to look at as a trader. Now, you can also wait, and you can say, okay, if I believe that this is the trend, we might pull back a bit and then continue up. Maybe then I'm going to take a position, up over here, and I'm going to wait for this to go up and then pull down, and then I want to take the bigger move up here. So this is how you start to plan your trades, and you start to say, okay, what makes sense? Now, the reason why I'm looking at a buy is because I see this candle that's basically created what I consider a zone, and I'm starting to see now that candle push up, but I'm aware of these little magical zones here, so I'm planning my execution accordingly at that point. And you can already start to see the market's moving in my favor, but I wouldn't be looking to take the position now. I think that this is too late because we might have a little bit of pullback, and we might not be able to get to that range. But this would be my indicator based on looking at that current trend line. And this is a 5-minute chart, so once again, it's quick in and outs. It's scalping. You're not necessarily here for a long time because, once again, now if we jump over to the 15-minute chart, we can see we have the trend line still retaining that momentum, and we have upward push. So now, you can say I want to take it a little bit higher. If I move now into the 1-hour time frame, you can say, okay, it looks like we're pulling up, but how much are we going to pull up? Because now I start to see the 1 hour showing a downward trend. So this is something you have to be mindful of as you start to move to the higher time frames. You might not have that full push all the way up. My best estimate here is if we do go up, we're probably going to hit this zone over here. Why? Because we have a whole big region of a zone of this wick. So potentially we tap the zone here, and now we're going up into this area. So there might be room for movement up, but once again, you're trading according to a trading plan at that point. Nope, there's no way to change your MT4 trader times to that. You have to just basically figure out what it is in your time zone and adjust accordingly that way. Okay, so that was that. So once again, our trend trading. So if you're looking at your trends, you're looking at your EMA settings. So you're saying your 10, your 20, your 50, your 200, your max settings are probably your standard, and your RSI are standard. And then you're following your trend checklist, clearly defined trend, convergence on RSI, and what that means is we're hitting an overbought or oversold area, a convergence on MACD, which is that little middle area, and then you have a smaller candle on the 10 and the 24 is that. Yes, we talked about wicks and ranges earlier. What time zone is that? That is MetaTrader time zone. So I think it's IC markets is GMT plus -5 or +5. Let me go back in and see. Yeah, so it's like +6, I think, because we're right now like at 1 p.m. or 1 o'clock. So it's like +6 at that point. Okay, so now what I'm going to do is I'll show you guys how to add EMAs. So you're going to turn around and say, I'm going to insert indicators, and I'm going to insert a, let's see, we're going to insert a moving average. So it should be over here in trend. So here you go. So you have a 14. So what you would do is you would change that to 20, and you can make that red. Then you would go back in again, indicators, and you would go back to trend, and you would say moving average. Now you can adjust that one. You would say you want to do 10, and then what you would do is you would change the color to whatever you thought was great. Maybe we'll do this one. And now you can start to see where we start to see crossovers, and you're looking at simple things like this. Now on the smaller time frame, this is probably easier for you to understand, but that is essentially how you would do that. And I mean, once again, if you look and you view your, if you turn around and I guess cancel that, you go into your objects indicators list, you can then see, you can edit this if I want to change anything. You can delete it, and then you can edit this one if you want, or you can delete it as well. So there's lots of opportunity for you to look at that, but once again, it's really setting up your charts. You're doing that ahead of time, and you're choosing the time frames that you're wanting to work through. And that's what I meant by doing this. So if you're looking to do a trend, that's what you're looking to do. You're looking to set up these items. Once again, there's a lot of people that use these in the groups, and we have a lot of strategy documents in the member contribution section that will help you with that. And you're basically following that idea in that sense. Trading the news. So everyone wants to trade the news because it's high volatility and higher risk. I don't recommend trading the news as a new trader. I recommend staying out of the news in terms of, not getting involved with it. And where the news is located is we have two websites that we usually look at. Sorry, there was a question. Does every chart have a different number applying the moving averages, or it's the same number 20, number 10? You have 4 averages there. You can use 10, 20, 50, 100. You have to change it every single time. So you have to add a new indicator each time, the way I just did that there. All right, so once again, the 2 ways to trade the news is having a directional bias. So you're attempting to trade in a certain direction with the news on specifics. So as an example, if I was looking at Q1 retail statistics for, say, the US dollar, more likely than not, it's going to be good news because everyone just came out of Christmas, right? So people spent money in the market, so chances are there's going to be interesting news there. Having a non-directional bias, what you're looking at is you're just looking to pick up the position in any direction that it's moving. So you're not really sure where it's going to go, but as soon as it hits, you're going to try and jump on the train and see what you can grab. Like I said, I've written 2 pieces on this, and we also have places where you get the news. Here's where you would look at. So Forex Factory, so I'll pull this over for you, FX Street, and Daily FX. So when we start to take a look, this is Forex Factory, so your calendar, so you're going to look through, so it basically gives you the week. You can see that it's highlighted, and you're looking at the various items of news. So you can see right away, every day there's something going on in the news. You have yellow folders, you have orange folders, and you have red folders. Red folders give you the most volatility. So if we were to turn around and say, okay, Ted, you're going to trade on Tuesday at 8:30, once again, what we're looking at then is we're looking at this section over here, and I'm looking to see what is happening in that area. Because my trading day starts at 7, I have to be aware that there is USD news, but it's medium impact, but I want to make sure that I'm not in a position where I have any issues in terms of my news. So what I may do is I may exit my positions by 8:10, 8:15, let the news take over, then jump back in again. So you have to always check the news, and this is a site you're using. It's in the directory, you'll have all that, but you're essentially forexfactory.com. You have FX Street. You can come in here and you're looking at all the information you have over here as well. So there's information here, you have rates and charts, news, you can go through all that as well. These are things that you're looking for, and then obviously at the same time you have daily FX. So when you start to go into daily FX, you can see here once again there's all the news here. So these are sections and these are websites that you're going to use on a daily basis to go in there. You get a lot of education. You can go through and read. There's economic calendars. You can read about different things, charts. This is information that will just generally help you as well. How long does the news event normally affect the market? Usually smaller news events affect it for like a half an hour max. So if you're out of it after a half an hour, oh, that's my MT4 resetting. If you're out of it for a half hour at that point, after that you should be okay. It's really you're just watching to see that it doesn't continue. And you'll notice with the volume and volatility that that's sort of what's happening at that point, that there's news coming out. So once again, you have Forex Factory, FX Street, and Daily FX. So always check your news before you enter a trade or you're looking to take a trade. On the higher time frames, it may not matter as much, but when you're in the shorter time frames, it's very, very important that you look at what is going on and at specific times. All right, so let's talk about some of my strategies. So I'll talk about my previous strategy, and it'll help you understand sort of what we do. What is a shorter time frame? 5-minute, 15-minute, hour windows. But as a new trader, don't trade the news. That's correct. Just be aware that the news exists. So always do that. In the Google Drive, we have a document on that. Okay, so this was my trading plan earlier on last year. I was using 500 to 1 leverage. My stop losses were wider, so I wasn't necessarily using a one-to-one risk management, but what I was doing was I was essentially going through and I was, you know, hammering, oh, sorry about that. I was hammering trades where, let me just pull that away. I was hammering trades where I knew that the direction was the strongest. So I was looking at a 4-hour time frame, a 1-hour trend, and then a 15-minute frame for entry points. What I was looking was candle patterns. I was looking at news, and then I was looking at potential indicators, and then I was looking at volume. So I always made sure that I was aware of all those items that were in there. What I would be looking for is, I would sneak into trades that already had a strong trend. I wasn't looking to try and catch tops or bottoms. I was looking to catch mid-range trends. So if you have a range of 1,000 pips or something like that, what I would be looking to do is I would be looking to grab, various ranges, and I would say, okay, this range seems like I can take, a lot of information on that. And what I was doing was I was saying, okay, I can probably grab 100 pips at that point. Now, once again, this is something that when you look at and you say, okay, is this going to work for me? I don't know. You really have to understand what really makes sense for you and what is going to be best for your type of trading. Are you risk adverse? Do you like risk? These are things that you're going to have to factor in. Isn't this risky? Yes, it is. I was working full time. I had a job. I wasn't too concerned about if I lost $1,000. What I'm looking to do is I'm looking to make sure that I was able to grab trades, and I was looking to stack those trades in strong analysis points. So, as an example, if I see USD JPY and everything points to a sell, I would take a position at 134.24. If it pulls back at 134.25, I'd take another position, and if it pulls back at 134.27, I would take another position. So what I've done is I'm effectively stacked positions. So you'll see a lot of people on Instagram stacking positions. We're stacking positions because what we've seen, as an example, is we've seen in our shorter time frames, we've seen a pullback. So you see how this candle over here, as an example, is pulled back a bit? So we would start taking buy positions because we're starting to recognize that there's a trend moving up. And when we go into our higher time frames, you can already start to see a wick starting to form. So if I go and zoom in, you can see a wick starting to form, but we haven't come across this lower support area. So what we're looking at is a minor pullback to potentially push up a little bit harder. So that's where you're starting to be, and this is more experience, is you're starting to say, okay, I probably can take a few more positions that have better prices to allow me to get in there. Now, once again, the problem with that is you add to risk, so there is a risk element to that. But at the same time, you also have to make sure that you're still within your risk management profiles. So you can't take 10 positions and still maintain the same lot size if you're only risking 1%. You may have to adjust your lot size where instead of taking 1.1 lot, you may take 10.01 lots. So you're able to still risk the 0.1, but you're getting better positions each time. And then you have your 3 positions open for a sell position would be 134, 142, but I could manage it so I have 3 take profits. I have, the one that started at 141 from 241, so I make 100 pips there, I make 100 pips there, and then I make, another 100 pips there. So technically speaking, my best position, I would basically allow it to drop even further. So, when we got basically saying that 275 was my worst sell position. So if you're looking at it from this standpoint, so I'll draw a quick chart. You're saying that 275 is my best position because I'm going down, and 242 is my worst position, and we're going down to 142. Down there, you can see I gained an extra 33 pips just by that pullback, because I know that my worst position was 242 going to 142, but now I can see that I'm going to gain a little bit extra because it did just pull back up a bit to continue back down. So this comes with experience, and it's something that I learned on my own, recognizing that sometimes there's retracement, and what retracement is the market it's trying to get better prices. And then, sometimes you don't, you can let the trade run earlier, let it run later. You have to be confident in your positions. And like I said, if I see a huge drop, I know that it has legs. And what I mean by that is I know there's probably enough confidence to push down. So like I said, if you've hit a major support point or major resistance point, and you're saying, okay, I'm taking a major, a buy on a major support area, more than likely you're going to find that you're going to have a lot of push on the up potential. And what I mean by that is if we look over here and we consider, our 4-hour as an example, we've hit here as an example, right? So we would have said that this is a major resistance level. So we're looking here, this is a major resistance level, and we have a downward trend. More than likely, we're starting to push down. So I would keep holding it, and then we actually get that position, and now more than likely we're going to continue that way down. So I'm not too worried over here where we go back up, because I've taken a buy over here, so I can ride that push and goes back up, and then I'm riding that push down again. So what's happening over here, we're getting a little bit of a push up for potentially further push down. So that's what you're looking for when you start to say, okay, how confident is my overall trend at that point? Yeah, so it's basically 3 pips on a standard account. So I was just doing the longer math at that point. So yeah, it's not 33, but 3. It's just more of based on what we calculate when you're seeing it in there. Okay, so here is a sample trade progression, and this is what I'm looking at. So once again, under $500, I'm looking at 5, 10, 15-cent lots. So we're going back to this understanding that I'm opening 1 to 3 positions on a single trade at a time, using a stop loss of 250 pips and a gain of whatever 100 pips. So now this is not a one-to-one risk, but I'm once again assuming I'm not hitting my 250 pip stop loss. If you do that, that means that the trade was just really, really bad. Now, if you want to attempt this, it's fine, but many people say that it's too risky for them and it's too hard, which is fine. So maybe you do 100 pip stop loss and 100 pip take profit. So you can erase 250 and you can do 1-to-1. And as you can see, as you start to grow your account, you start to move and you start to compound, that's essentially what you're doing. So you're still doing 1 to 3 positions. Now you're opening more positions because you have more equity, and now you keep going. So this is a very aggressive plan, and this allows you to push your account hard. Now, once again, it's really up to you and dependent on how well you're going to trade and how much experience you're going to have. I don't suspect that anyone's going to jump out of the gun and start doing this right away, but it's more so, what you want to look at and how you want to attempt trading. So now here's my new strategy, which I've refined over the last few months, and sort of what I want to talk about and what will help people. Once again, all this stuff is in the Google Drive, so if you miss out on this or you're trying to feverishly write things down, I wouldn't necessarily worry about it. So what do I do every day? I'm looking for a 1 to 15% gain a day. So compounding is okay, but not necessary. So what I'm saying is if you do 1% a day and you're using the same lot, that's okay too. You don't have to increase your lot size just because your account's increasing. I don't do that. I use the same lot every day. It's what you're comfortable with. I'm focusing 1 or 2 pairs total. Most instances gold and USD JPY as their strong correlations. So similar to what was talked about earlier, they're both safe haven. So when gold goes up, Japanese yen goes down, you just basically want to take apart and pick that apart. I'm trading the New York session. So I start my day at 6:30 in the morning. I'm hunting simple setups, but using specific times in the session as well as shorter time frame candles for setups. So once again, this can be applied to the Asian and also to the London sessions, and there's a document in the drive that provides all these details. So now what I'm going to do is I'm going to show you what I'm looking for. So you can see what I've done is I've mapped this out from last week, and you guys probably would have saw it on my Instagram a little bit. But what I'm showing you, this is a 1-minute time frame for gold. And what you're going to see here is I'm showing you the specific time frames, what is happening. So the question is why New York session for those pairs? Because the gold moves the most during the Euro session and the New York session, and exactly what I'm looking for, I'm able to get with those specific pairs. So once again, as a new trader, try a variety of pairs, figure out which ones work for you. Some people like trading the Aussie currencies, some people like trading the pounds. It goes according to when you're awake, when you have time to trade. This is all in the Google Drive. You can plan your document out that way. There's specifics on how to do it and exactly what you want to do and when you want to do it. So going back to my chart, you can see here as an example, I've highlighted 7 a.m. So this is 7 a.m., 1400, 8 a.m. is 1500, 1600 is 9 a.m., and then 1700 is 10 a.m. Now, I also keep in mind that at 1630, the stock market opens, so there's a potential push, and also at 8 o'clock in this area, the currency market opens, so there was a push there. So you can start to see if you looked at the overall trend that day, as an example, and you said, okay, I want to trade the North American session, you can start to see I mapped out my support and my resistance. So here's my resistance, and here's my support in this area here. And I'm looking to see where the trend is going. So at 7 a.m., I could have rode this all the way up to my support, or sorry, my resistance, and then I could have closed. So if you look, you're at basically 1228 to effectively 1231. So you're getting about 30 pips or 300 mini pips, and you're working from 7:15 to effectively 7:45, so a half an hour, and that's what I did the other day. And when I took my buy positions here, once again, I'll go through this rather quickly for you and give you an idea of why I did that. I'm looking to see here, we had a drop, but we didn't break this area, and when you go back into the previous frames, you'll see that this area wasn't dropped, and now I'm riding it up. I'm not worried about this because we haven't come back down here. We pull back up. Here we have a pullback down, but once again, if I turn around and I say, okay, I'm going to draw my trend line, have we broken trend? That's the thing. So now here, the next question, I know what everyone's going to say is, well, if you drew a trend line over there, you've effectively broken trend as soon as you pop down here. Correct. Now what you would do is you would look at your higher time frames to see if this is just a minor pullback for the 8 o'clock hour to pull back up, or if it's not and it's a new trend forming. So that is once again where you use your judgment and you say, okay, what makes sense? Because as we go into 9 a.m., you can see we pushed here at basically 10 minutes to 9. We drop back down. 9:30 we go back up, and then we come back down again. But now coming in on the 10 o'clock hour, we've now broken this resistance level, and we're up here, and now we started to push down again. But you can see overall we've created higher lows. So we've never broken the previous section. So if you were to draw support levels, you can see each support level is rising. So if you took a trade here and you bounced it and it came all the way down, you would still be in profits, right? Because essentially, essentially what you're doing at that point is you're saying to yourself, okay, I've taken a buy at this point. It's pulled all the way up. I've made money, but I held it. It's dropped all the way down. This price over here is still better than this price over here. So you're still in profit. In all those minutes of trading, you're still in profit, and now you're pushing further back up. So these are things to keep in mind, and like I said, you're going to bounce through the different time frames and figure out which time frames work best for you at that point. And like I said, I trade the North American session, and I like this specific time, these 4 hours, because it overlaps with the Euro session. There's a lot of movement. The markets are opening and closing, so you get movement there. You're trying to look at where you get those pushes. So 8 a.m. here, you get a push. 6 and 7 o'clock in the evening Eastern time, you get the Asian push when the Asian currency market opens up. 3 a.m. you get a push for the Euro session. So once again, you just map it according to your time frames and figure out which trading plan is going to work best for you. And what you're looking for with your trading plan is essentially what pairs you want to trade, how you want to manage your risk, and what you want to do with that risk. So now when we go, and I'll show you rather quickly, if we go into our Google Drive, which we have here, and we saw everything to do with trading plans, what I'll show you here is essentially a calculator, what we've done, and we've said, okay, if you started off with $200 on January 20th, so now if we scroll down, we're on March 19th, so March 20th is basically the day that we want to trade. You can enter in, essentially your dollar figure. If you wanted to start over here and say, this is my dollar figure, it would automatically calculate for you. So you can see at a 10% rate of return per day, as you start to progress, it gets a little busy, and you get a lot more, you become very profitable very quickly. But once again, this is just a gauge, and this is something that we have in the Google Drive that you're allowed to play with. We have essentially here, if you want to build a trading plan, we talk about exactly what you want to do. Once again, these are all the information in the vault. We have the various sections, and like I said, as we go through it, you're going to find that there is a lot of information there for you. So I also do a lot of tracking with my trading journal. In my trading journal, I track the pairs that I take in terms of trades. What was my entry? Why did I enter? Was it a trend trade? Was I looking for a breakout? I make notes for myself so that I can repeat those trades, and then what I'm able to do is in Excel, like a simple spreadsheet, is I then figure out, sort of what my most profitable trades are. And, this is an older graph, but you can see like USD/JPY has been very profitable for me for 13%. Meanwhile, AUD CAD is not very profitable, or CAD CHF, or even Euro Pound isn't very profitable for me. So I'm looking to see on my trading plan which makes the most sense for me. Do you have a template for your journal that we can use? Yes, we have templates for journals in there, but I mean, once again, you figure out what makes the most sense for you. So here are some final thoughts as we go through the vault. We have this drive, and like I said, everybody will have an opportunity to get in there. It's free for everybody to use. And essentially you're going to have access to all that. All this information is in there. You're going to have examples of everything that you need to work through. I mean, once again, it's clearly stated, read me first. We have our previous webinars. We have other webinars that have happened. We have a library of 300 books. All the member contributions are in there. I provide weekly analysis on what's happening on there, so you can test your weekly analysis with mine on various information. We have a lot of programming and scripts for Trader 4. This is just fun, if we do something funny. This was my editor that I was using earlier. You have that available. A lot of things that I post in the chat, people wanted to save copies of, so I try and do that there. And then once again, we have trading plans, which basically go through and allow you to essentially work through them and figure out what you need. So like I said, there is a lot of information in this, and it's very overwhelming, but it's exclusive to the Forex family. So this is something that I built my own, and this is essentially what you're doing. Now, so there's a question here. How do we develop our trading plan? It's basically, once again, you're looking to see what times you're available to trade, what pairs you want to trade, and then essentially your risk management. How much do you want to risk per trade, and then essentially how you're going to trade those pairs. So, like I said, here's a little bit of information about the Google Drive. How do you access the Google Drive? I will give you the link. Everyone's email will be added to it, so you will have access to it after the webinar. After I finish my dinner, I'll come back and do this. So don't panic if you don't get an email from me right away. I haven't disappeared. I am actually hungry. It's almost 8 o'clock. So, new trader info, it's your one-stop shop to get started. You read the entire drive. Most of your questions will be answered there. I'm pretty sure we have a question on there. The documents are like a grade 3 level writing. I'm not very good at typing and writing things, so I make them very quick and simple with some pictures. You should be able to look at them. We have internal webinars. That's from my webinars, other people in the Forex family webinars, and some advanced webinars that we've done, and some recaps and some smaller just webinars there. There's also external webinars. Those are from inner circle trading. We have other groups that have done mentorship, so we've grabbed those. We have a library of books. I'm pretty sure there's every single Forex book you can read in that drive in PDF format. There are some ebooks, but most of them are PDF. So if you don't want to buy books, they're in there for you to read. And then, once again, member contributions. Every week, the various people in the groups, they'll post their weekly analysis. They give contributions, they add things there. We have FX simulators where you can practice trading when the markets aren't open, like on Saturday and Sunday. So there is a lot of information there. So you'll find that you'll be able to go there and really take advantage of that. But like I said, it will be there. I will send you the link. Everyone that's registered to the webinar gets access to that. All right, so what you should be doing as a new trader. So pretty straightforward. This is what I recommend to everybody. You're going to build out your trading plan, focus on 1 to 3 pairs max, figure out what works for you, follow the rules and the documents we have in the drive. Set out a realistic goal. Just get used to winning. Get that confidence of I'm making the right decision, and that's why I say work on maybe 1% a day to start. Studying the pairs during the highest volume, and if you're gonna trade a pair, trade the pair at the best opportune time. And here we go. Understand how that pair reacts to the news in the market. If you're trading USD JPY, knowing anything that, say, in the UK may affect the JPY pair because it's a safe haven. So just be aware of that as well. Ask questions. And here's the thing. And you got the first taste of that in the webinar today. But what I mean is ask questions that are going to facilitate increase in knowledge. Don't ask to be spoon-fed. And asking, should I take a buy here, should I take a sell there, is not productive to your learning. Come to us with analysis and say why you think this should be a buy or why you think this should be a sell, and explain what your rationale is behind it. because that will help you increase your knowledge and also build your learning at that point. You know, you're going to give analysis, also give it back to people, ask for judgment, ask for support, be unbiased. You know, nobody's going to insult you. Don't be afraid to speak up in the groups. It's very important. The more you put in, the more you get out. So I really think that it's beneficial, and we've had a lot of success stories from that. So this is a system that works. It's, I mean, I don't want to say it's proven, but I mean, over the last, I would say, 8 months, we've had a lot of success. So, I mean, you know, just do what you need to do. We don't expect people to participate every day. You know, there's people busy, you know, there's things going on, you need to sleep, but, you know, be active and, you know, take what you want from it out of there. You know, here's things not to worry about as a new trader. You know, how long it takes you to go from demo to Rio. Nobody cares in the group. Everybody wants people to succeed. So, you know, if you're having problems or you want to study things, you know, see what's happening. You know, we have people making, like I said, $50 a day and happy, and people are making 50,000 a day are happy. You know, both sides of these, both traders are available to help you. Like Rag said, Rag's, you know, he's a 7-figure trader. He's there to help you. He doesn't mind. You know, you're trading demo, whatever you're doing, we're available there to help you as well. When will we add the trading room? I will do that as soon as I can, and once again, all that information will be provided to you. You know, copying somebody else, not necessarily the best thing to do. Everyone progresses as, you know, according to their plan. Some people can trade very quickly and grasp concepts really quickly. Other people will take them longer. So what may work for one may not work for another. Don't worry about it. Just focus on you. You know, here's the thing, and this is the biggest thing I can tell people is, you know, time is your friend. The markets are going to be around for a very, very long time. And you'll be able to understand that, and you'll see, you know, just take your time and do what you need to do. Question is, if I want to learn about zones, wicks, and ranges, how do I find in the vault? You just search through the vault. It's all there, all the documentation. There's member contributions and there's technical analysis. It's all there. The vault is a big, big place for you to see. How do we get access to the vault? I just said that. I will send you an email and it will be there. And we'll have that. Briefly filling the wicks, we went through that and we talked about that. Will members be put in Facebook group page? No, there isn't. Will be put in the group chats. As soon as I get everything set, you will get an email that will give you all this information. Please be patient. We're not done yet. I know the questions you're going to answer. Let's focus on this. You know, don't deviate from your plan. Don't overtrade. Don't force trades, and don't try and squeeze as much profit as you want. Profit is profit. Really focus on just the process. All right. So Q&A. Don't ask me questions yet about things that are going on. We are going to go through that, okay? So ask me questions now about the webinar and the overall feeling, and I will will give you direction, and then I will give you the final steps and what we're doing next, okay? Will we be placed in groups of people already trading? Yes. You will be with new traders that are in this webinar, and I will be bringing in our seasoned traders into that group, so everybody will have an opportunity to work with each other. You will also be working with me. So if you believe you are an advanced trader, you can ask questions to me and I will give you advanced answers, like it depends, okay? So there are opportunities for you to work with people and you'll be able to work that through. If you have to leave now, thank you for coming. I appreciate that. Oh, FX Dude, yes, I appreciate that. Oh. Okay, so I will take questions. Oops. Why is it going that way? So here you go. You know, we're going to connect with me on Facebook. I'm going to give you all that stuff. This is what I'm doing. This is the information that I'm going to give you, and I'm going to have this all ready for you within the next day or so. Please do not harass me and say, how come I'm not in a group yet, or what's going on. Give me a day to relax. This is like a 10-hour day for me, So I like to just take a day off just to absorb, figure out where everybody's at, and just make my plan. Okay, so like once again, it's a process. I will get to everybody. You will all be connected. I will make sure of that. And there will be no issues. We've never had issues in the past. It's not about to start with this group. But I just need everybody to be patient. I will get you connected. I will get you the email that will be sent out to the group. You will get access to the vault. The webinar will be in there as soon as it renders and I upload it. You have previous webinars in there, so you can review those if you want. There's documents to read. There's a lot of work for you guys to do. All right. Do we have to have Facebook? Nope, just Facebook Messenger, and I will let you know that. No questions. People like my time. That's great. No one. Just for my clarity and understanding about filling the wicks, is it that when there are higher wicks and higher lows on the wicks, basically what you're looking at is you're looking at to see where the trend is. So there'll be a pull down for that wick. So we can go through that rather quickly. And we'll look here as an example in a shorter time frame. You will see, as an example, this wick here, you're looking to fill that wick. So you can see right away it's starting to fill. That's what it means by filling that wick. See how it filled? And it moved really live. This was a great example. Now we're looking to fill that other wick. So if you were to turn around and look at this rather quickly, you would say, look, up and down. So we want to make sure we come back to this range over here and fill. And that's what we're doing. But we have a zone over here that's pulling back, so more than likely we're going to pop back up that way, just because of your zones. So that's what it means by filling the range and filling the wick. There are a lot of documents on this in the Google Drive, as well as webinars talking about this, so don't be worried about that. All right. Just to understand, a good way to start learning is by reading Baby Pips, Astro FX, Naked Forex. Yes, all that information is in the Drive. You have a document there that will help you to do that. For starters, can you recommend true ACN or standard? It's really up to you and what's available that's there. Honestly, the webinar was straight up great. Okay, that's good to know. We have all the documents in the Drive. Go in there, you'll have fun. It's 4 a.m. in people's time zones. I apologize for keeping you up. Have a good night. This has been awesome. Okay, that's good to know. Regarding the market maker bits and sorts and what things we should look up if banks are against each other in terms of direction of their trades. Once again, that is in the Google Drive. It's very, very dependent on what you're looking for in terms of trading. When you build out your plan and you have that information, that's when you ask me these questions. Those questions are too generic because I can give you 1,000 answers on that. So you really got to build out your plan, and then we'll dive specifically into how a institution may affect your trading at that point. Thank you, super webinar. Thank you, thank you, thank you, thank you. Oh wow, look at that. You people actually like me. That's great to know. Thank you. Great guest speakers. Thanks, 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 thanks. Thanks. Get some rest. See you at work. Yeah, you guys are going to get ready to work. We work hard. Appreciate it. Thank you, thank you, thank you. What's the difference between ECN and standard? ECN is direct to market. Standard is more just through the actual brokerage itself. Some people want a direct link to brokerage. And once again, we have that in the Drive too. Would it be okay to trade with a real account after a month or so? Yeah, you can do that if you want to get a feel for real money. It's just basically, like I said, I don't want to know, like you really have to determine what else is going, like what else you want to attempt at that point, right? So it's just an idea of saying, okay, what do we want to do as, your risk tolerance. Like I said, if I lost $2,000, I wouldn't care. So if you only lose, like if you want to lose $100 trying real money, that's fine. It's just the idea of don't try and blow money right away when you're just trying to learn. Okay, amazing, amazing, good job. How do we access the Google Drive content? I just said I will send you an email. I just said that. See this? Look at this. Here you go. Paying attention? Whee! Look at that. All this stuff. I will send you the email for all of that. Okay, guys? I think you guys asked that question 1,000 times. I will not forget anybody, trust me. We are good. Okay, people added me on Facebook already. Perfect. Okay, nice work. People don't listen. No, that's true. I get used to it. That's why I'm a mentor. I'm expected to listen to you. Where do you get your butter chicken? It's a place in Markham. It's like where I live, so it's actually good. What's your advice on choosing the right time for an entry point? Essentially, there's different breakout sessions, and we will go through that as you start trading. Okay, thanks. Thanks for answering my questions on IG, of course. You know, I do answer everyone's questions there. It's really good. I don't mind. All this training can be applied to all pairs. It's not just gold and USD JPY. Okay. What about app and Telegram groups? I just think it's too difficult to manage. There are other groups like that, but it's just I think Facebook is easier because I can transfer you around easier that way. How come you haven't got your email yet? Yeah, see now you guys are already starting like the other groups. You're starting to bug me. How do I find you how do you find me on Facebook? Don't worry, you will find me. Um, my God, I have patience. Yes, I do. Yep, Corey, you're right. That is me. People like me. That's good. People also don't listen. Um, okay. So do you really listen to Little Dicky? Yeah, I actually really like them. He's funny. I like him. How do you change the color of the horizontal line? It's in the property section of the object, so we'll do that. Um, okay, and was I a part of CPS before? Yes, for about a month. Okay, so if that's it, I think there are no more questions. I see people are starting to drop out, which is great. Um, just to let you know, I did give 8,500 to the Toronto Daily Food Bank. I think it's important for us to give back, and I encourage everybody that makes a little bit extra. You never know people that need it, and it's important for that as well. Yep, that's correct. That is me. If you found me, that's fine. So that's where your extra sort of $150 goes over to them. We do that. All right. So thanks for attending, guys. Like I said, I'm around. I will always be around. I will send out an email to everybody as soon as I get the attendee list. So if you've registered with your email, expect one to come from that. And I will have all the information there, and you guys will be all super excited to be in the Forex family. I really appreciate your time. It is 8:15, and oh yeah, now everybody's adding me on Facebook because you all found me. Okay, well, you know what? Like I said, I'm going to dinner. After that, I will get to work, and we will go from there. So, guys, without any further ado, have a good night, enjoy, and we'll turn around and do what we need to do. Thank you.